the day as well. As of now, a flat start for the Indian markets. But let's talk about the global market action, right? A lot of that happened, and those overnight cues now will impact our Indian markets. We have a team of research here to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, let's go across to Hormaz, who's here to tell us the important cues that we're keeping an eye out on today. Good morning, Hormaz.
Good morning, Vinny. It's a muted start because you're awaiting a lot of things to transpire as well. But the bulls will definitely be disappointed. We were expected to open gap up yesterday. We did open gap up. We hit a record high, but then we could not sustain at those levels. Same is the story for the Nifty Bank as well. You're talking about that 60,000 mark. 60,000 did come. 6,100 also came. But then again, there was a cool off from those levels. The Nifty was down 150 points from the highs. The Nifty Bank was down almost 450 points from the highs. And the biggest factor as to why the markets could not sustain at those higher levels turned out to be the rupee. And it was the second such move in the last 1 week where you saw one-way move downwards for the currency. Although from those intraday lows of around 89.67, 89.70, the currency did manage to claw back some of those losses and ended at around 89.5. But that remains to be the key monitorable. Even in today's trading session, we've had experts telling us that 90 against the dollar is going to be a very important psychological level for the currency. So that remains a key monitorable. The other key monitorable is the advanced decline. Barring a couple of sessions last week, the advanced decline continues to remain adverse. Yesterday was no different. We opened with a very yawning gap in favor of the gainers, but then by the close, that yawning gap had turned in favor of the declines. Those 1,700 stocks ending lower. That broader market pain continues to persist. That needs to be watched out for. If there is a positive from yesterday's session, if you would want to call it that, both the Nifty and the Nifty Bank ended and managed to hold on to their support levels. The Nifty 26,100, 26,150, it held out on that. The Nifty Bank too held out above the 59,500 mark. That remains the very important level for the Nifty Bank to watch out for. On the upside, of course, 60,000 remains the first level, and then of course the new record high. Today's session, we react to the IIP figures and the CAD data. Of course, auto sales, the remaining ones, of course, particularly from Hero MotoCorp, that you need to watch out for. The insurance amendment bill, if it gets tabled in Parliament, that's an important thing to watch out for. Watch out for pharma stocks in particular. There are a lot of developments because of the tariff deal announced between the US and the UK, and a lot of others as well with regards to the GLP-1. So keep pharma stocks on your radar, and of course the currency, as we mentioned, if there is any further depreciation there. But for now, since there are a lot of monitorables to watch out for, the GIFT Nifty is absolutely on the flat line. It's of course the weekly expiry as well of the NSE contracts, so brace for some volatility in today's session.
Okay, bracing for some volatility in today's trading session. Thanks so much for that, Hormaz. But let's move on and talk about stocks that you should be keeping on your radar. Over to Upasna. Good morning, Upasna.
Good morning, Vinny. Well, first up, let me start with Bank of Maharashtra. The government to divest 5% stake in the company via OFS, and the floor price is set around rupees 54 per share. Next up is HUL. Board appoints Vandana Suri as the ED of Home Care India with effect from 1st of Jan 2026. Next up is KEI Industries. Company starts trial production at its Sanand facility in Gujarat, and the commercial production at the new unit is expected to start from 10th of December 2025. Next up is NMDC. On the back of its November update, the total iron ore production is up about 11% on a one-year basis, and total sales has seen a growth of about 4.3%. Hero MotoCorp is in focus on the back of November sales. Total sales up 31% on a one-year basis versus the expectation of 29%. Ambuja Cement company commissions 4 MTPA brownfield expansion of clinker unit in Chhattisgarh. Next up is Bharat Dynamics. On the back of order win, the company secures additional orders worth 2,462 crores from the Indian Army. Next up is Raymond Realty. The company announces expansion into Mumbai metropolitan region, and the company says that it has an unlocking revenue potential of over 2,000 crores. And lastly, coming to Bajaj Housing Finance, on the back of the block deal, according to sources, Bajaj Finance is likely to sell 2% equity in the company. So we'll be watching out for all these stocks in our today's trading session.
Okay, thank you so much for that, Upasna. But finally, let's go across to Sudarshan, who's here to tell us what to watch out for in the world of F&O. Good morning, Sudarshan. Nifty expiry, Hormaz said volatility, but what are we keeping an eye out in terms of levels and individual F&O stocks?
Good morning, Vinny. So it's almost zero action if you look at the entire F&O data. At the index level, you are seeing that whenever we try to hit the record highs, we do see the selling pressure. And yesterday also that we saw Nifty once it crossed previous highs, and after that it saw sharp fall. And it was same for the majority of the indices. It was same for Midcap index. It was same for Nifty Bank. So today, global cues remain subdued. Now, if you take a look at the flows, yesterday also in the index futures, we have seen just 107 crore of buying, and they have added long positions of 190 contract. They have reduced short positions around 240 contract. Their long exposure remains around 19%. And on the short side, they remain heavily shorted, and that short exposure remains around 81%. So there is almost no action as far as the FNO data is concerned. And that was the reason, if you look at the volatility index, that was also just like it saw like minor fall. Now coming to the options data, 26,300 calls seen maximum addition. There was addition of almost 1 crore shares. 26,200 call also seen a healthy addition. Addition was 76 lakh shares. On the put side, 26,150 saw maximum addition. So now the range has moved slightly higher, 26,150 to 26,400. So first support for Nifty, 26,100. Next support comes around 20-day moving average of 25,900. Resistance remains the same, 26,310. For Nifty Bank, support would be 59,000. Resistance would be 59,900, or say 60,000. That's the record high. One stock remains in the bank, that is Sammaan Capital. Some of the stocks, NMDC has been seeing fresh longs. Another stock from Autopay, Ashok Leyland, has been seeing fresh longs, and two stocks that are seeing fresh shorts are Indigo and Max Health.
Okay, thank you so much for that, Darshan. But let's move on to a CNBC TV18 exclusive. Telecom Minister Jyotiraditya Scindia has said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. When asked about Bharti Airtel, Scindia clarified that any other company seeking AGR relief must approach the top court. He also asserted that there will not be any pause to the new SIM binding rules, which makes a SIM card mandatory to access apps like WhatsApp, Telegram, among others. Listen in.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
This is with regard to the SIM binding initiative that you've just launched. And this is for all messaging apps such as WhatsApp, Telegram, Signal. All of them have to comply with the SIM binding norms within 90 days. Why has this been done? And what is the larger intention? Because the industry is saying that there should be a pause on this for some time to allow for wider consultation.
In the last fiscal alone, people across the length and breadth of our country have lost close to 22,800 crores to cyber fraud. It is my responsibility as Telecom Minister to protect my consumers. And this indeed is a step towards that. As far as consultation is concerned, we've had 5 to 6 rounds of consultation, starting in early April, into June, latest even close to November. Across the board, there has been a clarion call for this.
The next question, there are reports coming in that the Telecom Ministry has asked private mobile phone makers to preload a government-owned cybersecurity app before selling phones. Now, this is for the security of customers all around the country. Has that been done? Have the directions been issued? And what exactly is the expectation?
So all of this ties in with the security of the customers. So Sanchar Sathi portal and the Sanchar Sathi app has done a yeoman service. And let me say this on television with you, and let me thank our consumers also, because the success of this could not have been possible unless there was a Jan Bhagidari approach. And it is due to that Jan Bhagidari approach that we've been able to protect our consumers. This is a step in that very direction. If you're able to load this on, then if I lose my phone, immediately that app is on my phone, which I can then register and make sure that my phone is not used by any fraudulent individual. It's a step to protect the consumers at the end result.
Okay, interesting chat there. But on that note, we're going to slip into a very short break. Up next, we'll get you the updates from the White House in our special segment, Front Watch. Welcome back to Power Breakfast on CNBC-TV18. And in the US market update that we have, Wall Street ended Monday's trading session lower as cryptocurrencies saw a fall. Now, a Dow ended with losses of more than 400 points, while S&P 500 fell nearly 40 points. The tech-heavy Nasdaq index shed almost 90 points as well. Let's go across to CNBC's Christina Patson-Nevlos to get us a wrap on what happened on Wall Street.
U.S. markets were down across the major indices in Monday trading as falling crypto prices really put downward pressure on Wall Street. The Dow fell 427 points, the S&P 500 lost 36, and the tech-heavy Nasdaq was down about 90, which really equates to about 0.4%. Bitcoin fell more than 6% during the trading day on Monday, falling below $85,000. Last month, it actually fell below $90,000 for the first time since April and has really struggled to rebound back. Ether, Solana also fell sharply Monday, down roughly 10%. Crypto-related stocks, including Strategy, Coinbase, also falling. The slide in cryptocurrency really coincides with a broader risk-off sentiment in the markets amid concerns of just an AI bubble right now. And Eli Lilly announced Monday that it's lowering the price on single-dose vials of its blockbuster weight loss drug, Zepbound. The discounts will be available on Lilly's direct-to-consumer website, with a dose starting as low as $299 a month, down from $349. Zepbound has a list price of roughly more than $1,000 a month, so a significant barrier to many, many patients. The announcement comes weeks after President Trump breached deals with Eli Lilly and Novo Nordisk to make GLP-1 drugs more affordable. That's what's happening here in the United States. Back to you in Mumbai.
Thanks so much for that. Now, staying with the U.S. market, let's also listen in to Ruchir Sharma, the chairman of Rockefeller International, who says that we are currently experiencing a once-in-a-generation opportunity to buy quality stocks in the global markets. Hear him why he's saying this and his explanation.
As you know, that we're in the midst of big sort of AI rollout and spend, and people are searching out for new technologies. So therefore, unprofitable tech is up 70% over the last 12 months. And so I think that we have seen a lot of low quality stuff do well in this environment. And that typically happens in the late stages of a bull market often, that you get a lot of low quality stuff that does well. And quality is something which steadily outperforms over time. And it's very interesting that some of the quality stocks also include, some of the Magnificent Seven names. In fact, 5 of the 7 Magnificent Seven names make the quality cut. Despite that, quality has underperformed over the last 12 months. And if you strip out some of these very expensive quality stocks, I think that, you can end up doing quite well. So I think it's the market's obsessive focus with AI and willing to pay up for unprofitable companies in this environment that you've seen quality, the traditional quality companies do poorly. And as you know, the market's breadth has also been a bit poor compared to what it should be in a standard bull market.
Okay, now let's move on and get you the latest update related to Trump developments. And let's start with the first one. United States has confirmed a trade deal with South Korea. Commerce Secretary Lutnick says that the general tariff rate on imports for South Korea, including on autos, would drop to 15% retroactive to 1st November because South Korea has introduced legislations in the parliament to implement the country's strategic U.S. investment commitments. Now, in other important developments that have come in, UK and the U.S. have agreed a deal to keep tariffs on UK pharmaceutical shipments into America at 0. Now, under the agreement, the UK will pay more for medicine, though, and this will be through the NHS in return for a guarantee that US import taxes on pharmaceutical made in UK will remain at 0 for a period of 3 years. Moving on to some more updates, and this is actually from Russia-Ukraine peace front. The Ukrainian President Volodymyr Zelensky has described territorial issues as the most difficult aspect of negotiations. Now, meanwhile, Trump administration expressed optimism about ongoing peace talks with the White House press secretary Caroline, saying that and citing constructive discussions with Ukrainian officials in Florida. Let's listen in.
I think the administration feels very optimistic. Obviously, you've seen, Steve, that the president's entire team, including Special Envoy Witkoff and Secretary Rubio and the vice president and the president himself, Secretary Hegseth as well, have been working so hard on this effort, and they all really want to see this war come to an end.
Meanwhile, according to CNN, U.S. officials are now heading to Russia. Kushner, who's the President Trump's son-in-law, as well as Special Envoy Steve Witkoff, were and are traveling to Moscow following high-level U.S.-Ukrainian meet that they had over the weekend as well. Now, Witkoff is scheduled to meet the Russian President Vladimir Putin sometime today as a part of an effort to advance the peace process talks that are going on with Russia and Ukraine. And finally, in the last update that we have, U.S. President Donald Trump took to Truth Social and highlighting his administration's satisfaction with the recent developments in Syria. He credited the easing of strong sanctions as a key factor in Syria's progress, stating that the move was truly appreciated by Syria's leadership and people. He emphasized that the importance of Israel maintaining a strong dialogue with Syria, calling it a historic opportunity for peace in the Middle East. Now, that's all we have in today's edition of Trump Watch. We'll be back with more tomorrow. And on that note, we're actually going to slip into a very short break as well. On the other side, we'll talk about cues from the world of commodities. Stay tuned in for that. Welcome back to Power Breakfast on CNBC-TV18. Now, India's industrial output rose less than 1% in October, registering a sharp drop from 4% in the month of September. This data came in yesterday post-market hours. Now, the government has attributed the slowdown to fewer working days during the last month. This was mainly due to Diwali as well as Dussehra. Mining output fell by over 1%, while the manufacturing rose nearly 2%. Electricity generation, that dropped nearly 7%, largely because of the lower demand due to extended rainfall and cooler temperatures across the country. So that's the update that's come in on the IIP front. But let's move on and go across to Manisha, who's here to tell us what are we keeping an eye out on today in the world of commodities. Good morning, Manisha.
Morning, Vinny, and thank you for that. I'll start with the gold prices, which are trading at around 6-week highs. We've come off the kind of highs that we were trading in the markets yesterday, but with the U.S. interest rate cut in December working at an 87% probability, you will continue to see support in many of these tangible commodities. Also, given the fact that the dollar index has now slipped to a 2-week close, the U.S. manufacturing has shrunk for the 9th month, there is a lot of support that you will continue to see for precious metal prices. For the day right now, after the kind of run-up that we have seen, there is some profit taking though in gold and in silver as well, which hit 58.81 yesterday, is trading at around 56.5 right now. So a couple of dollars has been knocked off in case of silver as well in the overnight markets. What is holding firm is the crude oil prices after the Ukraine attacks over the weekend, damaging a mooring at the Caspian Pipeline Consortium, and then the rising tensions between U.S. and Venezuela seem to be supportive as well.
Okay, thank you so much for that, Manisha. We'll keep an eye out on the crude prices going forward as well. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18, with the Nifty implied open as of now indicating a very muted start with a negative bias for the Indian market. Don't go anywhere. Bazaar Morning Call is now up next for you all.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Tuesday morning. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, morning.
Hi, morning, folks. A bit of a same old story playing out, right? We get to all-time highs, then the momentum fizzles. And this morning, we're waking up to slightly red-looking global screens. Red, the color of the season, Nigel.
Well, that's right. Color of the season, but not the color that the bulls would like to see, right? But let's see how it goes. However, as you said, at higher levels, we are facing some bit of resistance, which is making you a little bit nervous. More action, I think, in the money market, the Indian rupee. I think that's going to be the key tracking point for today. But Prashant, let's kickstart with the action.
No, absolutely. And I think, U.S. markets, first fall in, I think, 6 odd days, 6 trading sessions now. The market's basically gone up. And finally today, we had a bit of a sell-off, which we saw. So S&P down about 0.5, NASDAQ down about 0.3 odd % or so. If you look for reasons why the market was down the way it was, I mean, you wouldn't find too much, except the fact that there was a steep decline as far as Bitcoin is concerned. Now, Bitcoin fell 7%. I think it broke $85,000 on the downside. And it's the largest daily fall since March. I've always said this, Bitcoin, use it as a risk tool or sentiment indicator. So it's you can trade. The highest correlation of Bitcoin is to non-profitable technology companies in the US, not the Magnificent Seven, but the non-profitable tech. So it's a very speculative asset class, and when it goes down, it kind of tells you that risk sentiment is shrinking a little bit. It's not expanding. When it's expanding, you're trying to do more and more things, and you're sort of going into more and more speculative areas of the market. So keep an eye out on this one. Now, the 10-year yield in the US was up 8 basis points. We're past 4%. Again, no real big specific driver, except the fact that maybe, Black Friday sales were strong, and perhaps at the margin they were seen as a bit of a contributor. Technology and AI deals continue. NVIDIA has bought a $2 billion stake in chip design software maker Synopsys. That's the latest. Stock was up about 1.5% last night. So that's essentially the summation of US. Later today, there's not too much data, economic or otherwise, so it's going to be quieter on that front. The Russia-Ukraine thing, right, that's the other big global story which is going on. And I saw this Bloomberg headline which said that Ukrainian President Zelensky has praised a new iteration of a peace plan, of a US brokered peace plan. So he's, of course, been sounding more and more constructive that perhaps something will get done. But you have EU, which is split right in between. I mean, if this deal goes through with Russia retaining whatever land it's already taken of Ukraine, I mean, basically it's going to split Europe right down the middle. Those who, of course, oppose Russia, those who say, well, let's move on. And those who move on include powerful countries and, of course, the biggest country, which is Germany. EU's top diplomat essentially expressed reservations about a US brokered peace deal. And she said, well, if this goes through, it's going to essentially raise the ambitions of quote-unquote warmongering by Russia. So that's the global front, but I think this is important to keep in mind, especially from an oil price perspective. Rupee's fallen, and I think one of the reasons why the market made an all-time high above 26,300 yesterday and then sold off promptly was, of course, the fact that the currency turned sour very quickly. So we hit 89.80 and we finally closed at 89.54 up on your screen. So there was a big recovery, which, of course, happened from the lows. But at 89.80, you were pretty close to that 90 levels, which some believe, of course, are now pretty inevitable. You're going to basically trade above it sooner rather than later. Now, the levels, Nifty, of course, the high yesterday is 26,326. Both Nifty and Nifty Bank in uncharted territory. So you basically just, in a way, trail those highs in reverse, not use them as stops, but basically become the target. Support is the 20-day, which is 25,910. For the Nifty Bank, we set a record at 60,114. It was a big red candle. After that, support stands at the 20-day, which is 58,700. It was very, very quiet yesterday, with, of course, some shooting stars here and there. But a mix of a combination of, a currency which was weak and general lack of enthusiasm because broader markets have not done well, and I think kept the indices well contained as well. What's the F&O stats after yesterday looking like? What's the positioning looking like? Nigel has walked across to the wall. Nigel, over to you.
Well, the Nifty seems to be in a bit of a range. But I'll tell you what, a big amount of attention today will be on the money markets because the Indian rupee, the way it's been slipping, that's making traders a little bit nervous. And besides that, today we have the Nifty weekly expiry that will play out as well. So it adds a little bit of spice to the trading session, particularly at the final 60 minutes. What happened yesterday in terms of flows? The FIs were sellers, not very, very large, but 1,200 crores or thereabouts. The DIs, they were net buyers. So net, you had an institutional buy number. The FIs on index futures, not too much movement, mild movement on the longs as well as the short side. They continue to remain net short with close to around 81% of the positioning on the short side. Yesterday, you saw calls of getting written again very, very aggressively. So the number of calls that were written in comparison to the number of puts was close to around 5 calls for every 1 puts. That's from the FIs on the index options. And that perfectly ties in with the options data that we saw, right? The PCR, remember a few trading sessions ago, had got dancing away to around a 1.5. Now it's cooled off to around 0.88. Remember, at around 0.65 to 0.7 is when we see the PCR forming some sort of a basing out. So currently at around 0.88, it's still got some distance to go. And the reason that the PCR has come down is because the call writers have been aggressive. 26,200 call, 26,300 call. Out there, close to around 1.8 crore shares have got written out there. And on the downside, the bulls are not throwing in the towel as yet. 26,150. That's the important mark, in terms of put writing. Now you punch in these levels and you'll see then the last few trading sessions, 26,300, 26,350, that seems to be a bit of a resistance mark. So the bulls will have to fight their way past this mark because that level has got rejected. On the downside, though, the 26,000 mark is very important, going by the kind of options data that we have. And deeper down there, 100 points deeper, is around the 25,900, which is the 20 DMA. So that's the important range you'll want to defend. The Nifty Bank has been leading the way, and you have, the 20 DMA, that's deep. That's close to around 700-800 points away from current levels. In terms of stocks that I'm looking at, well, the dollar index has shown some weakness, and we know that we've had a bit of a melt up on, metals. Particularly, aluminium has been showing some strength. Silver has been doing very, very well, and that's why I'll keep an eye out on Vedanta because it has a stake in Hindustan Zinc. So both these two stocks will be on your radar. Aluminium play could be Vedanta, and in terms of silver move, Hindustan Zinc is a stock that should be kept on your radar.
Okay, all right. So indeed, those metal stocks have been hitting all the headlines, and we'll keep them on the radar today as well. Asian markets, by the way, are in sync with the weak handover that we got from Wall Street. So there's a fair amount of red on the screen, a lot of caution out there. And the Bitcoin continues to be a big talking point with crypto selling off yesterday. So let's watch for this. Mainland Chinese markets, the data has been very weak. Even the PMI numbers that came out yesterday, there's some buying that is evident right now, but a lot of the larger markets are still weak. Let's look at the implied open to get a sense of where things could start for us, what the GIFT Nifty is indicating. So not too much on the downside, 14 points lower. So let's see if the bulls manage to prevail at lower levels once again. Let's move on then to the equity call of the morning, and it's coming in from Sayan Mukherjee of Nomura, who says that they are likely to end 2025 on a much sanguine note. He says the economic and technological landscape remains unsettled amidst unprecedented moves by governments, policymakers, central banks and tech companies. The new macro equilibrium and the path to it are still uncertain. For India equities, he also says that a calmer world, cyclical economic and earnings growth recovery, favorable policy moves to support growth and structural issues, and a moderation in relative valuations give them comfort. They have set a Nifty target of 29,300 for the end of 2026. Okay, so that's a Nomura view coming in, 29,300 by the end of next calendar year. Well, let's get to our first guest on the show, then Lynn Alden, founder of Lynn Alden Investment Strategies, with us. Lynn, great to have you in. And the starting point remains the same, right? What's happening with the tech trade in the US? Because every now and then we get some shakeouts in the market and the so-called circular deals. There's no end to them as well. We just had another one announced yesterday. What's your sense? Are you still buying US tech stocks?
Thanks for having me. I think we're finally getting to the point where the AI trade and the overall US tech trade is getting long in the tooth. I think that the market is starting to price in some realistic concerns with them, mainly the serious capex that they're going to have to do and kind of the valuation adjustment around that. There's also, of course, been some disruption. The market's realizing that NVIDIA might not be the only game in town. Google's chips are showing promise, of course, with some ability to sell outside of their own company. My view for a while is that Alphabet, Google, has been kind of the laggard to buy. But I view that trade as largely done now after their recent run. And so I'm actually pretty concerned around tech stocks. Not that I expect some major crash or anything like that, but I think that they are set to probably have a weaker 2026 than they have here in 2025.
Does that mean anything significant with respect to change in asset allocation? I mean, where does the money move then? Do you see it coming to some of the underperforming markets like India?
I think it's possible. I think that, so my view for most of this year was that I liked some of the other emerging markets like Latin America, for example. India has been a laggard this year. I am somewhat more optimistic about India next year going forward. Of course, I still think the structural headwinds are there. It's just mostly been a valuation concern. And of course, the markets that benefit from a weaker dollar have done pretty well this year, whereas India is less associated with the dollar as directly. So I think 2026 is probably going to be a better year for the Indian stock market. More broadly, I think that there is still value in some parts of the U.S. market outside of tech. I'm less bearish on financials in the U.S. than many others are, for example, despite slowing economic concerns. So there are pockets of interest, but the sheer market cap of the U.S. tech play is, I think, is likely to weigh down the indices next year.
Okay, all right. Hi, Lynn. Good morning. Good to see you, Ben. You're seeing some weakness on the yen, out there. And I was looking overnight, the probability of the Bank of Japan going ahead and hiking rates, that's gone up, actually. Do you think that could spook global equities because of the yen carry trade? And what are you factoring in terms of central bank action, both from the Fed as well as the Bank of Japan?
Yeah, so lately we've actually had unusual volatility around both the Fed and the Bank of Japan. So the probability of a Fed cut or pausing has been whipsawed in recent weeks. And then we've seen recently the same thing out of the Bank of Japan, which is that markets were kind of caught unaware at how hawkish the BOJ might be. We've, of course, seen sharply rising yields in Japan on the longer end of the bond curve. And as you pointed out, a weaker yen. I do think that the Bank of Japan is going to get slightly more hawkish here. The issue, of course, is that they're in fiscal dominance, meaning that they have very high public debt to GDP. They have pretty sizable structural deficits. And so interest rate hikes don't necessarily contain the yen fall as much as it would otherwise, because it actually contributes to blowing out the deficit. One of the big things that is kind of always in their back pocket is that they can sell U.S. Treasuries. They've got substantial reserves. So we could see more rounds of that in the future whenever it gets any sort of disorderly. But I do think actually right now, some of the biggest issues that's hitting broad markets, probably especially the Bitcoin and crypto markets, because they're kind of more liquidity sensitive, this kind of thing, is some of the issues for both the Fed and the Bank of Japan. Here, of course, in the U.S., we've had some repo activity issues. So we've had kind of a spike in secured financing rates. We've seen some usage of the Fed's standing repo facility. They've, of course, ended quantitative tightening, but they probably still have more liquidity provision to do to fully put out those fires. So I think the combination of that kind of tight U.S. domestic liquidity, as well as some of the hawkishness, the falling yen, the rising yields in Japan, are probably both contributing to some of the weakness we've seen in certain parts of the global market.
Okay. All right, Lynn, we'll leave it there for this morning. Thank you so much for joining in. Good to get that perspective from you today. Thank you very much.
Thank you.
By the way, guys, one more thing that's kind of, it's like rubbing salt on wounds. It's trade and tariffs, because there are statements for South Korea in favor of South Korea this morning that the auto tariffs there are going to be 15%. Rest of the tariffs will be rolled back to 15%. So Japan, it's quite startling that Japan and South Korea, which comprise a large part of U.S. Imports coming in, basically the big exporters to the U.S., they get 15% tariff, and we're still at 50%, 5-0.
I'll just say one thing though, Phyllis, right? Both for Japan and South Korea. Think about it from Japan and South Korea's angle. What's our exposure to the US? It's very small. I think
it's 2% of our GDP,
right?
US exports.
Now look at that number for Japan and South Korea.
It's huge.
It's huge.
Yeah.
So
they've had to give in.
The imperative for those countries to do a deal is also that much larger. It's not that it's not important for us, especially I think if you talk to economists, many are pointing out that the stress is not for large corporates who've all delevered, access to funding, etc. It's across SMEs, etc.
Yeah.
But I think when you look at countries, I think this is one of the factors is that they're much more exposed to the US in every way.
Yeah, no, I'm just going back to April 2. The whole premise was, large trade deficits these countries are running with the US, so we must tariff them.
Yeah.
Biggest deficits are coming in from Japan, South Korea, and they're at 15%.
I'll put it in a lighter vein, right? You're going for the Christmas dance, and you expect it to be picked first. And now we're still stag, and, couples are already made. But hopefully, we get the best date for the dance.
Still time. All right, let's go on and tell you what else we've got lined up for you on the show. Plenty coming through. So at 8:35, we'll have the recently listed MV Photovoltaic to talk about how the business is shaping up, what their outlook is for the rest of the year. We'll learn a little more about that company with the Suhas Donti. At 9 a.m., we'll have with us Elara Capital's Karan Taurani. They've come out with a very exhaustive, detailed report on platform companies, parallels, from around the world, really, how companies have shaped up in larger markets like Japan and China, and what the runway here in India is looking like. At 9:20 a.m., we'll have Edelweiss AMC's Shrudeep Bhattacharya joining in. He's a market master of the day. At 9:35, the management of Shree Cements will be with us to talk about the demand trends, pricing trends, as well as overall outlook on the business. Mr. Bangur will be with us at 9:35. After that, we bring you the conversation with the management of Wockhardt at 9:50 a.m. as the US FDA has accepted the NDA for Zynic, which is a critical drug for Wockhardt. Towards the end of the show, Lata will be speaking with Suyash Chaudhary of Bandhan AMC and Dheeraj Nim of ANZ Bank on the outlook for bonds and the rupee ahead of the RBI policy.
Well, time to slip in a short break. We go full tilt in terms of stock-specific action in our top 10 segment. For the time being, I give you a sneak peek. Hero MotoCorp, NMDC. You have Ambuja Cements, Moil, Bharat Dynamics, Afcons Infra, IRB Infra, and Vodafone Idea. All of them will be reacting to positive news flow. While you have some supplier paper that's going to resume, so Bajaj Housing Finance and Bank of Maharashtra will be in focus on the red side. Take that break, come back into further detail on all of these names.
Welcome back. Mixed trends across Asia. Some of the markets like Hong Kong and South Korea are doing fairly okay, thanks to, South Korea largely thanks to that tariff reprieve. Basically, they're moving to 15% as was discussed with the US earlier. It's just getting operationalized and it's with retrospective effect from the 1st of November. So good going for those markets. Where does it leave us? Last time we checked the implied open, the GIFT Nifty was suggesting that we'll probably start around 14, 15 points lower. Let's see where it is right now. Yeah, 9 points lower. So we'll have to see if the bulls can again come in at lower levels, buy with more conviction this time around. Let's talk about stocks as well. Plenty to track at an individual stock level basis. So we have a team standing by with the CNBC-TV18 list of top stocks to watch. Morning, guys. So let me start with you. Lots of auto numbers have been pouring in, auto sales numbers, that is. How did Hero Motor fare?
The last company to report auto sales for the month of November was Hero Motor Corp. So before I talk about the numbers, take a look at the stock performance. It's up 51% 2025, and majority of those gains came after August 15, the day PM Modi had talked about GST cut. Now talk about the numbers. It was a healthy set of numbers that company has reported. Total sales have increased by almost 32% versus our expectation of an increase of 29%. And both domestic as well as exports have seen a healthy growth, at that growth rate was in the range of 30 to 70%. Talk about the segments. Motorcycle has seen a growth of 27%, scooter has seen a growth of 93%, and Vida, that is the electric two-wheeler, for which registration was up more than 60%, and even company has seen an increase in the market share. In November, market share was 10.4%. Now it has even Hero Moto has crossed Ola Electric's market share. Now on the commentary, company is saying that the majority of the growth was led by new launches that company has made in the last few months. But YTD motorcycle sales, even for Hero Motor Corp, are down. It's down almost 2 to 3%, almost in the similar line that we have seen for Bajaj Auto. But on the basis of number sales, I'm going with green.
Okay, all right, sir. Thanks a lot for that. Well, Vivek is tracking two stocks, Bajaj Housing and Bank of Maharashtra. Morning, Vivek.
Well, good morning. That's right. So, both of these stocks are, in focus on the back of the fact that they're expecting large equity offerings in both of them. First, let's have a look at Bajaj Housing Finance. Close to 1,500 crore worth of equity is expected to change hands. The promoter, Bajaj Finance, is the likely seller in this particular block deal, whose term sheet we managed to access last evening. Now, the interesting part is, the floor price for this particular block is at 95 rupees. Almost a 10% discount to yesterday's close. Total size of the offer is 2% of the total equity, and there is a 60-day lockup on further sale of shares. The second stock on our radar is Bank of Maharashtra. Yesterday, our colleague Ruchi did report that there could be a likely stake sale in the offering as far as Bank of Maharashtra is concerned. Along those lines, last evening, Government of India, who is the promoter in this particular company, actually launched an OFS to pair their stake to meet the minimum public shareholding norms. Now, when you're talking about the OFS, it opens for non-retail investors, that is today, and for retail investors will be tomorrow. The floor price for this particular mop-up of close to 6% of the total equity is at a discount of 6% to yesterday's closing. The base offer size is 5%, the green shoe option is 1%, and the total offer size that the government would be able to mop up is slightly over 2,450 crore. Going with red on both of these names.
All right, and interesting one, Bajaj Housing. Recall, IPO comes in at around 70 rupees in September 2024. The stock goes dancing away to 170. And now you have an OFS at around 95 rupees or thereabouts. A wider term chart actually will tell you about the way the stock has come down from around 165, 170 odd to around this 100 rupees odd mark. That said, Vodafone Idea is on Rima's radar. Rima, morning.
Hi, so there are two key takeaways from Parikshit's interview with Jyotiraditya Scindia, the Union Telecom Minister, and this was the CNBC TV18 exclusive. One is the timeline for the AGR relief. The government hopes to announce the contours of the relief package for Vodafone Idea by year end. What he went on to say is that the DoT is waiting for a formal request from Vodafone Idea. The government will make a recommendation after evaluating Vodafone Idea's proposal. The Supreme Court judgment is recent. We will share the contours of the package once the government is ready. But the government may be able to complete its assessment and come out with a recommendation in a couple of weeks. And he's hoping for year end. So the timeline is very, is the new takeaway that we have gathered from the, interview. And secondly is clarity. The Supreme Court judgment is for Vodafone Idea alone and not for the other telecom companies. He says the Supreme Court judgment is for Vodafone Idea and therefore any government recommendation is for this company. We cannot cross the border of the Supreme Court judgment. Any other company which wants similar relief on AGR will have to approach the Supreme Court. Bharti Airtel as of now has not made any request for relief from AGR dues. If Bharti Airtel were to pursue a similar AGR relief, it would be up to the court to decide. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at a few stocks from the mining and material space, namely cement. Let's start off with NMDC. The November update did come in. The total iron ore production is up by close to around 11%, came in at ballpark around 5 million tons odd. The sales number, though, that's lagging a little bit. That's up only around 4% on a year-on-year basis, but going with green because, sentiment is such that metals could relatively outperform, and also with the rupee depreciating. It's actually good news for some of these stocks because importing becomes a little bit more expensive. So that's why going with a tinge of green on NMDC. Moving to Ambuja Cements, they have gone ahead more or less, par for the course or normal course of business. They have commissioned the 4 million ton brownfield expansion of the clinker unit. That's in Chhattisgarh. The total consolidated clinker capacity now has moved to around 66 million tons. And the company has already told us that the clinker capacity by the end of FY27 goes to around 81 million tons and by 28 goes to around 96 million tons. So it gives them ammunition to go ahead and produce high amount of cement. Going with green on that as well. And MOIL, the price increase that they have taken from December 1st, 2025 on ferromanganese ore, prices are up by marginally, 3% or thereabouts for both grades and above and below 44 manganese. So on the back of that, a stock that's corrected big time from the top, maybe a tinge of green on all these three names. But let's wind this down. Upasana joins in to tell us about some stocks that are on the news. Hey Upasana, take it away.
Good morning. First up, let me start with Bharat Dynamics. The company has secured additional orders from Indian Army worth 2,462 crores since 13 November 2025. These orders are mainly for anti-tank guided missile and even surface-to-air missile. Now, mind you, on 13th of November, company had also received orders worth 2,095 crore from Ministry of Defence. With this, the company's total orders received in the month of November touches 4,558 crores. So we'll be surely looking out for that one as well. Next up is Afcons Infra. The company has received EPC orders worth 884 crores in the month of November, and these are the orders mainly for civil infrastructure works under its marine and industrial business unit. And lastly, coming to IRB Infra, the board has approved sale of entire stake held by the company in its wholly owned subsidiary, that is VM7 Express Private Limited, to IRB Invent Fund for 513 crore. And company has also agreed to act as a project manager for a period of 15 years for 246 crores. So we'll be watching out for all these stocks in today's trading session.
Okay, so plenty of order wins. Perhaps they could fire up some of these stocks. We'll quickly recap our list of top names to watch this morning. Thank you for that, by the way, Upasa. So here's a list. The stocks that have positive news flow around them are Hero MotoCorp, NMDC, Ambuja Cements, MOIL, Bharat Dynamics, Afcons Infra, IRB Infra, and Vodafone Idea. Stocks with negative news flow around them would be Bajaj Housing Finance and Bank of Maharashtra. Okay, with that, let's move on. That's the equity picture for the morning. Let's figure out what's happening in commodities. Manisha is joining in with a roundup. Manisha, the crypto market's making a big headline, right? A big sell-off overnight. But what else are you looking at?
Oh, yeah. The crypto markets have actually seen $400 million exchange liquidation in the overnight markets in the last 24 hours. So clearly, a lot of decline coming in. Anywhere between 5 to 15% of a cut is what we are looking at when it comes to crypto. But take a look at the gold and silver prices. And yesterday was a very strong day. We saw all-time highs in silver. But since then, there has been a bit of a profit-taking coming in here. Well, the fundamentals still stay strong, but the markets did see a bit of a heating up. And that is what is letting off slight steam right now. But with the U.S. interest rate cut in December now at an 87 to 88% of a probability, you could be looking at support continuing in much of these commodities, especially with the fact that the dollar index also has slipped to a two-week close. The only thing that I see really trading firm is the copper prices, very close to its all-time highs that it hit in the previous week. And the other one is the crude oil prices. The Ukraine attack over the weekend, which has led to Russia's Black Sea coast port authorities holding all loading operations, one. And second is the rising tension between U.S. and Venezuela seem to be keeping crude oil prices quite in a positive territory.
Okay, all right, Manisha, thank you very much. So let's see how this impacts even the equity market with those cues coming in from the commodities side. Thanks for joining in. We'll take a break, come back on the other side. We'll have Parag Thakkar, Senior Fund Manager at Fort Capital, joining in. We'll discuss some fundamental ideas.
Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good morning. Well, let's focus first on a CNBC-TV18 exclusive. Telecom Minister Jyotiraditya Scindia has said that the government is waiting for a formal request from Vodafone Idea seeking AGR relief. When asked about Bharti Airtel, Scindia clarified that any other company seeking AGR relief must approach the top court. Let's listen in to his comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. in the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
All right, let's welcome Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi Parag, good morning. Good to see you win. Well, Vodafone Idea went to around that 11 rupees odd, but from there, we did see some kind of rejection of that level. And because they raised money at around 11 rupees, that could be a bit of a resistance. Now, there are some on the street who believe there is still hope out there. It's going to be a three-player market. They take a bit of a punt and go ahead and buy Vodafone Idea. While others say, why do hassle yourself? You are better players. You have a core player, which is Bharti Airtel. And you probably have an IPO coming out of the Reliance stable as well. So you rather play those two names. How are you positioned on Telecom? What do you like?
So first of all, let me tell you, Reliance is my top holding for sure. So that is one. Second, I expect government, because now government owns around 49% stake in Vodafone. The intent will be definitely to save Vodafone. That is my understanding. And I am playing Vodafone through Indus Tower in my portfolio. So Indus Tower is also one of my large holdings, and I am betting on that the intent will be to save Vodafone, and hence Indus Tower will be benefited. And we have all seen that Bharti has increased stake in Indus Towers at regular intervals. They have clearly said, Mr. Gopal Vittal has on record said that Indus Tower offers a deep value compared to the global peers like American Towers and all. If you see it on EV/EBITDA or market cap by cash profit basis, Indus Tower clearly offers great value. So I would say that I would play it through that. And just to be on Vodafone Idea, because of the net debt to EBITDA number, we cannot buy it in the fund. But I would like to say that definitely the intent is there to save it.
Yeah, no, absolutely. Intent is there. We'll have to see what form it takes, right? That intent takes to be able to actually do it. Now, Parag, good morning. Let's talk about what you like the most, which seems to be PSU banks and SBI within that pack, right?
Absolutely.
So tell us, what's new information which is adding to the confidence here?
See, I'll tell you the new. See, everybody knows that SBI trades at 1.1 times price to book, and PE. If you knock off the subsidiary value of 300 rupees, and remember in this 300 rupees also, SBI Life and SBI Cards are listed. But I think many people don't know that SBI owns stake in NSE also, which is worth 50,000 crores. And SBI Mutual Fund is going to get listed. SBI General Insurance is going to get listed. So that is monetizable thing immediately, I would say. So basically 300 rupees out of this 973 subsidiary value. FY27 book value is 585. So it is just trading at one time price to book, while ROA has now crossed 1%. This quarter, they showed NIM expansion led by 18% growth in current account and 25% growth in fees, YOY. This is a bank with 44 lakh crore loan book with a credit cost of below 50 bits, which is amazing. They have revised their credit growth guidance from 11 to 12% to 12 to 14% because of the government and RBI actions, which are completely pro-growth. So I would like to say that it is a pure play, leverage play on India's economy, which is going to do well. And I would say that with a credit cost of below 50 bips, where can you get this kind of bank when India's GDP is growing at, say, average around 7.5% also, if you knock off the deflator impact of that 8.2% GDP growth. And with huge amount of subsidiary value, great franchise, and absolutely savvy and very intelligent chairman, who also said that, even if there is a 25 bips rate cut, their guidance of 3% NIM at the exit of March 26 does not change. Because they have been managing it brilliantly through current account accretion, which is a low-cost deposit, and fee income growth.
Okay, Parag, stay on, and maybe you listen to this conversation if you can, because we do want to talk about renewable energy companies and from a stock perspective, what to look at. And in fact, we're speaking to one such company right now. Solar PV module and solar cell manufacturer, MV Photovoltaic Power, is the first management on the show today. The company recently made its market debut. It was a bit of a flat, quiet debut. However, the second quarter numbers look very, very strong for the company. To discuss this and more, we have with us Suhas Donti, CEO at MV Photovoltaic Power, joining in. And we want to cover, Suhas, hi, morning, great to have you. And we want to cover 3 key points. I'm just laying them out for our viewers. Of course, we want to understand your guidance. Your Q2 has been very, very strong. So what are the rest of the quarters looking like? Of course, get an idea on the order book and the ordering trends. And of course, we want to understand more about the capex and the peak revenue potential. And let me tell our viewers as well, let's pull up the numbers just to put things in context. Now, year on year for this company, the growth in Q2 has looked very strong because of a low base and they've added capacity. So obviously those numbers, look at that, from a revenue of 400 crores, it's jumped up to over 1100 crores. Likewise for EBITDA margins, 23%, 35%. So this is a year on year effect, low base. The question is now what happens from here? Suhas, can you just tell us whether these EBITDA margins now at 35%, are they sustainable? Have you added all the capacity or is it still work in progress? You said at peak capacity, when all of it comes on stream, the revenue potential in a year is 5,000 crores. When do you get to it?
Thank you, Survi. Thank you for having me on the show again. So basically, this is our first quarterly result after listing, and we're very excited to present that here today. And as you have seen, that our results are on your screen right now, and the revenues, as they have increased quarterly, but your half-yearly revenues is at 2,158 crores, and our EBITDA and PAT have surpassed what we have done for the last full year of last year, financial year. So, and more importantly, our EBITDA margins, the growth that has come from 23% last Q2 of
yes, Suhas, we're aware of Suhas, we're aware of the current numbers. I just went through them in a lot of detail. What the market is keen to know is what happens in the second half. Can you sustain at 35% EBITDA margin? And how does the revenue scale up with your new capacity?
I'll focus on that. So, you can see that the increase of EBITDA margins as well as the PAT numbers are coming with the addition of cell manufacturing expansion that MV has done to become an integrated solar manufacturer with the TOPCon capacity, right? And that is something that we have seen not only in Q2, but Q1 numbers also were strong at a 34% EBITDA. And we have seen that the performance in the last 2 quarters of the
Suhas, Suhas, we're short on time. Morning. Can you tell us what will be the growth in revenues and profits for this year and FY27 after that?
Sure. So basically, our expansion plans, as Ruby was asking, is on track, where we have 7.8 gigawatt of capacity today. So we're adding another 2.5 gigawatt of capacity that is going to get commissioned in this month. And further on, we are going to be adding 6 gigawatt of cell and module integrated that's going to come in only by the next 18 months. So with that, it is, you can imagine the growth potential.
So what is it? So it'll all show up in FY27. As you exit FY27, I'm assuming. What will that number be?
I don't think I can give you exact numbers, right? Considering.
Okay. What is the capacity by that time? After all that you mentioned, 2.5 now, 6 more. So by end of FY27, what will be capacity?
By FY27, from 7.8 gigawatt of module, what we are at today, it will be 16.3 gigawatt of module. And our cell capacity will remain from 2.94 to 2.94 by FY27. And by end of by beginning of FY28, we will be adding another 6 gigawatt of cell manufacturing capacity. That will take us to 8.9 gigawatt of cell capacity.
All right. Hi, Suhas. Good morning. Good to see you. And Suhas, we know you have selected the team. We know who's on the bench. So we have all of that with us. Now we want to know what is the delivery, right? Now you have done around 1,000 crores in the first quarter. Second quarter, you did around 1,100 crores. give us a few details. The second half of the year is better than the first half of the year normally?
Yes, that's what Treasury has spoken.
Right. So then approximately going by the current run rate, maybe you can do ballpark closer around 4,000, 4,500 crores for this fiscal year. Is that a gettable number?
I think the current run rate is something we're very confident to achieve.
Correct. So that would be ballpark around 4,400 crores or thereabouts, going that you did around 1,100 crores in the past quarter. That should be a fair estimate, right?
Should be.
All right. And margins, you're holding around this 35% odd. I think when you listed, you had told us that you'll be happy in this vicinity of around 33 to around 35%. So you'll continue to hold on to that guidance, right?
Absolutely.
And the final question with regard to the debt, you raised some money. I recall when you listed, we didn't get a clear answer with regard to the debt picture. And obviously, you have very, very ambitious plans on adding capacity. So what was the debt? Post-listing, what is the debt? And given the capex plans, where is the debt headed? That'll close the loop.
Sure. So our debt was at 1,863 crores as of September, and we've repaid 1,621 crores. So our debt is now less than 100 crores of long-term debt that we have.
Okay, and the capex, how is it getting funded? Because it's a long capex program. What's the cash on the books, and how will you fund the capex?
So if you see that our operating cash flows have been quite positive, especially with our EBITDA and PAT numbers that are seen on results, and our capex plan is 5,500 crores for our expansion until 2028, and this is going to be funded in phased manner, and we've already have internal accruals for the equity portion, and there is 60% debt that is going to be that is already secured from IRIDA for this.
Okay, all right. So as we leave it there, thank you very much. Good luck. Appreciate it very much here on CNBC TV 18. Well, technicals in focus and our guests on the other side. Okay, well, welcome back. There's what 11 minutes to go for the pre-open session. 21 points lower in the implied open. Hormuz is here with the heavy movers yesterday. And what did it look like? Hormuz, take it away.
Good morning, Prashant. And some interesting names that have sprung up today. And pipe stocks have been in some day or the other trying to make some outsized moves in trade. And Hariom Pipes was the one yesterday. This is the biggest single day gain since listing for the stock. The stock was up almost 13-14% in yesterday's session. This was the first time in the last 5 months that more than 1 crore shares were traded in a single trading session for Hariom Pipes. And Monday's volumes were the sum total of the last 58 sessions put together. You look at the volumes, almost 1.5 crore shares that were traded, 20-day average of just 1.5 lakh. And out of those 1.5 crore shares, only 9 lakh shares were marked for delivery. The 20-day average here too is just 74,000 shares. But despite this outsized move yesterday, the stock is still down 35% from its 52-week high. IEX made a move on the upside yesterday after ending at the day's low last Friday. And the volumes and the delivery activity both have seen an increased pickup in the last 4 trading sessions. This is the third time in the last 8 sessions that more than 1 crore shares have been traded. Yesterday, we saw 3.2 crore shares traded on IEX, the 20-day average of 60 lakhs, so it's almost 5x, and 92.5 lakh shares marked for delivery, the 20-day average of around 25 lakh shares. So here too, this is 4x of its 20-day average, and the stock down around 19% year to date and still around 30% lower from its 52-week high. And lastly, ZF Commercial Vehicles is a 4th straight day of gains for the stock. Volumes were the highest since November of last year, and almost 2.5 lakh shares were traded. The 20-day average here is only 23,500 shares, and only 44,000 shares out of those were marked for delivery. Here too, the 20-day average is only around 20,000 shares. The stock has done well so far this year, but was down around 25% last year. So the last 2-year returns almost comes down to zero.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's focus on Wockhardt. It zoomed in trade yesterday. There was some good news that did come in. Ekta joins us to help us out with details on what caused the stock to spurt up close to 20%. Ekta.
Well, yes, Wockhardt was in focus in yesterday's trading session on the back of the news that the US FDA has accepted Wockhardt's new drug application for its antibiotic Xenic, which is basically a new chemical entity or a drug which is under development by Wockhardt. Now, the new drug application was originally filed in September 2025. Xenic has been granted fast-track designation by the US FDA, which basically prioritizes the review for this particular drug. Now, the drug, remember, has been used both in India as well as the US on a compassionate basis on critically ill patients. The program, remember, was initiated all the way back in 2011 for Wockhardt, so it's been more than a decade in the making. Now, the company has indicated earlier that the drug will be manufactured by a third party in Europe. The peak revenues will be significant. For example, India, they're expecting market revenues of around 150 crores. And in terms of the market size globally, they've earlier indicated $9 billion in terms of possibly the antibiotic market. But analysts that we spoke to said that they expect a market size of around $1.5 billion for Xenic globally. And the other thing is that it could be around a $500 million product for Wockhardt in the US and globally, according to analysts. So it'll be interesting considering that it is a new drug application which has been accepted by the US FDA, after which they will have to undergo the review. And if they do pass muster, then yes, it would be a patented drug for Wockhardt if in case it does get approved.
Okay, all right. Thanks very much, Ekta, for that. And that's essentially what I want to put to Parag, who's waiting by. Parag, quickly, if you will, Wockhardt, do you have a view? Do you own it? Have you looked at it?
No, we have not looked at it, but we know about this drug since 2011. Wockhardt has been working hard towards it, and it is a great, proud and great achievement in my view that our Indian company has got this NCE for the first time. So, but yeah, we don't own the stock. We have Sun Pharma and granules in our portfolio, the Pharma pack.
Yeah. Parag, you know, IEX was up. There was that hearing in front of the appellate tribunal on Friday, and some startling arguments were made. Went up 6% yesterday. Any thoughts here, IEX?
So I think the stock has underperformed massively. And so there were some desperate sellers also, because stock has not done anything. And because of this decoupling thing, there is a structural question mark around the market share of the company. But I think that is in the price now.
Okay. Whirlpool is another one I wanted a quick view from. Again, it's plunged. Your thoughts?
No, I think, see, LG Electronics or Havells kind of companies are much more preferable in my view. Here is a company where company wants to repay its debt in US and they want to sell it in India. I would not like to buy this kind of a company in my portfolio. So, and we have LG Electronics as a very large exposure in our portfolio.
LG is a very large exposure. Number one consumer durable company in your portfolio?
Yeah, consumer durable number one company is LG Electronics.
Got it. Parag, we'll take a quick commercial break here. Thank you very much for those views. We'll come back with some technical trading ideas on the other side. Stay tuned. Welcome back. 3 minutes to go for the pre-open session, 17 minutes and 16 now something to go for the market open. Technical trades in focus now. Sudarshan Sukhani and Mitesh Thakkar are with us with exactly that. Gentlemen, good to have both of you here. Sudarshan, you go first. I mean, lots of yo-yo through the course of the day. There was one sell-off towards the end as well, last 40-45 minutes. Ultimately, we ended 20-25 points lower. So how to approach things here, at least on indices if there is a trade, and then we'll talk stocks.
Yeah, good morning. See, I've explained earlier that if you're looking for intraday trades in the Nifty, they won't come because the markets are in a very choppy environment. But on a day-to-day basis, the trend is up. We are at 26,175, very, very close to lifetime highs. The trade is to buy the Nifty and hold on to it and ignore intraday movements. Your stops are 26,100, but today, because We are also in weekly FNO expiry. The stops should be placed on a closing basis, not intraday. Just stay with the long trade and accept the intraday volatility.
Okay, all right, got that, Sudarshan. Mitesh, what about you? What's your view on the Nifty? We're getting rejected at around 26,300, 26,350. For starters, we could see a 30-40 point downtick. Buy the dip or wait buy?
One thing is we are getting rejected at the 26,300, which is the all-time high. So I think the dip could be slightly bigger. And I don't know that, but I think a good entry point would be either you get closing about 26,300 or you get a decline which is substantial to give you a favorable risk-reward ratio and entry. So that will be close to about 26,000 to about 25,950 zone. So for the time being, I just wait it out, not worry about the index immediately.
Okay, got that. Your trades, stock-specific trades, Mitesh?
1%, I have buying 3 sells. On the buying side, it's signed good price volume action yesterday. So buy here with a stop at 1145 for targets of 1200. LIC is on the selling side. Keep a stop about 900. Look for targets of 850. BPCL is a conditional sell if it breaks 358. 352, 351. Sell with a stop at 358 for targets of 340. And DLF is a sell with a stop at 726 for targets of 690.
Okay, and Sudarshan, what about you? Stocks for the day?
Well, it's very different from Mitesh because I have an all buy list. I continue to have that. Hindustan Zinc is a buy with a stop under 490. CESC is a buying opportunity with a stop under 170. Paytm, which again comes in my list after a few days, is a buy with a stop under 1340. And finally, Indian Bank is a buy with a stop under 870. I also have trading positions in Indian Bank.
Okay, got that. Well, I think the first of the pre-open rates will start coming in any second now. Yeah, but they're a little all over the place. We'll have to wait for things to settle. Watch for Bajaj Housing Finance. That's where Vivek was alerting us. We're expecting a block. And it could be the parent entity that could be selling a little bit of stake to just basically comply with the minimum public shareholding norms. That stock is down about 6% as the pre-open session kicks off. Overall, we need to still get the settled rates for the Nifty. Mitesh, on the auto pack, now all the auto sales numbers are through, and Sud was telling us even Hero Motors had a very decent month gone by. Any trades here, auto?
I've been liking Evelyn, it was consolidating at fresh highs, and last 4 times it's sailed to close about 37, 50, 60 zones, is right there. So maybe in a day or two, once we get a closing about this 37, 60 zone, I think another 150 points kind of a rally could happen on the upside. That apart, I think, Hero Motors is also, which is continuously shown an uptrend, which is very strong, and no signs of that getting weakened as yet. So while this may not be a good entry point because the stock has rallied from 5,300 to about 6,300, but I think the targets are close to about 6,550 to about 6,600.
Okay. All right, gentlemen, thanks very much. We will come back to you for some final trades once the pre-open session settles down at closer to 9:10. For the time being, we're putting the spotlight on the quick commerce space. A lot of platform companies, and we have so many of them that have come to the listed markets now. Elara has done an interesting note. They've done an interesting research comparing how Indian platform companies are moving towards, early to mid-cycle. And what the global precedent tells us, large companies like US giants like Amazon, or even Chinese companies for that matter, they are, of course, early movers in the platform and quick commerce space. Karan Taurani is with us, who's worked behind that note. Karan, what are your findings?
Hi, Silvi. Good morning. So 2 things to note here. One is that, India is going to see an inflection point here in terms of e-commerce penetration. What happened in China was the e-commerce penetration moved up from 11% to 30% in about 8 to 10 years time frame. Similar was the fate of US as well, wherein the penetration doubled up in about 7 to 8 years. We believe India is also poised for this kind of an inflection over the next 7 to 8 years. We will see e-commerce penetration moving from 7% to 14%. The drivers for this are obviously the demographic factors, which is logistics, payment mechanisms, and increased per capita income. But the big delta is going to come from 2 things, specifically a market like India, which is going to be different as compared to global counterparts. One is the quick commerce penetration, which is going to amplify the growth rate in the e-commerce side. And second is categories. So many of the categories, if you look at the fashion category, if you look at the categories like, general merchandise or even food for that matter, the penetration numbers are extremely low as compared to global markets. So because of these two factors, you will see India market also going to double e-commerce penetration number over the next 7 to 8 years.
Karan, hi, morning. You also say that the global precedent shows that internet companies reach profitability only after about 15 years. You're giving examples of Amazon, Alibaba, DoorDash, etc. So what are the implications of that here in India for stocks under your coverage?
So if you look at any of the companies, we've kind of put these companies into various life cycles. The overall time frame is about 30 years. Most of the internet companies in India, which are B2C led, are at mid of this cycle, which is 18 to 20 years kind of time frame. And if you look at growth rates for most of these companies, it was in the range of 40 to 50% until about 5 to 7 years back, which is now converged more towards 20-25% for a mature e-commerce company, or rather for a food tech as a segment. But QC is a new business model, so that is just going to scale up now, and that will see continued growth rate over the next 4 to 5 years as well. But the point we're trying to make here is that after 18 to 20 years of operations, you see a big shift in terms of profitability. Okay, and I think we saw that in the case of food tech as well. I think most of the food tech companies are now operating at healthy EBITDA margins, and growth rates have kind of converged over there. QC, I think it's a long haul, but I think food tech is kind of on the maturity stage right now. But a lot of it will depend in terms of how the market dynamics also pan out. So if you look at the Chinese and the American markets therein, Amazon is a leader with more than 50% market share. In the China market, you have JD.com and Alibaba dominating the space there. India market is slightly fragmented. So now we're seeing e-commerce players coming into QCom. So another 3 to 5 years of consolidation may happen. Post that, you'll see a big focus in terms of profit in the QCom as well, just as we saw in the food tech segment.
Just a quick word, Karan. So that's a critical difference, isn't it? QCom, like what exists here, does not exist anywhere else in the world. I mean, maybe China, specific markets, etc. But some of the larger companies. So is that a critical difference? So can we extrapolate this at the stage at which profitability kicks in? What happened outside of India to India? Because QC is the big driver here.
Yes, absolutely. So I think the way e-commerce or food tech took 15 years to get to profitability, QC may not see that much amount of time, because e-commerce is already a category which is being created. You need to create the category. You don't have to actually get new customers for QC. It is just use the existing e-com customers and give them this as a value-add service. So QC will actually take a lesser time to attain profitability. And we've seen that in the metro markets as well. A lot of commentaries indicating that mature stores are at about 3 to 4% EBITDA as a percentage of GOV. So there is steady traction here, and QC could see better profitability versus e-com and food tech from a time perspective.
So that's good to know, Karan. However, the dilemma for shareholders and investors here is you don't have pure play. I can't buy only quick commerce right now, or not buy food delivery, or only buy the out-of-home business. The listed companies are rolling all of this and more into one listed umbrella, right? So from an investor perspective, and we've seen the market reaction, and they're going on investing in some of these newer businesses, and every time they announce more capex and there's a burn and, the profitability comes under pressure, the stocks fall. So from a listed stock perspective, what should be done? And how much of it is already, this growth that you're talking about, how much is already currently discounted? And how should investors play the listed companies?
So exactly for that, we've derived two ways to value these internet companies, because there's always a dilemma whether one should value this on profitability, free cash flow, or one should value this on growth. So the ideal way is that for the first 15 years or say 18 years of operation, one should look at growth over here, because profitability will not come. That's quite obvious, because given the kind of market dynamics we are in, it's highly competitive. You see price war, you see new players coming in. After 18 to 20th year, once you see the category being penetrated, once you see acceptance of this by the consumers, the shift happens towards profitability. So we've done two valuation methods here. One is in terms of EV sales. We've actually benchmarked this to Amazon US. And usually when you benchmark EV sales multiple, you don't assign the time frame here. So we've actually benchmarked EV sales multiple to exact time frame in terms of where Amazon was around 18 to 20th year of operation. Growth rates were about 20 to 23% for them at that time. Their EV sales multiple was around 2.5 times. And assuming today's returns growth rates in the next 3 to 4 years, CAGR basis about 45 times for the console business, 45% rather, you could see a 4.5 to 5 times EV/sales multiples. That's the first valuation methodology that we have seen here. Second is we also done a DCF here for a long-term perspective that let's say how much can this category penetrate? What is the kind of profitability numbers this business can throw? From the food side, it's very clear that in terms of penetration, we are extremely low as compared to global counterparts.
Right.
Our food penetration is only 1.4% of population. Globally, it's about 5.5%. It was 0.7% until about 5 to 6 years back. So basis that, you will see a convergence in the food growth rates from about 18-20% today to 14% 5 years hence. And then by FY35, it will move to about 8 to 10%, which is like a legacy business similar to what QSR companies are going today largely.
Sure.
Then coming to the QC side, we've again taken the cash flow here. We've taken the penetration numbers here. For QC, we do expect profitability to come in the next 5 to 7 years, but QC will have a higher penetration number because of a larger use case, a larger AOV, and a larger TAM as compared to food tech.
You know, the last point that you said, so you say companies here already traded some 70% EV sales premium to global companies. So the question, if I flip it, is what can cause a derating?
So I think growth is a big variable here. So I think it's not only just profitability. Obviously, part of profitability is very important to drive valuations from here on. But growth is also an important metric. Let's say if the eternal growth rates converges from maybe 45% consolidated basis today to 30%, you could see valuation derating basis that as well. So apart from profitability, growth is also important that you do have 25-30% growth rate, not from existing businesses, but you also drive into new markets, new businesses to drive better growth, to support your premium valuations.
And QC maturity, quick commerce part of the business, that'll take 5 to 7 years to mature, right? So that much volatility investors need to be prepared for. All right.
Absolutely.
Okay. All right, Karan, very helpful and very exhaustive report. Thanks so much for running us through some of the highlights over there. That's Elara on food tech, quick commerce, and more, all the platform companies. Let's get back to the screen and get to our trading experts. Sudarshan, what's your 910 call?
It's Hindustan Zinc, Hind Zinc, buy with a stop under 490.
Okay, Hindustan Zinc. And Mitesh, what about you?
A sell on LIC for downside targets in the range of about 850.
Okay, sell on LIC. Got that. By the way, the pre-open is also settled. So let's just quickly glance through what we have on the screen. About 0.3% lower. That's what the Nifty is indicating. Watch out for some of the financials. In the pre-open at least, ICICI Bank, HDFC Life, Bajaj Finance, HDFC Bank, SBI Life, Jio Financial, all of financials have been slightly weak in the pre-open. We'll see how it plays out. We have Vivek now joining in. NSE has released final guidelines to align with SEBI's weight concentration requirement. What does it mean for the indices? Vivek, tell us.
Well, that's right. A while ago, SEBI had gone ahead and asked NSE as well as to look at both the Nifty as well as Bank Nifty. Right now, we are focusing on the Bank Nifty. They had asked NSE to reduce the concentration of individual constituent weights in indices of companies or stocks that actually had futures contracts trading. So under the revised method, the top 3 constituent weights, as far as the Bank Nifty is concerned, will be capped at 19%, 14% and 10% respectively. Now, this particular weight adjustment circular that has come up yesterday will be implemented in 4 tranches starting from December of 2025 itself. Now, what will actually happen is that the number of constituents in the Bank Nifty will go to 14 from the current 12. So the 2 stocks or the 2 banks that will enter the Bank Nifty are likely Yes Bank as well as Union Bank. Analyst estimates close to $110 and $80 million worth of inflows that will come into these particular names. And when, on the other hand, HDFC Bank and ICICI Bank will actually see weight reduction to go ahead and comply with this requirement. A little over $330 million worth of selling would be seen in both of these names, but likely spread over 4 tranches. So the headline is that, number of constituents on the Bank Nifty will increase, and there will be weight capping as far as individual constituents are concerned.
By the way, that block deal that Vivek was alerting us on, I think that's also happened on Bajaj Housing Finance. Stocks down about 7%.
Absolutely. And, we'll keep an eye out on some of this as markets open. I think we also want to just touch upon GMR Airports. Lots of upgrades coming through for this one. I think Bank of America has put out a note. Vivek, back to you. Okay, I think Vivek is stepped off. We'll get him back in just a bit. But GMR Airports at 107 plus or so at this point in time. I think Vivek is back. Vivek, take it away. GMR Airports, BOFA, right?
Well, that's right. So BofA Securities has gone ahead and initiated coverage on GMR Airports. What they're saying is that, number one, you're actually looking at a company that in this particular year itself will go ahead and become bottom line profitable. Quite a lot of important triggers that BofA has gone ahead and highlighted. Number one is the fact that the tariff revision that has come about is something that is quite positive. Along with that, they're also saying that the calculation of the HRAB, which is the regulated asset base of the company, which BofA is hopeful will come in favor of the company. The hearing is going on in the Supreme Court currently. They believe that is a key trigger, and on the back of that, they maintain a positive stance. They believe that it's a key beneficiary of both aero as well as non-aero growth spends that are coming about. They do see quite a few risks as well, especially as far as the Supreme Court verdict on the HRAB calculation methodology is concerned. But overall, a positive note, which is why they've gone ahead and initiated coverage today on GMR Airports.
Okay, all right. Well, we've got Vivek. Thanks very much for that. First rates starting to sort of come up in a couple of seconds from now. We'll look at GMR Airports, but of course, a lot of the other stocks that we highlighted for you as well. Bajaj Housing, we'll look at that one as markets open. Wockhardt was a big mover yesterday, and Ekta was telling us about that. So that will come up on your screen. Moil, Bharat Dynamics, Afcons, etc. are all on your screen, and bunch more. A third lower is where the GIFT Nifty is opened. So pairing those losses, 0.18 down now, 26,130. The Nifty Bank is down 0.3%, 59,470, 480. But it's down, it's lower at the start, that is. The Sensex is down about a quarter. Midcap index is barely up, unchanged actually. And I think the small cap index will also give you a sense of where we are starting. So are we headed towards another quiet day? We'll see. The Nifty heat map gives you a quick sense of where things are landing at the word go. So banks are under pressure. HDFC, ICICI, Bajaj Finserv on one end. Asian Paints, SBI and Bharti are opening in the green. So it's almost evenly split between what's up and down on the Nifty. 60 points lower to begin this trading session. So let's talk about stocks.
Yeah, absolutely. And I think what Vivek just was talking about, maybe that's what's playing out on HDFC Bank and ICICI Bank straight away. This whole calculation, new regulatory requirements need the weightages of huge big boy stocks to be reduced if that index has a futures contract on it, which is the case of the Bank Nifty. So because of what Vivek just explained, there will be a weight reduction in the Bank Nifty on HDFC Bank and ICICI Bank in favor of stocks like Union Bank and Yes Bank. So I think that adjustment has started playing out. Both those stocks are down between 1 to 1.5%. Should also pull up HDFC Bank, biggest loser on the Nifty right now. What else? Tata Motors is slightly lower, 0.5% down. There is Adani Ports, which is lower. Bajaj Finserv, Jio Financial, also on the lower side. Eternal is slightly lower. That's the losers list. Now let's talk about the gainers. Asian Paints, top winner on the Nifty this morning, about 0.6% higher. There's some buying in Bharti Airtel. Max Healthcare and Maruti Suzuki managing to put on a little bit of weight as well. IT is actually trying to fight back. So there's some green on Infosys, on Wipro I can spot early in the morning. But it's very, very mixed right now. Thanks to the big banks, the bias is definitely negative, and the Bank Nifty itself is down 0.4%. Nigel?
This particular announcement, though, it's expected. Yeah. And, that's where the street will align to it. So I don't think it's any kind of big negative or any kind of big rejig. And it'll happen over a period of time. That said, let's focus on a few stocks in the broader markets. MB Photovoltaic, well, that stock is up, close to around 5.5%. We just had the management with us. They're expecting to go with the current run rate, margins at around 33 to 35%. And the debt numbers come down to sub 100 crores, but they have a big capex plan going ahead. Stock is one of the big gainers, up close to around 5.5%. MB Photovoltaic, let's get that one up for you on the screen. Vodafone Idea, well, the street is taking the comments that came in from Mr. Scindia, taking note of it for sure. Stock is up close to around 3% as we speak. On the flip side, the large trade, a fresh supply with regard to Bajaj Housing, that's definitely plaguing the stock. Stock is down close to around 9%. JM Financial as well had a very, very good run, but that's coming for some profit taking. Stock is down close to around 20% from the recent peak. And some kind of mild profit taking on stocks that did well towards the final hour of trade yesterday. Physicswala as well as Lenskart, both of them have come in for some very, very mild profit taking in today's trading session. What else? One of the unusual winners is Forgings. Stock is up close to around 9%, more than 1 lakh shares that are traded. So that's higher than what we normally see. Volume's not very, very large. One of the big underperformers that spiked up in trade. TrueAlt Bio as well, another newly listed company that saw a sharp correction from the peak. Well, that as well is seeing a bit of a bounce up, though out there, the only around 60,000 shares have got traded, higher than normal, but still not very, very high volumes. On the losing end, Thyrocare is down close to 5%, close to 1.2 lakh shares getting traded out there. And Hariom Pipes that bursted up yesterday, today it's come in for some profit taking. It's down close to around 3% or thereabouts. So net, as we did that market check, the Nifty has recovered from the day's low. The Midcap index has moved to the high point of the day. And the Nifty Bank is cutting its losses as well.
Okay, I think, it's looking better than where we started the morning. About 0.14% lower. The Nifty Bank is down about 0.3% as well. Lots of individual movers we want to address in just a bit from now. And we'll do that. Trideep Bhattacharya is now with us, so let's go across to him as well. CIO Equities, Edelweiss AMC. Trideep, good to have you with us here. Thanks for joining us. Is the slightly unhinged move on the currency a bit of a factor for equity markets? Is it a bit of a dampening factor for equities? Additional dampening factor. How do you think about that, Trideep?
So one positive, one negative from market standpoint right now. I think I'll start with the positive first. I think after close to year and a half, the last result season saw earnings upgrades come through, which I think was a welcome and much needed data point for that to happen. A lot of effort from the government as well as from the macro conditions. And that's the reason the market over the last month or so has seen some buoyancy. But on the other side, there is a bit of lingering nervousness around the India-US deal when that comes through, the shape and form of it. And in some way, there is a dawning sort of thought process as to, if it gets further delayed, what might happen. And I think a combination of these two is keeping markets, I would say, in balance. But I would still say the major point that we actually closely track on the earnings side is finally looking up than down, which we have seen over the last 12 to 15 months.
Hi, Trideep. Good to have you with us today. We were just having a conversation with Elara. We were having a very detailed discussion on how these platform companies need to be valued, the consumption plays. Because that's the new era of consumption, right? We've moved beyond staples, really. How are you looking at them? And there are so many. There's food delivery, consumer tech, etc. House help companies, all kinds of platform companies now in the listed universe. How do you find valuations and what's your view?
In general, expensive. And hence our approach is selective. So two important parts to the framework that we look to evaluate. One is, if not making money right now, how far they are from being profitable, and is there a path to profitability in the thinking of the management in the way they are going about it. Secondly, given that these platform companies are kind of online, the onset of competition could be fairly sudden and fairly kind of variable over multiple months. So because the moat sometimes can very easily be a certain kind of, one is distribution, but about the discounts and things like that. So while about 6 months ago, we find that the competition was going down because one of the unlisted players did not get funding or was not able to manage funding, that has actually come back, which means incrementally higher competition from where we are. From where we were about 6 months ago. So we watch path to profitability, the competition dynamics in there, and ultimately the unit economics over a period of time. Those three guiding principles. But directionally, we have been a little more careful of late, given that competition has been increasing. And what that means is path to profitability is probably a little more further out than what...
Trideep, can I just, I started with the rupee with you, and look at what's happening to the currency once again. It's going fast. Some of these things are quite amazing because just think about it. Just, 28th of last month it was, right? We were at 80, we were at about 88.50, 88.60. That Friday, I think it was the 20th of November, we blew past those levels very, very fast. 88.80 was that stop. We blew past that, got to about 89.20. And in 5 days flat from 89.20, which was seen to be at that point the new line in the sand, we've gone to now 89.83. I think we got to 89.85 now. And it's come up a little bit from that level. Just a couple of seconds back, I think 89.85 is the new all-time low on the rupee against the USD. So, yeah, I mean, I think the fundamental factors are all there, very clear. But I think what's exasperating the move perhaps at the margin is, of course, that the RBI is absent and not sort of providing a little bit of smoothing of this volatility that we're seeing, the smoothing intervention, if I can call it that, if I can use that word. Anindya Banerjee is with us of Kotak Securities with a quick live take on what he's seeing on his screen. Anindya, of course, has tracked and traded currencies for a long time. Anindya, good to have you with us here. Just a quick word on what you're seeing.
Very good morning, and thank you for having me. Actually, as the USD inches towards the 90 mark, which is psychologically very important. I think what is happening, the market is waiting for a heavy intervention from the RBI. Yesterday, we had seen a bit of intervention, but today, as of now, we have not yet seen major intervention. If now the USD basically moves above the 90 mark, what can happen is a lot of these option strikes could get triggered, be it in the offshore or on the onshore, and that can accentuate the move.
Yeah, and Anindya, morning. I mean, what's also really telling is that this move on the currency in the last 2-3 days, it's not happened like there's a major spike on the dollar globally. We've not even had like a huge basket of FPI outflows in the last 2-3 sessions, very normal. So despite, these factors, nothing major on the dollar, not a major, FPI selling spree in the last 2 days, we've come to these levels. So what's the sense? I mean, is the market reading or sensing that the RBI has made maybe its peace with the 90 level? Because the Reserve Bank has always said they're not here to defend any specific level. They're only here to ensure the market behaves in an orderly fashion.
Right. Actually, what has happened over the past couple of days is there has been a large NDF expiry. Either those positions are rolled over, means short positions, or they have to be covered. So because of that, we have seen an upward pressure. As you rightly said, the RBI is intervening, but not that aggressively. And what it generally creates is an environment where speculators enter the market to make some quick gains. And then they start to buy dollars, especially in the offshore, and that pushes the prices higher. Then it triggers the stop losses, the importers join, and it creates a kind of a trend. So that's why we are watching the 90 mark very importantly, because if that breaks, stop losses can get hit further, and it can accentuate towards the level of 91.
It was looking... Yeah, it was looking a little 89.85 we got to, which is a new low, and it's been pushed back by about 10 paise as we speak. I mean, I think that we should put the live rate up as well. 89.76, so 75. So quick. We don't know, and we'll. This 10 paise move, Anindya. I mean, hard to tell immediately, right? What's causing it, but
generally, what we have seen from the RBI intervention in the past, when they intervene aggressively, it doesn't fall 10 paisa. It falls heavily.
Yeah, heavily. Okay.
Sometimes the RBI also tests waters by selling little.
Little bit.
That 90 marks we have to watch.
Okay,
Anindya,
Jayesh,
when do you expect?
Just let's get him. Jayesh Mehta as well. He's Vice Chairman and CEO of DSP Finance. Jayesh bhai, good to have you with us here. Good morning. Your perspective on what we are seeing here now, and how would you read it, and way ahead?
So I think, while all the macros have been good, last couple of months has been solid import, both gold and from China. So that has been a great import. And more importantly, whatever the macros are, like if we have daily selling of FPI, right, that cannot be sustained unless the RBI comes and sells. And that's what RBI has been doing since last 2 years, right? But I think the pace in last few days or 10 days or so, they have been leaving some gap and let it go, right? So maybe we don't know whether it is deliberate, whether it is because as the trade thing with US, which is still lingering on, it's not moved yet. And also, it also helps a little bit depreciation with China and stuff like that. But more importantly, I think it is the FPI continuous selling without RBI support. When I think there's some NDF which matured, I think that also they didn't roll over. So it doesn't look like anything happening for the heck of happening, but I think it may be letting it go. Because if they want to intervene, they can really intervene in multiple ways. So they are not really bothered doing that at this juncture.
Hi, good morning, gentlemen. Mr. Mehta, I wanted to ask you, what's your view then with regard to the RBI action? You know, the real GDP growth was a little bit better than expected. Nominal is still lagging. And you have this rupee weakness as well. What's the action you're expecting from the RBI in the upcoming meet? We were factoring in a rate cut. Do you think that gets pushed back a little bit, or do you think they go the course and they cut rates?
No, there are a lot of economists, a lot of traders have been saying that it needs to be pushed back and stuff like that. But I think they need to do it because, you know, the inflation being so low, at the end of the day, the mandate for them is to manage inflation, right? You know, when it is above the 6% mark, people do bother about it. And when it is below 2% mark, they need to be bothered about it. So they will have to do this rate cut and most probably very high chances of it unless they may have something else in mind. But more than rate cut, what will really help the market and the bond yields particularly is the OMO purchase. They need to do at least 2 lakh crore till March. And that money infusion is definitely required because of intervention done in the FX.
Sure. Anindya, just to come back to the current technical factors at play, I was looking at the numbers as well. I mean, FPI selling in November actually was very sanguine, just about $400 million of selling. Yesterday, we had about $300 million of selling coming through. Your point on the NDF rollover, at what point do you think the shorts will want to maybe cover or at least book profit? I mean, are there any levels in mind? At what point the shorts decide to have a bit of a rethink?
We have seen when it changes the handle. So let's say from 7 to 8 or 8 to 9, those macroeconomic wise, it has no bearing. But it tends to have a big impact for traders who have positions because there the stop losses are above 90. Somebody may have at 90, 10, 90, 20. And a lot of traders watch for a close. If you get a close above 90, you get a confirmation, and then the speculators join in, and then it becomes a self-fulfilling prophecy.
Yeah, no, that's on the weak side. Anindya, I was talking about the reverse. I mean, like, if the RBI steps in a heavy way, then obviously the rupee shorts need to start covering. So when does the reverse start? At 90, all the speculators are in the market, and then it just becomes a self-fulfilling prophecy. What about the other end of the trade?
Exactly. So if you see a month back, RBI had intervened very aggressively once, and we had seen a sharp drop, almost like 1 to 1 rupee 20 paisa on just 2 trading sessions. But the point is, yes, below 89, 88, 80, we could see a lot of the stops getting hit. But that could be just a flash in the pan because if the selling stops from the RBI, the stops are hit, then from the next day onwards, again, you will see an uptrend. It will not change things structurally, but it will give you a temporary relief. So below 88, 80, a lot of the stops are there of the people who are long on the dollar and short on the rupee.
It was exactly the opposite, right? People were thinking, this is on the 28th when people were comfortably short dollar thinking, this trade deal perhaps is around the corner and you'll easily make some money. But that did not happen. That did not come to pass. And I think that soured a little bit of sentiment on that day when, of course, there was no intervention. There was no supply from the RBI as well. But Jayeshbhai, just to wrap up this conversation, we've got a current account deficit, right? Most, I think, other Asian emerging markets are running a bit of a surplus. Not as a comparison, but just it's all relative. Capital flows, look at FDI, look at FPIs, which Anindya also referred to. That has also slowed down quite a bit. So, I mean, the currency is adjusting to the new fundamentals, right? It'll happen in an orderly way or a disruptive way, I guess that is the question. So, beyond a point to fight the currency's adjustment to, these realities, perhaps is futile. And that's the view that the RBI is taking, Jayeshbhai?
I think so. So it's like, there was this trade thing getting through, and there was a lot of rupee long dollar short position in the market. And, at some point of time, you cannot continuously keep on spending our reserves, right? And the selling was non-stop. And of course, we did have last 2 months, we had good imports, both gold and from China. So I think that also did impact a little bit more. And I think if post the trade thing, if the sentiments does not change, if FPI continues selling, I think people will, I think some of them have already stopped their rupee long. People will actually go to other way around, which is dollar long positioning can happen if the things continue to be selling off in equities.
Yeah. Absolutely. We'll continue and pick up on some of this a little later in the day. Thank you very much, Jayeshbhai, for joining us. Anandya, it's always great to have you with us on the program. So another new low, 89.85 is the new low for the rupee against the dollar. And of course now it's been pushed back a little bit by about 10 paisa or so. Let's come back to equities. And I think, big cement in focus. Nigel.
Well, that's right. Shree Cement, that's the next management on the show. Reports suggest that cement industry has been facing some headwinds, both on pricing as well as demand. To understand the trends, what's the way ahead? We're joined by one and only Mr. H.M. Bangur, the chairman of Shree Cement. Hi, Mr. Bangur. Always a pleasure, sir, to have you on the show. Well, just highlighting the three broad points that we're going to be looking at in this interview. The cement industry trends. What's the outlook for Mr. Bangur for FY26 and FY27? And what about his capacity addition plans? Well, Mr. Bangur, let's get to the first point. Throw some light on the current demand scenario, given that Bihar elections are over, along with the exit of the monsoon. The first half of the year on volumes has been flat for you. Where do you end this year? 36, 37 million tons that you had spoken about earlier. Do you think you get to that mark?
Yes, we still maintain 36 million ton plus, and we maintain that mark. Earlier, we were always talking about price versus volume. Now we have to talk, and we have crossed that barrier. In last 10 days, after Bihar elections, all the festivities of Chhath Puja and everything over, from last 5 days, we are seeing a good jump in demand. We are also getting it. And now we will be talking of both price and volume, not one at the cost of other. Whatever pain had to be taken in volumes had been taken. And we still maintain the yearly projection as 36 million ton plus. That is the first question. The second was about the capacity addition. We had indicated that by 29, 80 million ton will be our capacity. We still maintain the same. And by this year end, it will be around 68, 69 million ton.
All right. 80 million tons, sir, by when?
29.
By 29. I think some on the street were expecting it to be 2028, but 28, 29, I think that's the guidance you're giving us.
That was pushing us too hard. We never said 28. We always maintained 29. The street may be thinking anything.
You know, Mr. Bangur, over the years, you've been such a good performer. Some expect Mr. Bangur to always outperform. Maybe that's where the pressure comes from.
That's why it will.
What about, so all of this will be organic, or will there be some inorganic? I've heard of late that, the team of Shree Cement has been visiting some plants. You could correct me on that. Some of those plants are in the market. I don't know whether you're looking. Are you looking at Deccan Cement?
No, we are not looking at anything. All the growth will be organic only.
All right. So you're just, looking at some of these units in terms of to get some data points, etc. But you're not an aggressive buyer inorganically. No. Is that correct?
We are not buyer. We are not trying to get to data point. Sometime, if there is a very good mines or something good,
yes,
we are looking at it.
Yeah.
Not to gather data point, but in case something unexpected is there in the unit, one or two units we have gone, but not really seriously. We are not chasing anyone.
Okay, thanks for clarifying on that. As the street but is a little cautious. They're saying that Mr. Bangur is losing his dominance in northern region. Motilal Oswal, for example, they have put out a note. They're saying that in the northern region, your share has declined, to ballpark around 22% from around 24%, say around 5-6 years ago. And they're saying in the next 3 years, because the competition is getting aggressive, your, market share will come down to around 19%. What do you have to say about that? You're okay?
Yes, as we will be not adding much capacity in the north, we have become an all-India player. 19% or so, between 19% plus minus 0.5%, that should be our capacity in the north, maybe in 3 to 4 years' time. And the cement demand is increasing at such a pace, you can't keep pace up with the capacity. So we are agreeable to 19 to 20%.
Okay, all right. So you're not too worried on that front. Let's tie this in, sir, then, because you're saying now you will focus both on value as well as on volumes. And 36 million tons is what you're looking at. But there was a recent... Yeah.
Let me say, that is only the non-volume. When we see the all India volume, our market share in India is increasing. As we have increased our volumes in South, East, West. So our North India volume, only if one side is to be seen, it will come down a little, but our all India volumes will increase. This has also to be highlighted equally well.
All right. So the market share, I think all India market share is around 9%?
Yes, it will remain so.
All right. You want to be it's not only about the North. On an India perspective, pan-India, you'll be hold at around 9%. Got it.
Right.
Given that the volume push is there, you're seeing demand is improving a little bit and pricing as well hopefully improves. And we have some recent announcement. Freight cost, I think there was some reduction that was announced by the Indian Railways. What does this mean in terms of an EBITDA per ton for the second half of the year? On an average ballpark, what should it look like?
Our ballpark, the EBITDA per ton should be maintaining what was there in the first half. It will be almost same with increased volume in the second half. So the overall profits will increase sharply.
So it will be approximately 1,250 to 1,300 rupees. Should that be fair?
1,100 to 1,200 should be what I will be comfortable with.
Okay, all right. And what about pricing, sir? The GST rationalization came about. All the benefit was passed through. How has pricing changed?
All the benefits have been passed through, and the industry had been little overcautious. They have passed through little more than what the GST has given. So now it will be increasing to cover up whatever been additional losses are there because of the GST reduction. There was some turmoil and nobody could hold to the right level. Levels have gone up a little more than what they should have gone.
All right, Mr. Bangur, when CNBC-TV18 was celebrating its first anniversary or first birthday, Vicat at that point of time had offered to buy Shree Cement, I think, for around 1,300, 1,350 crores. You went ahead and you said no. Now, 25 years later, the company is sitting at a market capitalization of more than 95,000 crores. You're sitting with some cash in your books as well. What is your vision for Shree Cement from here on? You took a splendid move 25 years ago. From here on, where is it headed? What's the next leg of growth coming from?
We are increasing a little in the dividend. We will be maintaining our cash pile only at the same level. We will not increase our cash pile. So if no ideas come, the shareholders will get the cash money. Otherwise, they will get the assets. And 80 million ton in 3 years also will require a lot of cash. So our cash flow is practically tied with 80 million ton. And there will not be any surprises and no inorganic growth is there. So our balance sheet for next 3 years, cash flow, everything can be projected.
Right, sir. Cash flows projected. You're close to 1 lakh crore in terms of market capitalization. And what a splendid move it was, in early 2000 when you said no to selling out at 1,300 crores of market capitalization. But some investors are saying, in the last few years, the returns haven't been as great. What do you have to say about that? Can you give them a little bit of a sweetener? Because you want to do things organically. Cash flows are steady. The entire trajectory has been laid out. Maybe give them a one-time dividend. You're sitting on $1 billion of cash. Or maybe a buyback. What do you say about that?
No, buyback at these values for company will not be good. Company requires continuously cash for further growth. So buyback will be, we are the biggest shareholders. So the shareholders, the outside shareholders will not get much if I buy back. So dividend and further growth is the thing. As far as our future growth plan, it will be in the cement, power, cement-related business to reduce the cost of cement, cost of production. A lot of things will be there.
All right.
Secondly, when you are saying that the returns have not been good in the last 3-4 years, I totally agree. But that is the fate of all cement industry. In the last 4 years, total EBITDA growth of cement industry is close to zero. Industry as a whole, C or A or B hardly matters. The industry is not growing. Over emphasis on price control is there. The cement industry profit growth is not there, though investments are coming.
But do you think, sir, the time has come now? We have been kicking the can down the road for the last 3 to 4 years. Is it time for the cement industry to finally bounce back? Demand will likely to show up. Cost at least have been rationalized, and a lot of producers like you have focused on the cost side. So better times ahead?
I feel so, sir, because only the expectation is that in 2 to 3 years' time, 3 to 4 years' time, one good moment comes and then the same profits are maintained. Now the profits are in the range for the industry at 900, 800 to 1,000 rupees for quite some time. It has to change. Otherwise, no new investment can become viable.
All right. And the return ratios as well come down to very, very low levels that it may not make sense then to add capacity. Well, Mr. Bangor, a pleasure speaking to you as always. It's been a while since we chatted. Looking forward to meeting you in person as well, sir, in the coming weeks.
Thank you.
Well, on that note, though, we'll slip into a short break. On the other side, we'll get you a conversation with the management of Wokat as the US FDA has accepted the NDA for Zenit.
Welcome back. So as far as the market is concerned, things haven't really moved much. We are practically where we were at the start. Slight drift down. That's what the equity market is doing, 80 to 90 points lower. Let's focus on that big block trade that happened. Bajaj Housing Finance stock's been down 6-7% ever since. Back to Vivek on this. Vivek, you were telling us this, in all likelihood, this is the promoter selling some stake to meet regulatory requirements, right?
Well, that's right. And, that is going to be the concern going forward as well. I just checked the data as far as, at the end of Q2, how much did Bajaj Finance actually hold? A little over 88%. So even after today's stake sale, which we understand that they paid around 2% equity, they're still left with quite a lot of selling to do in order to go ahead and meet the minimum public shareholding norms. It'll be interesting to see whether they continue to go via the block deal route or whether they go via some other route in order to go ahead and ensure that their shareholding meets the MPS norms by the end of the required period. The SEBI rules have now been tweaked, so that gives them some amount of relaxation in order for the timelines to be met. In talking about today's deal itself, little over $170 million worth of equity changed hands. almost 9.6% discount to yesterday's close, which is why you're seeing the kind of downtick on the stock today. And like you mentioned, it is the promoter, Bajaj Finance, that actually exited the stake.
Okay, all right, got that. So we'll keep this stock on the radar, 8% lower and still at those levels. Thanks for that, Vivek. Let's see what else is shifting in the market. The mid-cap market actually is doing better. Mid-cap index is flashing some green, even as the large-cap indices are struggling. In terms of stocks, interesting movers on the upside, Wockhardt, and we'll talk about Wockhardt right now because there's a new drug application that they filed in the US for their drug Zynic. That's pretty big. The last time we spoke with Mr. Khurakiwala, he was telling us that this drug could be as big as $500 million for Wockhardt. And now that they've moved on to the next steps in terms of regulatory approvals in the US, the market is taking heart from it. We'll get to that in just a bit. So that's one big mover. Some of the tier 2 banks are looking better. Union Bank is up to 2.5%. Now, this is also because of the index adjustments that are going to be underway. Remember, Bank Nifty will see a weight reduction in the big boys, ICICI Bank and HDFC Bank. And these stocks will be included in the Bank Nifty, Union and Yes, and both of them are holding up. But for the time being, let's go back to that big story on Wockhardt. The stock is still up 6-7%. The company has announced that the US FDA has formally accepted the new drug application for its antibiotic Zynic. The drug has been used in both India and the US on a compassionate basis on critically ill patients. Our colleague Ekta caught up with Mr. Khurakiwala, founder and chairman of Wockhardt, and began by asking him about the drug approval and the company's plans ahead.
This is for the first time for us and for India. A new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US.
Okay. What I mean to ask is that what are the number of steps that we expect till mid of next year? For example, are there fresh clinical trials that the company would have to undertake for the US in terms of fresh data?
No, I think the file is complete. Okay. The very fact that they've accepted the file means it is complete in all respect. So it is only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product in Europe, which is already a US FDA sites.
Okay. So you're likely to hear back from the US FDA possibly by mid of next year and probably get the approval by then as well.
Yeah, we will expect to have an approval by mid next year, but we are in continuous dialogue even now. And you would be surprised to know, and we were surprised, during the lockdown, they were in discussion with us because this is a very priority drug for FDA, and that's why it is a fast track giving. Only in anti-infective, this fast track option is available.
Okay. All right. So when you say it's on fast track, that means that when it's a priority review, what are the steps that the US FDA is taking in order to expedite it?
I think they are committed to timeline in terms of after acceptance of the file and approval. Okay. And generally it is 6 months. So in normal drug, it takes about a year or so for US FDA to approve a drug. So that is what it means by the fast track. Okay, they will internally put it in a fast track so that they complete the review in a shorter period of time.
Okay. Does the fact that the drug has already been used on compassionate basis, and I think the last figure that you gave us was at over 50 patients in India and the US, does that increase the chances of an approval because it's already been used in the US on a compassionate basis?
Yeah, as of today, it's more than 70 patients on compassion basis who have been cured and saved their lives. I think it is important for them and it is an important information for them. But the fundamental basis of approval is what we have done officially in terms of clinical work and preclinical work.
Okay. If in case you do receive approval, say by the middle of next year or the end of next year, you would then have a patented drug that you're selling in the US. That's how we would read it.
That is absolutely true, and our patent is there for up to 37, actually, in US.
Okay.
For at least 10 years.
Okay. So as of now, you've not received approval in any country for Xenic. You've applied in India and the US.
Yeah, that was our strategy. We wanted to apply to US first, because once you get a US FDA approval, the approval in the rest of the world comes very fast.
Okay. What is the status in India?
We have applied 6 months back, more than 6 months back actually. Sometime in March we had applied. But I do not know how our internal system works, but they've not even opened our file yet. So we are following it up with the authorities to expedite because it is a life-saving drug. And the earlier we have in the product in the market, it would be better. In India's case, we have this more than 70, nearly 70 patients on compassionate use in India. We have also done another meropenem resistant trial where we had nearly 95% plus success rate. So all this, and we have saved so many lives, and there is so much pressure from medical fraternity for our drug and saving lives. And unfortunately, we have no further quantity available for even for patient compassionate use, and we are working on it to hopefully make it available sometime in a month or two.
Okay, so you've had a conversation with the Indian authorities with regards to a possible, possibly increase the rate of approval in India?
Yeah, we certainly discussed with them, but we still not heard from them, and we hope they will. And we expect India approval to, hopefully we were planning to get it much before FDA approval, but let us see when now it comes.
But I just wanted to understand, when you say that you've used the drug on a compassionate basis in over 70 patients now, that's what you mentioned. How many were in India? How many were in the US?
There were 3 US patients. The rest were from India.
Okay, and what's been the outcome of those patients?
Every patient where it was not given in the last stage recovered. So it was more than 95% usage. In some cases, it was used for 1 month, 2 months, up to 6 months also in some cases. So this drug has proved a remarkable efficacy and safety. Okay. Because one of the important things in antibiotic is normally not given for a week or 2. It was given longer time because the patient came at a very last stage.
Okay. Just wanted to understand, what is the market size that you're working with? Because analysts are working with around a $1.5 billion estimate in terms of the global market size for Xenic.
Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide.
You're saying global sales should, the peak sales should be between $1 to $2 billion?
That is right.
Okay. When you talk about global sales, which countries are you including, and how much are you expecting from the US in particular?
US generally contributes 40% of the global market.
Okay.
So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
Okay. And India, you had mentioned your peak sales earlier in earlier interviews at around 150 crores. Are you changing that figure?
Oh, we are, yeah, I think that will happen much faster because of the kind of response and incidents we see here. And we should be doing much more than that 150 figure.
Okay. Out licensing, you've spoken about it multiple times. Now you have, one more feather in your cap to probably extend to those companies. Are you in talk?
It depends on the valuation we get in out licensing, and if we get right valuation, we will go ahead with that option. Alternatively, we are ready to market our own product because we have a series of products. So if we establish an organization now, I think we have products coming up in next few years, so that same organization would work, and it will be long-term beneficial for us also if we do it ourselves.
Okay, all right. Well, that's the walkout conversation. Stocks up about 5 3/4%. Markets, by the way, sold off quite heavily. And I think 100 points lower at the day's low. It's picked up a little bit, 26,086 at this stage. We're down about 88 points on the index. So there is that pressure. The Nifty Bank is doing much better. It did not, first of all, sell off like the Nifty did, as much as the Nifty did. And it's already started trying to come back up, down about 0.25%. So it's actually higher than where it was at 9:15, as opposed to the Nifty, which of course is lower. So that's the overall picture. Maybe just a quick look at the advanced decline, which is, clearly on the negative side, almost 2:1, 2 down for every 1 up. So it's not a great-looking screen. Mid-cap index is flat on the bottom of the screen, and I think the small-cap index is also down about 0.25% or so. Yeah, I mean, the small-cap index is down more. Mid-caps are flat. We'll talk about more stocks from the broader space in just a bit from now. But the interview with Telecom Minister Jyotiraditya Scindia that my colleague Parishad conducted, Minister Scindia said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. And asked about Bharti Airtel, he clarified that any other company seeking AGR relief must approach the Supreme Court. Listen into some of those comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
Okay, so that is the big interview, and we'll keep playing snippets through the course of the day, and the focus remains on Vodafone Idea. For the time being, let's bring Chandan Taparia into the conversation, figure out some trades at 10 a.m. Chandan, good morning. What's the view? Nifty, Bank Nifty, and any individual stock trades?
Good morning. Thanks for having me. So we have seen a corrective move in the market. However, on the last trading session, index made a all-time high at 26,325. But some profit booking is visible because of the weakness in the INR. So I think some sort of consolidation could be there in the market as selective heavyweights counter are witnessing profit booking decline. So I believe that Nifty may find support near 25,800 before it start the next leg of rally. While on the upside, 26,250 and 26,325 could be the key hurdle. So looking for some range-bound bias and support at 25,800. Talking about Bank Nifty, 59,000 is major support, 60,000 is the hurdle. We need to play with the same. And positive view on the PSU Bank and upcoming RBI policy will be a key trigger. Stock specific, positive view on the Bank of Baroda. The stock has been making higher tops, higher bottom on the daily chart, given a consolidation breakout on the weekly scale. So one can buy with support of 295, looking for an upside target towards 315. And one more trading idea on the buy side is Motherson Samvardhan. Strong breakout, pollen flag, high tops, high bottom. Rising trend line is supporting well with positive rollover data. So one can buy with support of 140. For an upside target towards 125.
Okay, all right. Thanks very much for that. Markets down 100 points once again. So that 25 point recovery has been given back, and 26,070 is where we're at. I think 25,800 or so is the 20-day, so there's still some distance away on the index. We'll take a break. Manisha on the other side, commodities in focus when we return.
Welcome back. As promised, let's focus on the commodity market action of the day. Manisha was telling us some profit taking is coming through in the precious metal space. Let's see what she's tracking now. Manisha.
Well, yes, the precious metals have seen a bit of a decline, but not base metal prices. And this year, clearly, when you look at the metals, the ferrous metals have continued to see a decline. Steel, for example, is trading near 5-year lows, but it really is about the non-ferrous metals, which have continued to do quite well. So take a look at the copper prices, and 11,200 plus kind of levels is what we've seen on LME, which is a record. And when you look at the US copper prices, that one is trading at a 4-month highs as well. Well, there is support because of one, tight supplies, you have elevated premiums, and then the US dollar index also has weakened to around 2.5-week lows. That has been supportive. There is also uncertainty over potential future tariffs coming in from US. There also is 88% probability right now that the US Fed will cut interest rates in the meeting in December on 10th and 11th. That clearly has been one of the major supporting factors for many of those asset classes. It really is about Chinese smelters because they are planning cuts to combat overcapacity issues. Now, this is one factor that has led to a lot of support come in for copper prices in the last couple of months. By the way, since the month of August, we've seen prices gain up by 13% as the rhetoric continues from China there. Well, the major copper smelters are expected to reduce production by 10% in 2026 is what has been supportive. China has halted approximately 2 million tons of planned smelting capacity for next year is what the markets are reading trading into right now. When you look at the Chinese smelters, well, they account for nearly 50% of global smelter output. So the decision coming in from China is what is important and has been supporting prices. Apart from that, it also has to do with the International Copper Study Group. It says that currently 2024 global capacity was at 26 million tons, which is expected to go to 30 million tons in sense of smelting by 2028. That's an estimated number there. And if these numbers do continue to be on the stronger side, even then the demand is much higher, and that would be supportive. It's not just about China. When you look at the rest of the world, there are mining concerns there as well. The incident at Indonesia's Grasberg mine, it is expected to resume completely only by 2027 first half. So that is a supportive factor. It also is about recurring protests in Chile and Peru. There are output concerns also coming in from Dominican Republic and Democratic Republic of Congo, major producers again. And then lower output guidance from Anglo-American for 2026. The support also comes in after BHP is estimated that the demand for copper by 2050 would be up by 70%, and there wouldn't be that kind of copper availability into the markets. So going forward then, for 2026, the expectation in sense of copper are slightly on the higher side. We already have seen 11,200, and you have Bank of America talking about 11,300 of an average price in next year. Cities talked about an all-time high of 12,000. Goldman Sachs talks about an average of between 10,000 to 11,000 there. And JP Morgan talks about various scenarios where they expect the prices to trade within 9,500 to 12,000 therein. And then Deutsche Bank also has come out with a report this week itself where they are talking about $11,000 a ton. So interestingly, while not too high highs is what we are looking at, but the prices are expected to trade around these levels for next year as well.
Okay, all right, Manisha, thanks very much for that. Some forecasts coming in there for copper. We'll take a quick commercial break here. It's the economy. Lata in conversation with Suyash Chaudhary of Bandhan AMC and Dheeraj Lim of ANZ Bank on the outlook for bonds and the rupee ahead of the RBI policy. Stay tuned.
The Indian rupee is one of the worst performing currencies in 2025, down nearly 4.5%, while most other Asian EM currencies have actually strengthened versus the dollar. Today we saw a sharp fall in the rupee, but it has lost 1 rupee 30 paise or 1.5% actually since November 18th, when the all-time high October trade deficit was announced by the government. Separately, bond yields have been rising since last Friday, November 28, when the Q2 GDP data was announced. The data has convinced many in the market that a rate cut is not a certainty on December 5th from Reserve Bank. To discuss the bond and rupee market outlook, I have with me Dheeraj Nim of ANZ Research and Suyash Chaudhary, the head of fixed income at Bandhan AMC. Gentlemen, good morning. Thank you very much indeed for your time. Let me start with you, Dheeraj. What is the sense? I mean, from November 18th, of course, the rupee has been depreciating all year, but it has been a fairly sharp depreciation from November 18th. Now is like 90 round the corner. That's the chatter, at least.
Thank you for having me on the show, Lata. I do think 90 is very much on the cards for the rupee. Look, I think the biggest factor is us not having a trade deal, at least by the expected timeline. Now, there's a whole lot of uncertainty as to when the trade deal would happen, which means that not only a future economic growth is at risk, of course, we are also experiencing a widening of the current account deficit. Capital flows remain deficient. So all of that points to an adjustment in the currency, which is also warranted from an economic perspective. I therefore do think until we have a trade deal and we know its fine print is actually favorable for India, the rupee should continue to weaken at a moderate pace.
You know, normally for the fundamentals of the rupee versus the dollar and other currencies, we look at the 40-country REER, the real effective exchange rate. The last one published by the RBI in the November bulletin actually showed the rupee undervalued. It was at 98 or 97. So doesn't that count for something? I mean, it's fallen enough. All this bad news of no trade deal, capital outflows, current account deficit is all in the price, isn't it?
Well, I'm happy to see the real effective exchange rate actually below 100. I personally do think that for India's exports and manufacturing to do well, we should pursue a competitive exchange rate, if not a significantly undervalued exchange rate. But we also have to keep in mind that the real effective exchange rate has spot element and also the CPI differential element, the inflation differential element. Of course, India's current CPI inflation is exceptionally low, and we expect it to turn around, starting Q2 2026. And therefore, that tailwind to the real effective exchange rate would suddenly vanish, which means that if you want to keep the rupee on a competitive footing, you would have to ensure that there is sufficient spot depreciation in the currency.
Oh, okay. Okay, so by the second quarter, you are expecting even more depreciation. Okay, let me veer my attention to the bond market. Suyash, the Q2 GDP number appears to have been bad news for bonds. We've actually seen yields rise. How are you reading it and its impact on what we should hear on December 5th?
I would not overread that, Lata. There are certain distortions in play that economists and the market well recognize, including the very, very low deflator. Also, if you see RBI's commentary on growth is forward-looking, their concern largely pertains to the second half of the financial year, and therefore, that concern may not have gone away, although the first half gives a good base upon which that concern rests. As far as the policy day is concerned, look, the marginal utility of the next rate cut is rapidly diminishing. After 100 basis points, whether or not to go for the last 25 basis is basically a judgment call. We think since the governor and the MPC have guided so clearly, they will go ahead with that rate cut. What the bond market will also look for is commentary that does not transmit volatility or uncertainty to the market. So October policy did a very good job of commentary that gave reassurance to the market that a benign rate cycle is in play and will remain in play for some time. And that will be equally important as much as the rate cut would be. And third is, with RBI stepping up rupee defense, core system liquidity on a projected basis will diminish, especially so because over Jan to March, you will have rise in currency in circulation as well. And bear in mind, this is busy season on credit, so credit to deposit ratio is also rising. So third element will be the guidance on liquidity. and the extent of proactiveness that RBI shows in shoring up core liquidity, the bond market does expect somewhere around 2 lakh crores of OMO purchases from RBI over the next 3 months, which I think is a fair expectation to have. So all told, we are probably in a range as far as the bond market is concerned. The direction of travel on some variables like current account deficit, etc., have worsened a bit, but the levels there are still such that the bond market needn't sell off much more from where we are.
Okay, in case both of what you say happens, the Reserve Bank does cut and guides that it will remain benign. I mean, they can't say they will support growth, but I guess they can think of something benign. And they give this 2 trillion OMO announcement later in the day. I don't think that will come as part of the statement. But if they were to do that, what is the range for the 10-year?
Look, so first of all, it may not even come later. That day, it may come over a course of time. However, what the bond market will seek is assurance that such a tool is very much up and center in the toolkit. As far as the 10-year is concerned, look, 10 basis point plus minus from where we are. The curve has also bear flattened a bit over the last few days, which is to say that shorter end yields have risen somewhat, expecting some bit of confusion with respect to whether the rate cut would happen or not. We expect that would sort itself out. One underlying issue that remains in the bond market is lack of risk appetite, and therefore, combined with the kind of duration supply that the market has, we would expect the yield curves to remain reasonably steep. And we think really the plays in the bond market are, 5 to 7, 5 to 8 year segments more than anything else, which are a pure play on the rate cut and OMOs.
Okay. Dheeraj, how much will this prey on the bond market, on the currency market? The fact that there is going to be more liquidity, that also is usually rupee negative, and the fact of the rate cut. Will that add to depreciation on the 5th of December and thereafter?
Well, I think so. I think that the rate cut is not fully in the price, so to speak, from an FX perspective. So if the RBI goes ahead and delivers a rate cut, which I think it must for the sake of the economy, I think some pressure on the rupee can be experienced. And like Suyash said, I also expect, some amount of liquidity support to come through from the central bank to support the bond markets, if not in this particular statement, then perhaps later. And all of that should weigh to some extent on the rupee. But that's part of the broader adjustment I believe the rupee should be exhibiting in the current scenario. When you're thinking of future growth, which could be sub-potential on account of tariffs, which look like here to stay at least for a while. And if your CPI inflation is going to climb up in FY27.
Okay. I'm going to ask you a difficult or maybe even impossible question. When the rupee gets that attractive at like 90 rupees per dollar, and, growth, if you go by the auto sales, even for November, it looks pretty decent. Wouldn't there be a point that FIIs would find attractive, that capital flows start coming in? Would that be in December itself?
Well, I would think so. That's theoretically true, but I somewhat differ on the growth momentum bit. Look, of course, the Q3 GDP was very strong, but I would advise to take that number with a pinch of salt for the kind of estimation issues that we have usually been challenged by. In fact, our in-house growth nowcasting model showed that we have about 92% of 40 indicators we use for predicting monthly GDP growth. And in October, it likely eased by about 20 basis points than where it was in Q3. So it's tracking about 6.5%, 6.6%, which is very good by itself, but certainly not so hunky-dory that we don't really have to worry about growth. In fact, if you go by the commentary that's come from the government as well as the RBI, the worries about tariffs staying and the kind of impact that they can have in the quarters to come can actually be very, very significant. And all of the data that has come in totality is telling me while GST has had a positive effect on some sectors of consumption, it may not have a very strong overall impact on the GDP growth in terms of headline GDP growth. So I do think that while composition has become solid in terms of domestic demand becoming more resilient, but I do believe that the growth rates at which India is faring or could fare in the coming quarters may remain a point of concern.
Okay. But Suyash, is there any space in the market or in the market mind that there could be 2 rate cuts? Will the governor indicate, okay, I've cut and there is more space to support growth, or is that just not on the cards?
Look, Lata, there's certainly a scope for 2 rate cuts from an argument's sake. I would caution against that, given that this still is a 4% dollar yield environment. Given that, like I said before, the incremental utility of rate cuts is now rapidly diminishing. And probably it makes sense to keep some buffers in play so as to be able to hold 5.25% on the overnight rate for a longer period of time. See, what you don't want is you cut rates to the maximum you can cut to, and then the guidance turns much more uncertain so that transmission gets compromised. And then you have to keep looking over your shoulder as to when a normalization cycle will begin. So it's much better practice, I would imagine, to just keep some buffers in play and try to hold the base level of rates for longer, supported by commentary that is reasonably constructive, flow of liquidity that is reasonable, so that transmission can happen on a broad-based manner.
Okay, very quickly, a final question, Suyash. What is the likely reaction if there is no rate cut? I mean, if the governor were to say that we want to keep the ammunition dry for a later day, probably because he's wants to keep one eye on the dollar rupee. It's already slipping. You don't want to give further fodder, and therefore doesn't give the cut, but says that space is available on a later day.
So it depends how strong that dovish guidance is. If the market expects that the very next policy is in play, then probably the reaction is not going to be much, especially so if OMOs come about soon enough.
Okay.
However, if the market senses that this may be close to the end of the cycle, then you could probably have a 10 odd basis point sell-off on disappointment on that day if it were to happen.
Okay. Dheeraj, what's your sense? Will the rupee be a reason why the Reserve Bank may postpone the cut rather than give it? Anyway, what's your year-end rupee target?
So for our end rupee target, we're looking at 91.5 by end of 2026. And this is assuming status quo on tariffs, and also want to importantly qualify that this is against our view of at least 4 to 5% weakness in the broad dollar index. So you can imagine the extent of depreciation, relative depreciation we're thinking of for the rupee. Now, in terms of whether the RBI would be mindful or consider rupee as a strong factor in this particular policy decision, I think that they have traditionally separated the tools to manage the rupee from the tools to manage domestic inflation and growth. And I think that distinction should continue, and it would be prudent to do so. While they do have sufficient FX reserves, they do have some runway on the forward book as well, although it is large, but they do have some runway. I think they will continue to manage the rupee and expectations around it from those tools in that toolkit, in the FX toolkit, whereas the rates at the moment should actually be exclusively reserved for domestic growth and inflation. We have seen a bit of a domestic demand recovery in the recent months, and I think a rate cut would do well to consolidate that, especially when you imagine that households had so much debt and debt servicing burden on their balance sheets at the moment. So I think rate cut for the economy and FX tools for FX. Let's keep that separate.
Okay. That's, I think, exactly how the Reserve Bank thinks. And they will be glad that the rupee market will not be terribly upset if there is rate cut. On the contrary, it may be seen as pro-growth. Out of time, but we will have to meet again to discuss both the bond and the rupee markets, post the policy as well. Thank you very much for joining us, Dheeraj and Suyash. Have to wrap up on Bazaar on that note. Chartbusters up next.
The NSE releases the final guidelines to comply with SEBI's weight concentration requirement. The weightage of 3 constituents in the Nifty Bank will be capped, while the number of constituents will increase. Analysts expect inflows for Yes Bank and Union Bank. Heavyweights, HDFC Bank and ICICI Bank may see some outflows.
Bajaj Housing, that stock is under pressure following a large block deal where nearly 2.5% equity worth about 2,000 crore rupees changed hands. Promoter Bajaj Finance is the likely seller.
GMR Airports rallies as BofA Securities in its coverage on GMR Airports, buy rating, target price of 128 rupees per share. They're expecting strong earnings growth to be supported by rising travel demand and favorable legal decisions.
The Telecom Minister tells CNBC-TV18 that a relief package for Vodafone Idea could be released by the end of this year. The stock on the back of that up by about 2.5%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and we have a red-looking screen today. The Nifty is down, Nifty Bank as well as struggling, and the breadth of the market in the number of stocks that are declining. So some red on the screen. I think the 26,000 mark becomes very important. 25,900 to 26,000, crucial support zone.
Important support to watch out for, Nigel, between 26,000 and where we are right now. Also, a lot of the stocks actually, as we speak, are moving higher. So Balkrishna Industries, for one, has recovered a smart bit from the lows, currently at the high point of trade. IEX itself is up around 2% from the lows. For most part of today's trading session, it was in the red and now just popped into the green. So that's another stock that should come up for you. Alongside that, we are seeing some traction building on a name like Angel One as well. But those are far and few in between because there are nearly 2 stocks declining for every stock which is advancing on the exchanges today. Let's get in Dharmesh Shah, who's the Assistant VP at ICICI Securities, for a quick technical check on the market. Dharmesh, do you think this is routine profit taking once the markets hit a record high, or do you think that maybe after the market having hit a record high, there is a trend reversal? All right, I think we've got him on a frozen frame. We'll try and repatch that connection with Dharmesh as well. Meanwhile, look at a couple of these other stocks as well. At the low point of trade is Indian Bank. That's the one that should come up for you. And alongside that, we're seeing some weakness in a couple of these mid-cap IT names as well. Persistent Systems, for one, is the one which is currently at the low point. Alongside that, we have names like IOC as well, which have seen a bit of a knock from the top. Dharmesh is back with us. Dharmesh, again, the question, do you think there is a trend reversal, or do you think this is just routine profit taking after hitting a record high?
Yeah, so good morning, Mangla. Yes, definitely, I think so. I think so. The sharp move which we witnessed in last Wednesday of almost 300 points, it looks like more of a retracement of that rally happened. So we do this more for normal profit booking. It's a normal retracement where we expect when Nifty should find the support at in the range of 25,800 to 25,900, and eventually we should surpass the new high and should be looking for a target of around 26,500 in the coming weeks. So it's something a buy on dip strategy should be adopted. It's definitely the move which we have seen a sharp is more likely to be contributed from the frontline large caps. The Midcap seems to be looking more for underperformer going forward. But yes, definitely, I think so. Large caps are the ones where one should definitely focus at the current market price.
Okay, focus on large caps. Got that, Dharmesh. And on the Nifty, where's the support? I missed that.
So support is almost placed at around 25,800. The last Wednesday low, if you look, I think so it was around 25,832. So we believe 25,800 is something the strong bull candle support, which should hold in this current corrective phase.
Tricky one.
25,800 to 26,500 is what the broad range he's talking about. So 25,800 is the stop loss here if you're going long. Individual stocks, Dharmesh, what do you have?
Yeah, Magna, if you look from the market, from the large cap perspective, I think so Larsen remains to be the top pick. L&T, again, if you look at the chart from the technical perspective, I think so the long 14 months of long consolidation breakout has been witnessed in L&T. And even if overall capital goods, I think so the risk reward looks more favorable from the current levels. We expect capital goods as an index to outperform going forward, where L&T remains to be our top pick. We expect L&T to head towards 4,500, keeping a stop loss of around 3,850. So L&T remains to be our top pick inside the capital goods space. Apart from L&T, Adani Port is something which we like from the port side. where again the last 1 year price performance seems to be forming the cup and handle type pattern, and the stock has witnessed a breakout above 1510. Maybe I think so what we see currently is more of a retracement of a sharp move which happened in last few weeks, but 1500 to 1480 remains to be the strong support for the Adani port. We expect the stock to head towards 1675 in the coming few weeks.
All right, we take that point, Dharmesh. Thank you so much for that. Let's get in some more ideas for profit as well. Tire companies are higher. So MRF for one is at the high point of trade. Let's see whether CEAT and Apollo follow that suit or not as well. So we have Balkrishna Industries, of course, when we pointed out at the start of the show. MRF has moved higher as well, up by almost 2,800 rupees today. And CEAT has just about spiked. And let's see if Apollo Tires is also around the higher end of today's trading range so far or not. Yes, it is indeed up around 2% for that stock too. But let's get you some more ideas for profit. We have Money Control Pro's Lekha Badlani joining in with a stock.
Yes, thanks. So my stock pick is Suraksha Diagnostics, which operates one of Eastern India's largest integrated diagnostic network. Now, the expansion momentum remains strong for the company. It added 11 centers in H1 FY26 and plans to add 9 more in H2, targeting 12 to 15 additions annually. Its growth strategy is anchored in Eastern India, an underserved region with significant demand for quality diagnostics. Management's guidance of 15% annual revenue growth appears achievable, supported by center additions and the launch of the genomic vertical. While the short-term margin remains depressed due to expansion, operating leverage and maturity of new centers should drive recovery. The polyclinic business with higher gross margin offers an additional margin lever over the next 2 to 3 years, with the company targeting 34 to 35% EBITDA margins over time. At a sector level, structural shifts like the rising chronic diseases, higher healthcare spend, and growing preventive care adoption provides strong long-term tailwinds. Suraksha is deepening its presence in West Bengal, which will absorb 70% of the upcoming capex. Moreover, its hub in Patna and Guwahati strengthen its position in the adjacent market. Suraksha's genomic entry is also well-timed and positions it well to capture the emerging demand. Now it trades at 15 times FY27 estimated EV/EBITDA, which is at a meaningful discount to its peers, making it an attractive, for investment for long term.
All right, we take that point. Thanks a lot for that, Lekha. With that, we take a short break, come back, more on the markets and stock-specific action. Stay with us. Looking back at an index level, there has been some recovery in the mid-cap end of things. So the mid-cap index is now down just about 5% versus previous close and just about moving into the green as we speak. And even as the broader markets are indicating more stocks in the red than green, we have a couple of stocks which are spiking. Bank of Maharashtra, for instance, there was a large trade on that counter this morning as well. It's recovered from all of those losses earlier, and now it's mildly in the green. In fact, at one point it was down about 3.5%. And we have Restaurant Brands Asia as well. Now, the news here, our colleague Vivek has been reporting that the promoter Everstone is looking to sell stake in the company. And in that, perhaps, we are seeing this stock move higher. It was higher all of last week, and now, even in a wobbly market, that stock has spiked to the high point of trade. But the NSE has released final guidelines to align with the SEBI's weight concentration requirement. Vivek joins in with the details. Vivek, the heavyweights stand to lose.
Well, that's right. So, it's an important development. So, last evening, NSE went ahead and released the final guidelines to align with SEBI's weight concentration requirement for constituents in indices that actually have futures contracts trading. Now, when you're talking about this particular revised method, the top 3 constituent weights, as far as the Nifty Bank is concerned, will be capped at 19%, 14% and 10%. For Nifty Bank, the weight adjustment will be implemented in 4 tranches, starting by the end of December. So when you're talking about the Nifty Bank, end of December, now you have 12 constituents, likely to see 14 constituents as per analyst estimates. What are the key takeaways? 2 likely additions to the Nifty Bank index. Yes Bank could come in, it could see inflows of a little over $110 million. Union Bank is the other stock that could enter, almost $80 million worth of inflows could be seen. On the other hand, HDFC Bank and ICICI Bank, given the fact that they're currently above the prescribed weightage, they could see some selling pressure. Analysts estimate a little over $330 million worth of selling pressure could be seen both in HDFC Bank as well as ICICI Bank on the back of this development.
Okay, all right, Vivek, but we can't let you go at that. GMR reports as well. There's note that's coming from BofA Securities. Run us through that piece. Vivek, GMR reports.
Well, that's right. Interesting report coming in from BofA Securities as far as GMR Airports is concerned. They've gone ahead and initiated coverage on the stock with a buy rating, a target price of close to 128 rupees a share. They say that the company offers a strong earnings growth ahead, supported by number 1, rising Indian travel demand, growing non-aero as well as real estate revenue, and also the benefits that the company is expected to see from favorable legal decisions. They say that the current valuations at 15 times adjusted EV to EBITDA is quite attractive, and this on the back of the fact that they see strong future growth. What are the key catalysts? Number 1, they see consensus going ahead and upgrading their EBITDA estimates, reopening of the Pakistan airspace, clarity as far as hypothetical regulatory asset-based calculation is concerned, especially given the fact that it's currently in the Supreme Court, execution of non-aero as well as real estate strategy, as well as the restarting of divisions, given the fact that FY26 is the year when they are expected to be PAT positive. On the other hand, a few risks include Delhi's second airport they see could result in some short-term traffic disruption, and also a more aggressive approach from the regulator in terms of new strategies. So overall, positive note coming in on GMR Airports from BofA Securities today.
All right, we take that point, Vivek. Thanks a lot for that. A couple of stocks also moving higher right now as we speak. Whirlpool is one of them. Remember, last week there was a large trade. The promoter did sell stake in the company. It was under pressure. Now coming back from the lows, currently at the high point of trade with a 2.5% gain on Whirlpool. And Siemens is the other one, which too has shown a bit of a spike currently at the high point for that stock as well. What we'll do is take a short break, and as we do that, some good news for all you viewers, which is India's business news leader, which is CNBC-TV18. Its all-new app is here. It gives you instant access to breaking news, in-depth financial articles, financial world updates, all of them at your fingertips. What you can do is download the CNBC-TV18 app from either the Apple Store or the Google Play Store, or just scan that QR code, which is up for you on the screen.
Well, Bajaj Housing, that's under pressure following a large trade. Promoter Bajaj Finance is likely to have sold 2.5% equity worth around 1,900 crores. Hormuz joins us to tell us about this listing, that there was a lot of interest out there. Stock jumped away, and today the stock is down 50% from the highs. Hormuz, run us through that piece.
Well, the most bid IPO at that point of time was Bajaj Housing. Bids was almost around 3.5 lakh crores for that 6,500 crore rupee IPO. Today, the stock is down 50% from those post-listing highs of 188, made a 52-week low of 95 today. A block deal took place, almost close to 2.5% equity was sold by the promoters, Bajaj Finance. Now, of course, they are doing this to comply with the minimum shareholding norms, but then there is still plenty of overhang that still remains for Bajaj Housing. That's because of the fact that even after selling today's stake, the promoter stake would still be at 86.3%. So that still means they still have another 11.5% stake still left to be sold. That remains the most important overhang for the stock going forward. And if you look at the IPO as well, you mentioned it was the most bid IPO. The QIB portion at that time was subscribed well over 200 times. The retail portion too saw healthy subscription for whatever was reserved for them. And even after that, the stock, after its listing from its IPO price of 70 bucks, went up to 190 and now trades below 100 rupees. So that is the key overhang. And of course, just as the stock continued to move higher, the retail shareholding went higher in the stock as well. From 16 lakh shares during listing day, within the next quarter, that number went up to 26 lakh shareholders. Today, that number stands at around 24 lakh, around 8% of the company owned by retail. Now, of course, mutual funds don't have a significant stake in the company. So it's only between the promoters and the retail shareholders, and this promoter stake sale continues to remain a big overhang on Bajaj Housing.
All right, Hormuz, thanks a lot for that. With that, let's go on to a CNBC-TV18 exclusive. Telecom Minister Jyotiraditya Scindia has said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. But when asked about Bharti Airtel, Scindia clarified that any other company seeking AGR relief must approach the top court. Listen in to his comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
All right, and the government has also issued a notification that mandates that domestic phone manufacturers install the Sanchar Sathi app on the devices. The app will have access to smartphone data, including photos, messages, and more. Ashmit joins us to fill us in with an update on that front. Ashmit?
Well, the DOT has issued very clear directions. All phone manufacturers, within a 90-day period, that's the short window, they have to make sure that this application, Sanchar Sathi, is embedded in all phones that are being manufactured. Even phones that may have already been manufactured and may be in transit, even for those devices, over-the-air updates need to be issued so that the Sanchar Sathi application is embedded in the devices. But this is being flagged by very many academicians, think tanks, privacy advocates as a gross invasion of privacy. And they flagged a number of concerns with respect to data that will will now become accessible to the Sanchar Sathi application. They point out that the Sanchar Sathi app will have access to all the files that are resting on your device. So whether that's phones, images, WhatsApp images and videos that you may have recorded, it will have access to all the PDF files on your device, all the Excel files, all the Word files. That is what the Sanchar Sathi application will have access to. That's one. Number two, it will also have access to all the call logs on your device. So who is calling you, who you are calling, what is the date and time of that call, and what is the duration of that call. All of that information will be available to Sanchar Sathi. Number three, the network provider that you're using, the network type that you have, whether that's a 3G, 4G, 5G connection, and also your call tower that you're using at that point in time, giving a rough idea of your location. That is something that also this application will be able to access. And finally, your inbox, your SMS inbox is something that again this application can access. So all the SMSs that you're getting, Sanchar Sathi will have access to. Even some of the alerts that the banks may have been sending the users, that is also something that Sanchar Sathi will have access to. But the DOT is refusing to budge, making it clear that this is a direction that needs to be complied with, and clarifying in that order that if these orders are not complied with, there will be consequences that will come as a result of the Telecom Act as well as the Telecom Cyber Security Rule.
Thanks a lot for that, Ashmit. In fact, let's also hear out what the Telecom Minister had to say to us on this issue.
The next question, there are reports coming in that the Telecom Ministry has asked private mobile phone makers to preload a government-owned cybersecurity app before selling phones. Now, this is for the security of customers all around the country. Has that been done? Have the directions been issued? And what exactly is the expectation?
So all of this ties in with the security of the customers. So Sanchar Sathi portal and the Sanchar Sathi app has done a yeoman service. And let me say this on television with you, and let me thank our consumers also, because the success of this could not have been possible unless there was a Jan Bhagidari approach. And it is due to that Jan Bhagidari approach that we've been able to protect our consumers. This is a step in that very direction. If you're able to load this on, then if I lose my phone, immediately that app is on my phone, which I can then register and make sure that my phone is not used by any fraudulent individual. It's a step to protect the consumers at the end result.
All right. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters with news that the markets are trading in the red. And as you can see to the bottom of your screen, the Indian rupee has made yet another fresh all-time lows. We'll wrap up, but the team of Trading Hour is waiting by for you. Stay tuned.
Good morning. You're watching us here on Trading Hour. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, and this is our new Trading Hour team, Hormaz Fatakia and Ritu Singh. Well, the market's at around that 26,100 mark, easing off from record highs earlier. The good part is that the Midcap index has recovered from the lows at an index level. It's above my head right now, marginally in the green. The only thing we need to watch out for is what happens to those trailing lines, the red and green lines, which are still far and wide apart right now. But do they come any closer at any point in time or not is something that we will be tracking. We're seeing some traction in a couple of these individual stocks, but more on that in just a bit. For starters, Ritu, Hormaz, both of them, the new Trading Hour partners. How does it feel, Ritu?
Well, it is a lot of fun, and let me tell you, it's been a very exciting start given what's happening with the rupee. In fact, today also, if you look at it, a new record low, 89.88 to the dollar. That's where we have the rupee breaking past what we saw was a new low yesterday of 89.78. And actually, since we got that, the deficit data on the 18th of November, there's been a steady fall, new record lows every day, and that is something that is turning the market sentiment weak. But what's buzzing in trade today? Let's go across to Hormaz to find out. Hormaz.
Oh, well, the broader markets are seeing some recovery, as Mangalam just pointed out, and there are stocks that are moving well and truly on the upside on very significant volumes as well. And Forgings, right from the start of the show, from the start of the day today, has been on the up move. The top gainer on the Nifty 500 today is almost 10% higher on the stock. The biggest single day gain and volume move since May of last year, has already gained in 5 out of the last 6 sessions. And look at the volumes today. 20 lakh shares on Forgings have been traded. The 20-day average here is only 7,000 shares. So on very significant volumes, the stock has moved above its 200 DMA, which is around 340, but has been a bit of an underperformer in the last 2 years. It's been down 23% year to date, was down 4% last year as well. Spark is the other one. Sun Pharma Advanced Research, the biggest single day gain since March. Volumes are the highest in a month in today's session. As of now, of course, they have close to 50 lakh shares that have been traded. The 20-day average is just 1.5 lakh, and the stock is now nearing a very important level. The 200-day moving average, it's around 145.5. The stock currently at 143.5. So nearing important levels is Spark. But like Forgings, has been an underperformer, down 28% this year, was down 30% last year as well. And lastly, HCC, that's a news flow driven move today, 10.5% higher on the stock, the biggest single day gain since March here as well. They announced the terms of its rights issue, which has been priced at a 50% discount to yesterday's closing price. We have had more than 3 crore shares that have been traded on HCC. The 20-day average is around 41 lakh shares, and the stock, despite this move, still remains below key averages. Is down around 32% so far on a year-to-date basis, and is set for its first negative year of returns since 2020. So an underperformer overall for is HCC, but buzzing in today's session, guys.
Take that point, Hormaz. Thanks a lot for that. Meanwhile, we were talking about a couple of these mid-caps doing well. Mid-cap IT in particular is on our radar. Look at Birlasoft. That stock's seen a big move from the lows. In fact, opened marginally in the red, and now the mid-cap IT pack should come up for you. In fact, Birlasoft has moved to the high point of trade. We are also seeing some traction on Cyient. Cyient also was lower in the earlier part of trade so far, and now has seen a bit of a spike, currently at the high point of trade. And alongside that, we are seeing some traction in other names as well. Speaking about traction on mid-cap IT, Mastech, none bigger than that, because as the story flashed on your screen, the stock actually saw a bit of an up move, a big vertical spike, almost 4.5% higher. The promoters are looking to sell stake. Rachna joins in with the story. Rachna, what are your sources telling you?
Right. Sources tell CNBC-TV18 that Mastech Promoter Group is exploring the sale of nearly 20% stake in their company. Now, this is significant because the promoters currently hold about 36%. So the sale being contemplated is more than just a routine dilution. It could meaningfully reshape the shareholding structure. What's also noteworthy is the pricing. People in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of this sale that has 2 big triggers. First, succession planning, and the other is the broader effort to bring leadership stability after a year of major top deck changes. And that's in context because Mastech has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts. Raghavendra Jha first became CFO in May 2025, and Deepak Kedia took over as the CFO in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset, the one that aims to give the company a steadier foundation as it leans into the next phase of growth. According to sources, the promoters are sounding out a mix of strategic investors and long-only institutional funds that aligns with Mastek's revenue footprint, where nearly 65% of the business comes from the UK and the Europe. Mastek was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar and the late Sudhakar Ram. And as always, we reached out to the company for a comment, but Mastek declined to comment.
All right, take that point, Rachna. But just a quick one. Perhaps you may or may not know about this. Is there any timeline that they're seeking for the completion of this deal?
Not really. As I said, they're looking for strategic investors as well as long institutional funds. So right now the pitches are going on, but the intent to sell is quite clear.
All right, the intent to sell is quite clear, and so is the intent of the street to take note of that story, because as Rachna was speaking about it, it's a big move is what we've seen on the stock, and the fact that it's a part of a larger reset of the company, strategic and long-only investors coming in alongside the price, which could be a 25% premium to its current market price. Thank you so much for bringing that to us, Rachna. Definitely the street's taken note of that. But another thing that the street is watching out for is Raymond Realty. The shares have surged after the company has launched an ultra-luxury project in BKC with a land parcel of 2 acres, a revenue potential of 2,000 crores. Hari Mohan H. Sahani, who's the MD and CEO of Raymond Realty, now joins us. The important points, Mr. Sahani, will be how big will this premium housing segment be for you, the project pipeline outlook, and how will this expansion be funded? So let's talk about the timelines. By when do you first think that, we'll be able to realize the revenues of this 2,000 crore, the recoveries when they come in? And secondly, how is this expansion going to be funded? 2 parts here.
Yeah, sure. So this project that we are launching, it is going to be launched today. We just got the RERA registration done very recently. It's Invictus by GS at Bandra, BKC, just at the edge of BKC, very prime location. So it warrants a premium and a luxury project. So that's why we have come out with our highest offering, which is Invictus by GS. And this is about 2,000 crore top line project. The entire duration of the project is about 4.5 years. We are scheduled to complete it. The work at site has already begun. The demolition is complete. The site preparatory work is going on. And the launch, for the launch, the experience center, everything else is also ready. So the revenue recognition for this will start, a very marginal part will start from this financial year itself, since we will get 1 quarter's benefit for this project. In terms of pre-sales, our overall pre-sale target for the year, we are given a guidance that we'll show a growth of 20% over last year. So which is close to a 3,000 crore number, which is what we have promised all along. And we are on track to achieve that. So this project will be an addition, will actually contribute to that. And as far as your second part was about the funding of this project, the funding for this project is already in place because the equity that we needed for the project, as most of that equity has already been infused in the project, because the approvals, because that's the big part where the money really goes in. And now that we are launching, the cash inflow will start. And as far as construction is concerned, we always get some kind of construction funding from a bank in place. So that is also in place. So the project is financially closed in that sense.
Yeah.
And,
Mr. Sahni,
the pre-sales will only add to that.
well, Mr. Sahni, let's talk about those pre-sales. You're talking about a 20% growth, over FY25. In FY25, you had about 2,300 crores and you've only done 760 crores so far. So how much better can the second half really be? And if you could also tell us what kind of new launches you have lined up in this ultra-luxury segment and otherwise.
So the ultra luxury segment is this one project that we are doing in BKC. Then there is one project we are doing in Thane as well, which is also branded Invictus by GS. Because we believe in product branding. Each project is not going to be reinventing the wheel. So we have 3 product categories: 10X, Address by GS, and Invictus by GS. So in the luxury segment, we have Invictus by GS, which is what. So one launch we have already done in Thane this year for Invictus by GS and this BKC one. So that's on the luxury end. Then other than that, we have done one more launch in Thana, which is in the premium category, which is addressed by GS. And going forward in Q4, we will be launching in Thana a 10x product as well, which will be a large project. And we are launching some retail as well. So we've got 2 more launches coming up in Thana. And outside of Thana, where we have other contracts, there will be 2 more launches apart from this launch. So we've got one other launch which is lined up for this quarter itself, if all goes well, or it may spill into first 2 weeks of Jan, which is Q4, which is the Vadala project that we have. That is also a very large project. And then Cyan is another one which is scheduled to be launched in Q4. So that makes it 3 new projects which will certainly be launched this year outside of Thana, and 2 in Thana going forward. So 2 we have already launched in Thana. So these projects will contribute to the pre-sales number, and this is how it was planned for the year. So it's not by accident that we've got 760 pre-sales in H1, and then going forward it is heavy on H2. That's how it was planned, because the launch of the projects was scheduled in that manner.
So, Mr. Sahni, you are confident that you will surpass that FY25 figure of 2,300 crores in terms of bookings in the second half?
Certainly, we will give a decent growth on top of that as well.
You have been speaking about 3,000 crores, so you are confident of that, right?
Yes.
All right.
So, and in the ultra luxury segment as well, Mr. Sahni, you mentioned Thane and the BKC bit. How much bigger do you see that vertical becoming as part of your overall business? And are there any other geographies or micro markets that you are looking at when it comes to this segment beyond BKC and Thane?
Certainly. I mean, it all is warranted by the kind of location that we get, because, in luxury, location is what really matters. And we obviously have not focused on apartments worth 100 crores plus, which is South Bombay and some of the other markets. We are open to considering projects there, but we essentially want to stay at the deep end of the market and not go in the shallow part of the market. So where the buyers are going to be very limited. So keeping all that in mind, our selection of sites will depend on that. And by nature itself, the moment you do luxury, the exclusivity comes in. You really cannot go mass, and that's in every product category and not just real estate when it comes to luxury. So that will always play out. So you may not see many projects in this category. So most of our projects you will see in address by GS category, which is also a premium category. Not affordable luxury or aspirational is what we really look at, not really affordable, because affordable is also a much abused term now. We don't know what it means. So yeah, that's
right. Take that point. Thanks a lot, Mr. Sahni. Out of time, not out of questions, though we request you to join us once again to discuss, the redevelopment theme, also your collection efficiency, etc., your cash flows. We'll talk about all of that at a later date, but as of now, the street likes, what you've been talking about in terms of collecting, or rather booking 3,000 crores, despite doing just about 700 crores in the first half of this year. Take a short break, come back, focus on the crypto markets. Manisha Gupta joins in on the other side.
Welcome back. Shifting focus to the crypto markets. The sell-off in Bitcoin continues, and Manisha is here to tell us just that.
Oh, well, absolutely. If you look at the last 24 hours, the cut only has gotten deeper here. With the way what we've done in the last one day has been the biggest one-day decline that we have seen since the month of March there. So take a look at the overall numbers then, and the market cap for Bitcoin or other cryptos has declined to below $3 trillion now. The all-time high that we've done in this year has been to the tune of 4.4 trillion. So clearly a very sharp decline coming in as far as the money seems to be moving out of this space also. If you look at overnight, again, it's 16 million worth of longs liquidated in past 24 hours when it comes to Bitcoin. But when you talk about the overall exchange liquidation, that number is quite huge to the tune of $400 million there. Well, we have seen decline in futures volumes and open interest as well, telling you exactly that the money seems to be rotating out in the other asset classes, but not staying in crypto is what we've seen in the last couple of days here. Well, the sell-off in crypto has resumed for the month of December. The risk-off sentiment that we have seen in broader asset classes seem to be impacting this space as well. And when you look at the shares in digital asset-related stocks in the Asian markets, well, they clearly have declined quite sharper. And this has come in after the People's Bank of China warned of illegal activities relating to digital currencies, and that has led to a sell-off across Asian markets within exchanges there as well. The other thing that the street will watch out for is the Bank of Japan on whether or not it hikes interest rates. The bond yields in the meanwhile have hit a 15-year highs, impacting this space as well. If you look at the overall large leverage positions, they still are holding, telling you that a further decline in cryptos from here on, if any of these positions were to unwind, could be even deeper. So leverage across Bitcoin exchanges is up to 200 times in some of these instances. If you look at the crypto futures therein, there's an estimated $787 billion of outstanding leverage there as well. And when it comes to ETF, well, the outstanding positions on that one are to the tune of $135 billion as well. When you look at the last 1 month, the cuts have been quite deeper. As you can see, whether it's about Bitcoin, Ether, Polygon, we're down anywhere between 20 to 30% on this. And that pretty much has been the case with other high market cap cryptos, where you have Cardano, Solana, Binance down anywhere between 13 to 30% yet again. So the last 1 month, last 1 week, the current year, all trading into the negative for many of these cryptos.
All right, Manisha, thanks very much for taking us through that. But Bitcoin's not the only one losing steam. You look at the rupee, that's been the story, new day, new low. And right now, as we speak, at about 89.91, that's where the rupee is, not too far off from 90, that psychological mark that markets will be watching out for. As I said, today's levels at 89.90, that's where we are at about, which is broken past yesterday's low. That was about 89.78. In fact, since the 18th of November, since we got those deficit numbers, the rupee has been on this sharp downward trajectory. It's lost about 4.5% this year alone, and 1.3 rupees almost, since early November. It is now the worst performing currency. It remains even below the Indonesian rupiah and the Philippine peso. So what's really going on? It is the continued sentiment about the lack of a trade deal with the US, and of course, the foreign investor selling that continues heavily in the market because, Indian equity is still at an expensive valuation versus peers. What also makes it difficult is the fact that our capital account deficit has now been in in deficit for 2 consecutive years for the very first time since 1991. And typically, the current account would be funded by the capital account surplus, but with that being in deficit, there has been renewed concerns as well. Of course, it wasn't helped by the fact that we got a solid growth number of 8.2% in the second quarter, but the fact that the nominal GDP was, still in single digits, sort of indicated that perhaps the economy is not as hot as the real GDP numbers seem to indicate. But what's really going on in the market? How close are we to that 90 level mark? To take that forward, we have with us Sakshi Gupta, who's a Vice President and Senior Economist at HDFC Bank, and Ashish Vaidya, the Managing Director and Treasurer, Global Financial Markets India at DBS Bank India. Thanks very much, both of you, for joining in, Ashish and Sakshi. Sakshi, is the RBI going to let it slide to 90? Is that the next level to watch out for? How realistic? Are we to getting there?
Well, thanks, Ritu, for having me on the show. Look, you laid out what are the pressures on the rupee, right? I think at this stage, in the absence of any positive announcement on the trade deal, I think we are stone throw away from that 90 psychological level. While I think that the RBI's intervention strategy so far has been to limit volatility in the rupee, come in and try and create some amount of stability. I think with the amount of risk aversion in the system because of a lack of trade deal, beyond a point, I don't think that they are going to target particular levels. So I think it really boils down to the outcome of a trade deal announcement.
Right. Ashish, you have your ears and fingers close to the screens at the dealing room. What is likely? The big daddy comes in at some point in time, or what are the institutions doing here? Are there any levels that we're looking at?
Yeah, hi. Thanks for having me there. I think broadly, Big Daddy is around and probably smoothing the volatility for sure. And I think we have seen that. The point is that the currency INR is at an all-time low. And I think looking at the technicals and I think not be surprised to see anywhere between 90 and 92 in the near term if there is no positive triggers there. Because the fundamental setup in terms of numbers, whether it is current account trade, etc., everything is, we're seeing a headwind, from that side. So, but having said that, I don't. If you look at the net inflow outflow, from the equity and the debt market in total, it's not been a large outflow as such. So the fundamental picture in terms of exports deteriorating and imports actually increasing is actually causing the rupee to depreciate. And that's why we are probably, amongst sort of worst performer within the group of emerging market currencies.
Mm. So Ashish, you mentioned you are seeing levels of 90 to 92 in case there is no positive news that comes in. But do you believe that once the 90 level is breached, do you believe any intervention from the RBI to take place just for a brief while to ensure that there is no rapid deterioration of the currency as we have seen over the last couple of weeks?
So I think in bits and pieces, I think like RBI stated policy, they will be there to smoothen the volatility. They're not really there to manage the level of currency. I think that stands true, and that stands true in every situation, whether it was at the 54, 55 levels, whether it was at the 75, 80 levels. So it will stand true at this also. Having said that, obviously, I'm not seeing, there's a lot of expectation about the US trade deal getting done, and that's sort of getting built in. And that's the reason rupee is not really flown. So in case there's any negative news, then I think you can really see a spike. I was also talking from a technical angle. I think because it's already breached the all-time lows, the rupee, I think it has a potential to go anywhere between 90 and 92. I'm not saying it's a done deal, but it's a probability which I will lay almost 60-70% weight on that.
Sakshi, how much of a factor do you think this sharp rupee decline is going to be when the MPC meets to decide on the rates this Friday? And if the RBI does decide to cut rates, do you see a further pressure on the rupee?
Right. I think that's a interesting point from a monetary policy perspective. But the way the RBI has behaved so far this year, right, I don't think that the rupee in itself is the dominant driver of the interest rate decision. I think that, if you recall, even in February, earlier this year, when the rupee was close to or had just breached 88 levels, the RBI, went ahead and started its rate cutting cycle. So, I do believe that while, yes, rupee volatility, rupee pressures are important, I don't think that they are the dominant factor. I think that the RBI, the upcoming policy, will perhaps focus more on assessing what is happening to domestic growth, not just in terms of what has happened so far, but also perhaps be a little bit more forward-looking. Try and assess the implications of US tariffs, since we still don't have a trade deal. And I think take comfort from the fact that inflation continues to be very, very low and is projected to remain below, their median target of 4%, at least in the middle of next year. So my view on, the RBI policy, although it's a very close call, I think there is a case to be made for the RBI perhaps to deliver, a rate cut in the upcoming policy. From the rupee perspective, a rate cut, yes, is not necessarily very good news. But at the end of the day, we have to remember that then you have the Fed meeting next week, and the Fed is also expected to cut rates. That is the broad consensus in the market. There are a host of factors that will influence the rupee, but I don't think that the interest rate cut in itself is the dominant driver for the rupee. It is really about the tariff differential and the tariffs that we face from the US.
Right. Ashish, what's your own house view on the RBI policy, especially as it comes after a good GDP print, and then thereafter we have the Fed meet as well, rupee is weakening. Towards the end of this year, typically volumes thin out as well. So amidst all of this, what's your view on both the rupee and the bond? What's the trade like?
So the house view before the GDP print was a 25 basis point cut. Having said that, I think, like Sakshi mentioned, one needs to look at the rate cut as such is not going to have any negative implication on the rupee. And it's important to, I'll sort of point out a couple of things. In 2015-16 and 23-24 also, you had a very low GDP deflator, and the nominals were shooting through the real rates were shooting through the roof, whereas the nominal were actually sobering. So, I would take a sense that RBI will have to look at it from a forward-looking perspective, and look at how the inflation has sobered down, and the nominal has come just at about 8.7, 8.8% in the last 2 quarters. That really augurs from a forward-looking sense to sort of give some support to the economy and make sure that we don't get drowned in the numbers, which technically look very, very healthy, but from a medium-term sense may not be great. And mind you, in February we're getting the new, the new series, and that could change the way we look at the numbers.
All right, Ashish and Sakshi, we'll leave it at that. Important levels to watch out for. Ashish, they're saying it could break 90, 92 as well, but we still have to be watchful of where the rupee ends right now, trading at 89, 87 to the dollar, just shy of that 90 psychological level. On that note, we're going to slip into a break, but when we return, we'll have technicals with Sneha Sheth of Angel One and also discuss the top trading bets with her.
110 points lower on the index now, back towards that 26,050 mark on the downside. The currency continues to remain around that 80, 89, 90 levels, and good time to get in a quick chart check. Sneha Seth from Angel One is now joining in. Sneha, good morning. Thank you for joining in. Do you believe that 26,000 now is a very important support level for the index for it to sustain on this weekly expiry session? Your call here and your stock recommendations for the morning as well.
Very good morning. Now, if you see Nifty, yes, from yesterday's session, we are seeing decent profit taking, which has been supported with decent writing in call options. We did see writing in 26,300, 200 strike, and today we are seeing fresh writing coming in 26,100 put strikes even, call strikes even. However, 26,000 put has highest open interest concentration, and I believe in case of any declines towards 26,000, which also coincide with the 20 MA on the daily chart, that would be an opportunity to go long there. So in case of any dip towards 26,000 or 25,970, 80, that zone should be a buying level for an intraday perspective. Apart from that, overall positionally also, I believe 26,000 should be acting as a support. So yes, in case of dips, one can go ahead and take a long positions there. As far as other counters are concerned and positionally, I believe one should be focusing on individual counters as well. And index, the buy on dip strategy remains for both Nifty and Bank Nifty both. As far as individual counters are concerned, I believe we can go ahead and take a long position in Motherson. Now, this counter has been showing decent strength, has been forming higher top, higher bottom kind of a structure recently. I believe one can keep a stop around 115.75 and expect a target of 124. Apart from this, Siemens looks good. This counter as well has been forming a decent, higher top, higher bottom kind of structure and has managed to surpass the resistance zone placed around 3,300 zone. I believe we can see an up move at least towards 3,424 is the level which I'm watching for. So at this point in time, one can go ahead and long this counter as well. Keep a stop around today's low, that is around 3,300, and expect a target of 3,440.
All right, Sneha, thanks very much for joining in with your top picks. On that note, we're going to slip into a short break, but up next, we're going to discuss the market fundamentals with Mukul Kochar from Investec Capital Service. Stay tuned for that.
Well, the weakness in the rupee is actually helping a lot of these mid-cap IT names. So you have Birlasoft, which is up around 4.5%. Honeywell's doing extremely well. These are basically companies that get a fair amount of their revenues from overseas as well. Speaking about that, look at something like Samvardhana Motherson. That stock too has moved to the high point of trade. And alongside that, we have some of these pharmaceutical names as well, which are spiking. So companies which are more export focused now benefiting from the weakness in the rupee. That's the Pharma index, but individual stocks are doing a lot better. Let's welcome Mukul Kochar from Investec Capital to discuss the market fundamentals, his top sectoral picks. The last time we spoke, Mukul, you did like the banking space a fair amount, and you did believe that maybe private capex was some time away. Where do you stand on right now? And also the weakness in the rupee, does that open some avenues for the export-facing names?
Yeah, thanks a lot for having me. See, let's just talk about the weakness in the rupee right now, because in the near term, and the US trade treaty is a very important marker for that. Near term being, therefore, the next 1 to 2 months as we finalize the treaty. The rupee dynamics will be one of the strong sort of drivers of market performance. On the rupee side, absent of the US, trade deal, the tariffs are quite high, which is discouraging trade with our largest trading partner. Therefore, we have gone into a current account deficit. Yeah. Now, a current account deficit at a time when FDI outflows are very strong, which means that the capital account is unable to support. Our capital account, the most stable driver of which is foreign direct investment, today is neutral, which by definition means our current account needs to be neutral. But because of the disruption caused by the US trade treaty, we estimate, absence of a trade treaty will be $60–70 billion current account negative. This is what is causing the pressure on the rupee, the balance of payment imbalance on a monthly basis, which the RBI is trying to manage, but honestly cannot manage for a long term, is the real dynamic today. Yeah. So that is the reality. I think it gets resolved if we get a reasonable trade treaty in place, but that is taking its own sweet time. Earlier we were hearing that it will be announced in November. Now, last few days it came out that it may get pushed to December. And given that these treaties are difficult to negotiate, there may be further delays. In the meantime, the RBI is managing the level of rupee, which honestly is a difficult task. Yeah. So this is going to be the prime center topic of discussion, I think, in markets till we get the trade treaty signed, and therefore will influence markets. On your question on, yeah,
go ahead.
Yeah, on your question on the private capex cycle, somewhat related. There is substantial ammunition and firepower with companies today for investment, and I will just give you one number on that. The difference between the capex of the BSE 500 companies and the profit they make today is roughly 7 trillion rupees. Yeah. Historically, this difference has been zero. Yeah. So historically, that which means whatever profit the BSE 500 companies make, they invest back in the economy. But today, because profitability has been very strong post-COVID, the profit has gapped up, whereas capex is investing as much as it can, I feel, for the Indian economy without opening up a new market for the US. So while there is firepower available, while there is banking credit available, unless we add new market opportunities, I feel the private capex is going to grow at a nominal GDP pace 7 to 10%, because we are doing what we're doing. Import substitution is another 200 billion opportunity, but remember this gap, which is 7 trillion rupees, translates to roughly $80 billion. Even import substitution is not a big enough opportunity for this. Therefore, if we add US as a market through a trade treaty, substantial private capex, which is sitting on the sidelines, can come into play. And that is why last time we met, I said that till we sign the trade treaty, the private capex will also be anemic because there's no market to sell into. So these are the 2 points. Yeah.
Right. Mukul, so in that case, in anticipation of a potential trade treaty, would you believe that these export-oriented names which have US as a very major market, be it the textile names, be it the shrimp names, do you believe you should have some exposure to these kind of stocks? Considering the fact that they have been beaten down to that extent because of the tariffs and the resultant impact, do you believe that now, in case a deal happens, these will be the ones that would be the prime beneficiaries of that?
So almost, that's a fair trade, yeah. So probability based that we, that we get a treaty, the probability of that is high, yeah. The problem is that unfortunately currency management has become a daily task, yeah. So the probability that we get a trade treaty in some time frame is high. Therefore, for beaten down export names, I would say go and invest, because I'm also saying the probability of getting a treaty is high. The problem is the market is and the currency is fragile right now. So, and I don't know whether the currency can be managed for a period of 1-2 months, and that is the time that takes to get the treaty. So we will get interim volatility. It is just something that investors should be aware of. If they want to hedge and protect themselves against this volatility, that they can. But the probability that we get a trade treaty is high. For stocks that have corrected and probability based are good investments, absolutely go ahead and sort of buy those stocks.
Mukul, very quickly, running out of time, on the banking stocks, your view, especially in light of these comments coming in from the Ministry AOS Finance, to the Lok Sabha, that there is currently no proposal of merger of PSU banks on the table. This despite the Finance Minister, of course, earlier indicating that this is something the government is working on, but it looks like immediately it is not on the government's radar. How would you play the PSU stocks in that case?
So honestly, Ritu, the PSU banking space, I've generally found that to be very attractive over the last few years. Undeniably, they have their challenges. They have a social angle to them, given that they are government owned. But operations and policies regarding PSU banking space has improved substantially over the last 10 years. Yeah, they are very well capitalized. The NPAs are very well provided, 90 to 95%. Their cost of funding is as competitive as the private banks. Books are completely de-risked since they've been sort of just consolidating on their book for the last 5-6 years. I would contend that the books are in a better spot than a lot of private banks, and ROEs are 15%. In that context, I expect these stocks to re-rate further. Yeah, so in terms of returns, you will get the ROE return, which is return on equity of roughly 15%, and any re-rating that you may get. So this is an attractive space to invest. And the fact, if government is saying that there's no disruption that comes from mergers, should give investors some sort of comfort that they can just invest based on fundamentals, and government action is less of a factor that they need to sort of account for when they invest.
All right, as we speak of the banks which are gaining right now, PSU banks form a fair amount of a chunk right now. If you look at the private sector banks, obviously they're buoyed down by the changes in the Nifty bank weightage. So we have the private bank index coming up for you at the lower end of today's trading session. And on the other side, if the PSU bank index comes up for you, you'd see the outperformance. The private bank index down about 1/3%. PSU bank index, that's about 0.8% higher. So if you put both of them together, it's about 1.2% sort of outperformance that the PSU bank index is showing. Thanks a lot for joining in, Mukul. With that, we'll take a short break, come back, focus more on the markets as we speak. The Nifty virtually at the low point of trade, down about 112 points. Welcome back. You're watching us here on Trading Hour, and here's the FNO desk. So what are we looking at right now? The market is currently at the lower end of today's trading range, virtually at the low point of trade for the Nifty. Now, from yesterday's high, it's corrected about 300 points, so just watch out for that one. The Midcap index too, marginally in the red right now. And what is at the high point of today's trading session so far is the India VIX, which would come up for you up around 2.5%. And that's actually ahead of the weekly options expiry, and market breadth too, firmly in favor of declines. Where that moves, something that we will be tracking as we move along the course of today's trading session so far. Just keep an eye out on a few of these buzzing stocks. We have GSPL, which is doing well. Balkrishna Industries is doing well. Birlasoft and MRF. So a couple of these tire makers and a few of them which actually get their revenues in dollars. So all those counters are fairly well bid today. But the interesting part is from the options side. On the way up, there is definitely strong supply. 26,100 call writers, fairly active in today's trading session, premium of 24 rupees. So immediately about 26,100 is where the supply is likely to come by. 4.7 crore shares outstanding on that strike. But at the lower levels, if you look at the 26,050 put, there has been a big jump in the price of that option as the market moved lower. It's a 48% jump. Moments ago, it was 24%. So all these guys have made their money. At what point did they book will be extremely crucial to track. The 26,000 put, on the other hand, was mostly in the red for today's trading session and now just has seen an 80 paisa up move, which tells you that there is still some selling at the 26,000 put, which implies that there is support at around 26,000 even as the markets moved fairly lower. So those are a couple of levels that we'll be watching out for. And then there is a pair trade which is taking place in the PSU Bank space, fresh longs in Union Bank, whereas a lot of shorts added in Indian Bank. So those are a couple of stocks we'll watch too. Actually, we'll take a short break, come back, keep an eye out on the markets.
At the lowest point of the day is the index now 130 points lower, below that 26,050 mark. We are heading into the second half of the trading session. The broader market still trying to hold out in the green. Take your leave on this edition of Trading Hour. From Mangalam, Ritu and me, thank you for watching. Halftime report on the other side.
A weak rupee continues to pressure stocks which opened weak but steady after the fall amid expectations of some volatility due to F&O expiry on NSE. Financials and healthcare are the big drags, while telecom stocks see some green.
Rupee slips to a record low against the dollar, making it the worst performing Asian currency in 2025. Disappointment over a delay in concluding the US-India trade deal and continued foreign investor selling weigh on the rupee.
Wockhardt Chairman Abel Khurakiwala says Zynic can notch peak sales of $2 billion globally, and he believes Wockhardt will enjoy patent protection for 10 years.
Telecom Minister Jyotiraditya Scindia tells CNBC-TV18 a proposal from Voda Idea on AGR relief is awaited and the government should be able to review and recommend relief in about 2 weeks after. He clarifies that any other telco seeking similar relief will need to approach the Supreme Court.
And soon, all phones in the country will host the Centre's Sanchar Sathi app, which aims to protect users from fraud and phone theft. But what's concerning users is the access it will have to their personal information.
Hello, good afternoon. You're tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala with my colleagues Ekta Batra as well as Sonal. Sonal, Ekta, both of you all, good afternoon. Sonal, great to have you on the show. I'm happy I'm anchoring one more show with you. But markets today, not that exciting. Yesterday, we ended up almost in the day's low as well. Today, we've seen a further decline. And 26,000 is just what we are managing to hold on to. Even right now, you know, when we're seeing TH ending the show that time, and look at the mid-cap. From the green, it's moved down to the red as well, just in the last few minutes. So that is something that we'll be keeping an eye out on. And rupee, obviously, that's at record low levels as well.
Hi, Sonal. Welcome to the show. I'm glad to be a member of the girl gang. So finally, yes, that's good to know. Yes.
But go ahead.
Yes. No. So at the day's low, 26,051. That's the mark that we are looking at. And, you know, the low today was 26,040. We've recovered a tad bit from that, but that's nothing to write home about. We have mid-caps, which are down 0.2%. All the indices are in the red today, barring something like a PSU banking index that's batting it for the bulls but failing. And we do have the energy names as well, which are in the green by a tad bit, but a lot of stocks which are at the day's low. We have something like an Eternal, Shriram Finance, SBI, Reliance Industries, which is a big weight on the index, which is at the lows of the day. And all these stocks are putting further pressure on the Nifty. And of course, the big story that we'll be tracking very closely will be the rupee fall approaching 90. So that is something that has led the discussions going. We'll understand more about that. But for now, across the board, there's a sea of red now.
Absolutely, guys. Well, it is definitely the rupee which is really weighing down in terms of the equities. And you saw that in yesterday's trading session, and you're seeing that continue today as well. So it's hit a record low of around 89.92. So it's recovered from those levels, possibly because of the RBI intervention. But remember that it is the worst performing currency that we have in Asia in 2025. If you look at the emerging basket, we've only performed better than the Turkish lira and the Argentinian peso. So that's where we stand at this point in time. In 2025 itself, the rupee has weakened 5% against the US dollar. So that's exactly where we are at, and just about 8 paise away from that 90 mark if you just consider it from the day's low that we hit today. But nonetheless, let's in fact just talk a little more about the markets at this point in time and get to maybe the rupee again. Maybe that should show up for you, because there was a slight bit, I think, of a move which took place there. But nonetheless, for the markets, we are at 26,053. So at the low point of the day, and if you look at it, even the mid caps are now showing pressure, so down around 0.17% currently for the mid cap index. In terms of the key constituents for the Nifty, maybe that should come up for you. We do have a couple of stocks such as Eternal, HDFC Life, ICICI Bank, all of them showing accelerated declines at this point in time. The Bank Nifty currently down around 0.3% as well. But maybe we can get to Vivek now. He's going to take us through a lot of stocks which are moving within the framework of what is a weak day for us. So Vivek, just take us through a couple of these stocks which should be on our radar.
Well, that's right. Like you mentioned, it's the market breadth that's a little concerning, more declines than advances, especially the last hour and a half. In terms of individual names that we are tracking currently, well, first on the list with both Union Bank as well as Yes Bank, post yesterday's NSE circular that has come in terms of capping the weight as far as individual constituents of the Nifty Bank Index is concerned. Both of these stocks now stand a chance to go ahead and enter the NSE Bank Index. On the back of that, both of these stocks doing quite well. Along with that, the entire PSU banking pack, especially in the last half hour or so, continue to make a little bit of an up move. So names like PNB, Bank of Baroda, Canara Bank, all of them trading with gains today. On the other hand, Info Edge on Naukri, yesterday came out with the Naukri JobsPeak Index, some strong takeaways, especially in terms of the year-on-year growth on this lower base, almost 23% higher. The back of that stock higher by 1.5%. Vocard yesterday hit the upper circuit. Today we had the management again. They spoke about the very high opportunity as far as Zenix is concerned, higher by 3%. And both Gujarat Gas as well as GSPL, both of these names after a while doing very well in the session today. On the other hand, quite a few laggards as well, none more than Bajaj Housing Finance, almost 2% equity, promoter sparing stake, that stock low by almost 6%. Agarwal Eye Hospital, one of the top laggards as far as the NSE 500 index is concerned. And yesterday, a stock that saw a sharp up move of over 12%, ZFCNV, that particular stock today seeing a bit of a profit booking down over 1.5% today.
Okay, Vivek, thank you so much for that. Surely we'll be keeping an eye out on all those names through the trading day as well, and if we see any further movement here. But on that note, we're going to slip into a very short break. Up next, we'll connect with Kanika Pasricha, Chief Economic Advisor at Union Bank of India. And this is obviously as rupee is hit that fresh record low. We'll have a discussion with her and understand what are the effects and where RBI rate cuts would come in at, by the end of the week. Stay tuned for that conversation.
Welcome back. Well, 26,055 is currently where the Nifty is at. We also have the Sensex, which is down around 400 plus points at this point in time. And one of the key reasons is the weakness that we've seen in the rupee. Remember, the rupee has touched over 89.9 in today's trading session on an intraday basis. In fact, back at around 89.91 as we speak. To talk more about it and what the macro setup looks like, we have with us Kanika Pasricha, who's the Chief Economic Advisor, Union Bank of India, joining in. Kanika, hi, welcome to the show. Well, while the rupee has depreciated around 5% on a year-to-date basis, there's been an accelerated fall which has taken place just in the past 2 days, inclusive of today, albeit we don't know where it closes. But give us a sense in terms of the reason for this sudden depreciation we've seen in the rupee.
Thanks, Ekta, for having me. And I'm sure there's been a lot of discussion on rupee since the start of the day. And everybody's saying that December has started. We have seen that liquidity in markets start to fade slowly because foreign investors, the holiday season, before start of the holiday season, start booking profits on their positions, if any. And second most important is that the trade deal timing. Of course, compliments to the government, they're working in our national interest. Initially, there was some optimism of November end being the trade deal timing. It shifted to end of 2025 as guided by ministry officials. So the exact timing of trade deal on close watch, which is why near-term overshooting purely on the basis of low liquidity in markets cannot be denied, and we see the levels where they are currently. However, once we see any optimism back on trade deal, that may lead to some reversal. Thanks.
So what kind of levels are you targeting or guiding for, considering the macros? And also, do you think there could be some intervention coming in from the RBI?
So thanks, Sonal. Basically, we think that RBI is always committed to containing volatility in the currency. So while the levels are not known, the data comes out with a lag. But for the past few sessions, RBI has been active in the market as per media sources. That's one. Second, on technicals, of course, if 90 gets crossed, while the RBI is very active, just technically 89.90 was an important threshold. And if the levels get crossed, there can be some overshooting. Fundamentally, Sonal, there is a model that we track. That is that on a 3-year basis, fundamentals get respected very well. And a 3 to 4% average annual depreciation is seen in the rupee on a 3-year basis. Now, the 3-year cycle was FY21 till FY24, where we saw around 10 to 11% depreciation in the rupee, moving from 75 to 81, 82. Now, the next cycle has started. Last 2 years, rupee moved lower by 4.5%. So this year, 4.5% move at least was aligned with fundamentals, and we were always calling for an 88, 89 mark on the currency. So near term overshooting likely in levels, but as we said, by March end, correction back expected in USD INR, assuming an optimism on trade deal back in the markets in the next few weeks.
Okay, assuming that, there is some optimism, then we could see the reversal come again by maybe March, and March 2026 is what we are keeping an eye out on. But, just in the near term right now, given that we do have the RBI's rate cut decision, which will come in at the end of this week as well, any change in terms of that, or could we expect a rate cut? What are we keeping an eye out on? Because if there is a rate cut, then we could see further more of a bit of pressure on the rupee then.
See, it's both ways. What happens is that even economists and academics are divided on impact of a rate cut on the currency. Is it that the interest rate differential gets affected with the US and that leads to an impact on USD INR, or is it that the rate cut buoys growth, gets some flows back into equity markets? So I would say from the Monetary Policy Committee's perspective, when there are adequate reserves, then the degrees of freedom of Monetary Policy Committee to reduce rates, even though there's pressure on the currency and that takes the hit, it is likely. So the currency does not become the critical part of monetary policy reaction function. It's more dependent on inflation and growth. Now, coming to our call on 5th December, see, we are calling for a rate cut of 25 basis points. We are holding on to a long-standing call. Completely acknowledge that there is a chance that the RBI-led MPC thinks otherwise. In fact, last 1 to 2 rate cuts in any easing cycle, timing becomes very difficult to predict. But very important, from bond market perspective, we think that rupee-led spot intervention impact on liquidity, which is weighted off some 3.5 to 4 lakh crores on an FYTD basis, just purely on that basis, the RBI may at least give a liquidity assurance, or maybe announce specific measures like open market operations, which can be positive for bond markets as well. Thanks.
Okay, all right. Just a two-part question. If in case, according to you, Kanika, how soon can we probably hit 90 on the rupee, according to you, based on the kind of accelerated depreciation we've just seen the past 2 days? And if we do cross 90, what are we talking about in terms of the next level where we could probably stabilize at?
So, Ekta, we've all been in markets for long. Whenever we see volatile moves in currencies, even though central bank always stands there and assures that currency volatility is contained on intervention impact, the levels become very difficult to predict. Moves can happen today. We can wait for 3 more days for the RBI decision. It all depends upon the extent of short positions that are being booked today from a rupee perspective. That's one. Second, if rupee crosses 90, technically the levels, our traders were talking about, can be 90.50, 90.70 as well. But I would just say, let's not go by levels during volatile market moves. Yes, the near-term overshooting trend is at play. It will get contained around 90.40, 90.50. But I'll just say one point is that purely from rear undervaluation perspective of 90, it's around 97.50, 97.60, around 2.5% undervalued. Even though there is a case for inflation rising in the coming quarters, it's unlikely to rise sharply. So case for runaway depreciation in the currency is very capped. We don't see moves beyond maybe 90.40, 90.50 on a technical basis. And in fact, we don't see much and these levels sustaining.
Kanika, just a quick word, because it's said fundamentally also, every time there's a 3-year cycle, right? You were talking about in terms of depreciation. That's around 10% that you see in 3 years. So right now that 10% is done for the time period and we'll not see anything further, right? And if we see something further, then that's a one-off case.
Yes, that's sentiment-led overshooting.
Okay.
And that does get corrected eventually, which is why we don't see these levels sustaining. We hope that the trade deal gets finalized at least before March end. In fact, if it happens in December, even better. So that will lead to a threshold shift back in the currency in our view.
Take that point, Kanika. Thank you so much for joining in. US-India trade deal that, of course, not only the bond market or rupee market, even the equity markets are watching out for. So we'll watch out for that. And as you said, wait for 3 more days to see what RBI has to say about this. Thank you so much for joining in with your insight and the outlook on rupee levels as well. Time for a break now. Ajit Mishra of Religare Broking will join us on the show with some trading strategies and some individual picks. Stay tuned for that. Welcome back. Continues to be a down day for the Nifty. So let's get in some F&O trends going. Mangalam Malu is joining us with all the details. Mangalam?
It's a down day, but the market seems to have moved around this 26,050 mark for the frontline index ahead of expiry, and that's the range that now the street is expecting could play out as we move towards the expiry as well. The Nifty bank is slightly under pressure. The Midcap index, yes, down by 90 points, but at a percentage on a percentage basis, it's a relative outperformer. For brief periods in today's trading session, it did go into the green as well. The advanced decline, that's the bigger problem there. Two stocks declining for every stock which is advancing, but there are pockets of outperformance. The biggest of them all is because of the weakness in the rupee. Those who get revenues in dollars are doing fairly well. So you have names like Birla Soft, you have Samvardhana Motherson, a couple of these pharma names as well, Glenmark Pharma, all of them outperforming in an otherwise wobbly market. Tire stocks are also doing fairly well. So you have Balkrishna Industries, MRF, Apollo Tyres. So that's one pack which is fairly well bid. Balkrishna, of which gets a fair amount of their revenues from the exports. And we have PSU banks which are outperforming as well on hopes of higher weight on the Nifty bank, and as a result of which higher inflows too. But if you look at the active options, that tells you that maybe the option writers believe that the range would be 26,000 to 26,100. Why? Because on expiry day, you see a lot of straddles being written. The 2650 straddle is extremely crucial. So 26,050 call has a premium of what, 47 rupees. 26,050 put comes up for you. That has a premium of 26 rupees. Add both of them together, you are looking at a 75 rupee band on either side of 26,050, and that is further cemented by the action that we're seeing on the 26,100 call and the 26,000 put. Both of them extremely active with over 5 crore shares in open interest. So 26,000 or 25,980 to 26,000 is support, and 26,100 to 26,120 is the resistance on the index today.
Okay, Mangalam, thank you so much for that. Surely we'll be keeping an eye out on more updates in terms of the support, resistance, and if any change comes in through later part of the day as well. Okay, we do have some flashes that's coming from the Telecom Minister as well. The Sanchar Sathi app is optional. It can be deleted if you want. That's the latest update. So firstly, there was a misunderstanding, I think, that we thought that it would come in no matter what on your phone. Because
or even if it is on your phone, I think it'll just be loaded on your phone and you can decide
whether to use it or no. But there was a bit of a confusion, I think, and now this seems like it's a clarity as well, that even if it comes in with your update, maybe you can delete the app as well.
It's up to you whether you want to use it or not.
So that is the latest update that we have, and this is from the Telecom Minister himself. But let's move on and keep it going with the markets then. We have Ajit Mishra, Senior Vice President, Research, Religare Broking, joining us now to talk on the technicals. Ajit, good afternoon. Thank you so much for joining us on the show. Mangalam was mentioning some support and resistance level as well today. But if we break that support, then what should we watch out for? Nifty, Bank Nifty, what are you keeping an eye out on?
Good afternoon, Vinny. So yes, in fact, it's been almost 3 days now that after making a new record highs, markets were witnessing consolidation in a very tight range. Today, we are seeing a bit of profit taking in the banking index, which was leading from the front. So it's a normal profit taking so far. Means if you see from August onwards, we are seeing that market witnesses a strong directional move followed by a retracement phase. So this is what we are currently experiencing. The good part is that we are still holding above the 20 EMA mark, which is around this 25,950 level. So as long as we are maintaining above this zone, one should continue with the buy and dips approach. On the higher side, 26,300 is something that positionally is a key hurdle now. So the moment we surpass this, 26,500, 700 is something the market is going to attempt.
Okay, all right. Well, Ajit, just hold that line because we do have the Telecom Minister talking. So let's just cut across.
वो डोरमेंट रहेगा, डिलीट करना है तो डिलीट कर लो, पर क्या हो, एक मिनट, पर हर व्यक्ति को देश में नहीं मालूम कि मुझे फ्रॉड से प्रोटेक्ट करने के लिए, मुझे चोरी से प्रोटेक्ट करने के लिए ये ऐप है, तो हर व्यक्ति तक ये ऐप पहुंचाना हमारी जिम्मेदारी है. अगर आपको डिलीट करना है तो डिलीट कर दो, नहीं इस्तेमाल करना है तो रजिस्टर मत करो. जब आप रजिस्टर करोगे तभी तो एक्टिव होगा, रजिस्टर नहीं करोगे तो इनएक्टिव होगा.
इसका मतलब संचार साथी ऐप हम डिलीट कर सकते हैं अपने फोन में?
बिल्कुल डिलीट कर सकते हो आप.
सिर्फ इनबिल्ट ऑप्शन है, उसे आप डिलीट कर सकते हो.
आप उसको जिस तरीके से अपने फोन पे दूसरे ऐप को दबाओगे और कहोगे डिलीट, वैसे इसको भी दबा सकते हो और कह सकते हो डिलीट. चलिए, प्रॉब्लम क्या है कि विपक्ष कुर्सी के नीचे, कुर्सी के पीछे, कुर्सी के लिए मुद्दे ढूंढ रहा है. अब सभी भ्रमों को दूर करना सरकार की जिम्मेदारी है और सारे मुद्दे मैंने आपके समक्ष रख दिए कि आज तक पिछले 2 वर्षों में संचार साथी पोर्टल और संचार साथी ऐप के आधार पर कितनी सुविधा जनता को मिली है, कितना पैसा जनता का बचा है, और ये भी आंकड़े आपके सामने रख दूं। एक साल में 2024 में अकेले हमारे देश के अंदर 22,800 करोड़ रुपए के फ्रॉड हुए हैं। तो एक तरफ विपक्ष चिल्ला रहा है कि आप फ्रॉड कैसे रोकेंगे, दूसरी तरफ अगर संचार साथी का ऐप हमने आम नागरिक को दे दिया तो कह रहे हैं पेगासस। तो करो तो मरो, न करो तो मरो। तो जो लोग सत्य नहीं देखना चाहते हैं उन लोगों को हम सत्य नहीं दिखा सकते। जो लोग सुविधा इस्तेमाल करना चाहते हैं वो करें, जो नहीं करना चाहते हैं और डिलीट करना चाहते हैं वो डिलीट करें। प्रॉब्लम क्या है? थैंक यू।
Okay, well, making it absolutely amply clear that the app which we're talking about is completely optional at this point in time. It will be uploaded on your phone, the Sanchar Sathi app. It will be uploaded on your phone. It is your choice on whether you want to register on it and whether you want to use it going forward. Now, what it's going to do is that if in case your phone is stolen, it will help possibly block your phone, and hence your phone will not be able to be used anywhere, wherever it is located, even with a new SIM. And there's one more thing which can be done. For example, if in case you want to see which other numbers are being used under your name, those are the other options that are available on that particular app. But making it amply clear that it is absolutely optional. It's up to you whether you want to use it or not, and whether you want to delete it or not.
But just some updates, because people were worried whether your data will be used, which is stored on your mobile phone. So that goes away if you do not register for it, right?
Yeah.
So that is an important update, that your data will not be available for the authorities if you do not register for this particular app. And that is an important clarification, because data privacy or the privacy breach is something that was something that the users did not appreciate so much in the initial update that had come by. But let's go back to the markets after this important clarification that has come by. Ajit, you spoke about important levels on the Nifty and overall markets. What about individual stocks that you have on your radar?
Yeah, so considering that the market tone is still up, we are not seeing this correction as a reversal. So continue with the long side approach. IDFC First Bank, after this initial consolidation, looks set for the next leg of the up move. 86 is what we are eyeing in the near future. So with stop at 79, one can accumulate IDFC First Bank at current levels. Then from the pharma space also, we are seeing that gradually all these stocks, the rotational basis are catching up. It's turn for Glenmark to resume the rally. So 2080 is what we are eyeing as a target zone for Glenmark during this recovery phase, with 1920 as a stop loss.
Okay. Well, some news coming in on Spark. So I think Spark should also come up for you because the Spark stock is up around 7%. The US District Court has granted a summary judgment which is in favor of Spark for a particular drug, Sezibie PRV. So that's the reason why you're seeing the stock up around 14% reacting to this bit of news. And the summary judgment, I'll go through that and give you a sense in terms of how important it is. But it's in favor of Spark in the matter of issuance of a priority review voucher, PRV, associated with the approval of this particular drug. So that's the reason why you're seeing the stock up around 13.5%. Ajit, in fact, just wanted your thoughts on stocks such as Spark, Ease My Trip also, which is up around 17%. So these are a couple of stocks which seem to be shining in today's trading session. Also add HCC to the mix.
So Ekta, as we all know that the kind of underperformance most of these small cap names are still facing means while the markets at the record highs, we still have a long way to go when it comes to the small cap space. Some of these names like Spark, Ease My Trip, mostly stocks were trading closer to their 52 weeks low. Today, yes, being an exceptional day, that the volumes, price action both indicates near-term relief. So since the trend is overall still down, I feel that these kind of rebounds should be utilized as an opportunity to exit your longs if you are stuck.
Okay. Surely we'll be keeping an eye out on that. Thanks, Ajit, for joining us this afternoon and giving us, in terms of individual stock names, views, as well as the markets. But on that note, we're going to slip into a very short break. On the other side, Manisha Gupta will be joined by Ajay Goel, chairman at Wheat Products Promotion Society. Stay tuned in for that conversation.
Welcome back. Joining us on the show now is Ajay Goel. He's chairman at the Wheat Producer Promotion Society. Mr. Goel, thank you so much for joining in. First of all, your reaction to the wheat production numbers for Rabi, because the overall Rabi is up by, Rabi sowing that is up by 10% as compared to last year. And wheat clearly the best gainer apart from core cereals. We've seen 17% higher sowing as compared to last year. How are you reading the numbers to begin with?
Can you repeat it?
Mr. Goel, I was asking you on what is your sense on the sowing numbers that we are looking at?
I think there's an audio problem.
Mr. Goel, is my voice clear to you?
Yes, are you audible now?
All right. I was asking you on your sense on the Rabi sowing numbers to begin with.
So definitely the early year by about 10 to 15 days. So the run-up has been a bit quicker than previous year. So we could look at that area of about 3-4% higher than previous year when the ultimate number comes out for wheat.
Mr. Goel, what is your sense also on the overall government procurement that you're looking at? Because last year was the best that we saw in 4 years. There also are expectations that via OMSS, we could be looking at much of wheat coming out into the markets in the next couple of months.
I don't think much will come from the government because the market doesn't need the government wheat this year. There is sufficient in the system, and as far as the government stock is concerned, next year we could see on 1st June the government actually carrying over 50 million tons with a 20 million tons of a 30 million metric tons procurement. We could actually see one of the biggest surplus years of government stocking next year.
And in that instance, is there any possibility of at all that we might be looking at exports being opened up?
So definitely, I think the government looking at their stock next year will be compared to relook at the entire export ban that is going on. And on its own accord, the government might, just to manage its own stock, look at exports. And definitely that seems a 100% possibility in the next year.
I know, I understand the sowing is still on, Mr. Goyal, and these are perhaps early days, but are you also working with a record 117 million tons of a wheat crop for the coming season?
Yes, definitely. We are going to have our, highest output. Whether, it's just weather dependent at the end of the, just before the harvest. If things are all normal and good, we will surpass all our previous numbers, I guess.
Mr. Goyal, the other thing really is about the wheat product export that the government has talked about. What has been done on that front at point?
So the Food Ministry, Ministry of Public, it to the DGFT and the Commerce Ministry. The ball is in their court. People are hoping for an order very soon. It will be unfortunate if it doesn't come now because we are now heading to a big glut situation in the next 3-4 months. So we are hopeful.
All right. Also, how are you looking at the Indian demand going forward now? We do understand it is usually around the winter time that the wheat demand is on the stronger side. What is your sense on that one? And how much would you say is the private trade holding when it comes to wheat?
So I think the private trade continues to hold more than 4 to 5 million tons as on date. And I think private trade will also be carrying forward its own stocks by about 1 million or 2 in the next year because everybody was playing it very safe, looking at the past experience. And this year the demand has been pretty low. It's not come out as expected even after the GST cut, the good weather, the peak season for consumption. There doesn't seem to be any extra demand or any push in the market.
So, Mr. Goyal, if you were to compare it with last year, what is the kind of wheat demand that the current year has seen then? Is there are you saying it's a slow growth, it's a degrowth? What is it like?
I won't be surprised if it's just static. I don't think it's a degrowth, but definitely there is hardly any growth. I would put it in that bracket.
And that is the case for baked products as well, food processed?
Across the line, flour consumers like be it biscuits or breads or noodles, all subcategories put together, there doesn't seem to be any traction.
How are you looking at the prices as well?
Prices are quite subdued all over India because of lack of demand and oversupply situation, almost a glut in the wheat market. And this whole year has been flattish, very flat. We are at the same price level at which we were at the start of the season.
How are you then looking at the markets going forward? I mean, we're looking at a bumper crop yet again. Government is holding record numbers as well. Not record numbers, but the highest in 4 years. And as you said, we perhaps could be looking at the biggest number ever. How soon would you say could be a review when it comes to exports going forward?
Government has been promising to review, and there was some ray of hope when the Food Ministry recommended to the DGFT. Everybody was hopeful of an order, but even that has not come. So there is total inaction as far as wheat policy is concerned currently. And of course, the government has opened up OMSs, but at half the frequency to normal years. It's now coming out once in a fortnight, and less than 1/3 of it is being sold. So there is a big disinterest in this market because anybody who has put in money on wheat this year has only lost it.
Okay, an interesting chat there. Mr. Goyal as well as Manisha, thank you so much for joining us. And Manisha, thank you so much for taking us through that conversation as well. But on that note, we're going to slip into a very short break. On the other side, we'll focus on work hard, which has been buzzing in trade. Stay tuned in for that. Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is at 26,060 levels, down 112 odd points in the trading session as of now, just near the day's lowest point. So we'll be watching out for that. But let's shift focus and talk about Walk Hard. Yesterday, the stock was passing in trade. Today also, it's seeing some bit of an uptick of around 2 to 3%. And obviously, there's news flow that came in. US FDA accepted their NDA for Zenec. But other than that, we also managed to speak to the management as well today.
Well, yes, a couple of important takeaways, and this is our Insight Edge segment on the show, where Walkhard has said that they expect approval by the mid of next year from the US FDA. They will need 4 to 5 months post approval to probably iron out any kind of incremental issues and maybe possibly launch it after that. Now, the file is complete according to the company, and only an evaluation is required by the US FDA. So that's important because they won't have to conduct any further clinical trials. The US FDA is visiting sites, for example, where the drug will be manufactured. So they are in constant touch with the US FDA on Zenec. Also, the US FDA is committed to a timeline when it comes to fast-track approval. So because this is under fast-track approval, they are expecting this to probably come through in a couple of months or in a certain timeline, because the US FDA believes that this is an unmet need, and hence this drug would be important for the US healthcare system. Now, Zenec has been used in more than 70 patients on a compassionate basis. It's used on 3 patients in the US and the rest in India, and the success rates have been good as per the company. The fundamental basis of the approval, however, is going to be based on preclinical and clinical work. Zenec would have a patent for at least 10 years if in case it does see the US approval. They've only applied in the US and India for Zenec because once you get the US approval, it's easier to get approval in other markets. The Zenec file, interestingly, that's what the management said, is that it's not yet opened in India. They've reached out to the regulators on it. The market potential, according to the company, is more than $1.5 billion globally. Zenec should probably record $1 to $2 billion in terms of peak sales globally. And US generally is around 40% of those peak sales, which is recorded by a drug globally. Now, India should probably see more than 150 crores of sales from this particular drug. So that's the management talking on Zenec, which is going to possibly be a big opportunity according to them. Listen in to Habil Karakiwala. We had a chat with him earlier this morning.
For the first time for us and for India, a new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US. There's only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product. This drug has proved a remarkable efficacy and safety, because one of the important things in antibiotic is normally not given for a week or 2. It was given longer time because the patient came at a very last stage. Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
All right, that's the word coming in from Walkhard. The stock has come up from the highs but continues to be in the green in a weak market. Let's do one thing. We'll slip into a short break. When we come back, we'll get you more on markets and a lot of stock-specific action on the other side. Welcome back. You're still tuned into Halftime Report. There was some recovery, but that has been sold into. The Nifty is down 125 points at the day's low, actually. Even the mid-caps are not seeing the recovery that was anticipated. So a lot of pressure coming in from these benchmark stocks. We do have Hindalco, which is at the day's low. Interglobe Aviation is the other one. L&T2 is lower in trade. These are some of the stocks that I'm talking about, which are at the day's low as we speak. SBI, we have seen PSU Banking Index doing well, but that stock too, despite being in the green, has come off from the highs of the day. So we'll watch out for that one. ITC, Infosys, all these names too on our radar. Nifty Bank has seen that sharp fall from the highs of the day. 170 points gone on the Bank Nifty, and a lot of these constituents leading to the pressure that we are seeing on the Nifty Bank as we speak. But let's talk about an important update. NSE has released final guidelines to align with SEBI's weight concentration requirements. Vivek is joining us with all the details, with the indices and the stocks that tend to get impacted because of this update. Vivek.
Well, that's right. So overnight, NSE has come out with a circular. They've released the final guidelines, like you mentioned, to align with SEBI's weight concentration requirement. SEBI, remember, had asked NSE to reduce concentration of weights in indices of stocks that have underlying future contracts as well. So under the revised method, top three constituent weights will be capped at 19%, 14% and 10% respectively. For Nifty Bank, the weight adjustment will be implemented in 4 tranches starting end of December 2025. Now, when you're talking about the stocks that will be impacted, Yes Bank and Union Bank are likely to make their way into the Nifty Bank Index. Yes Bank likely to see inflows of over $100 million and Union Bank of over $80 million. Remember, the number of constituents in Nifty Banks will go up to 14 from the current 12. On the other hand, by reducing the weight of HDFC Bank and ICICI Bank, that is how space will be made for both Union as well as Yes Bank. So HDFC Bank and ICICI Bank could see outflows of a little over 330 million each in order to support the rejig as far as Nifty Bank is concerned.
Okay, all right, Vivek. Thanks very much for that. So that's on Nifty Bank additions. But on that note, we need to wrap up on Halftime Report. Stay tuned. Business Lunch will take all the action forward.
A weak rupee continues to pressure stocks which opened weak but steady after the fall amidst expectations of some volatility due to the weekly expiry on the NSE. Financials and healthcare are the big drags while telecom stocks see some green. The rupee continues to slip to a record low against the dollar, making it the worst performing Asian currency this year. Disappointment over a delay in concluding the US-India trade deal and continued foreign investor selling continues to weigh on the currency. Wockhardt chairman Habil Khorakiwala says Zynic can notch peak sales of $2 billion globally. He hopes to get an approval from the US FDA in the next 4 to 5 months and believes that Wockhardt will enjoy patent protection for the next 10 years. Telecom Minister Jyotiraditya Scindia tells CNBC-TV18 that a proposal from Vodafone Idea on AGR relief is awaited and the government should be able to review and recommend relief in about 2 weeks from now. He clarifies that any other telecom company seeking similar relief will need to approach the Supreme Court. And quelling concerns over privacy fears following a circular calling for all phones to host the centre's Sanchar Sathi app, the Telecom Minister clarifies that registering the app is optional and users will have the right to delete it. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia, and yet another day when the markets are at the lowest point of the day, pressured by the currency. The Nifty has now broken below key support levels. We were talking about 26,100, 26,150, convincingly below those levels now. At the lowest point of the day is where the index currently stands, and every intraday recovery that we have seen today has been sold into. We saw one between 10 to 11, that got sold into, and that very brief recovery that we saw just a few minutes earlier has been sold into as well. Reliance Industries, ICICI Bank and HDFC Bank, the three index heavyweights turning out to be the biggest drags on the Nifty today. HDFC Bank and ICICI Bank, of course, for reasons of their own, but Reliance Industries, of course, contributing 33 points to the downside on the index. The broader markets, surprisingly, have remained relatively calm amidst this sell-off, as has been the concern over the last few days. But even now, the Midcap index has now slipped to the lows. 0.2% lower, yes, but significantly off the highs of the day. It's almost a 300-point drop from the day's high. And the small cap index too has seen a drop of over 100 points from the highs of the day. Just pull up the rupee and the advanced decline. Of course, the line continues to widen. The gap continues to become a bigger yawn in favor of the declines. The rupee comes into the picture now. 89.86 is currently where the currency stands. 89.95 was the intraday low, inching closer to the 90 to the dollar mark, marking a 35 paise or a 0.4% fall today. The reasons continue to be the negative sentiment from the FPI outflows. The RBI is believed to be supplying dollars, but in modest amounts. Lata is here with more on this. Lata.
Well, first the numbers, 89.50 overnight, and now 89.95, so pretty close to the 90 mark, about a 40 paise fall or a 0.4% fall. Could become even a 0.5% fall. The slide is, the reasons are not new. The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is supplying dollars. Closer to the 90 rupees per dollar mark, even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
Well, Lata, thank you for that update there. Still closer to the mark of 90 to the dollar is where the currency stands. Earlier, we did speak to some experts on the slide that the rupee has seen, and we also asked them about a possible impact of a trade deal with the United States on the currency. Listen to what they had to say.
I do think 90 is very much on the cards for the rupee. Look, I think the biggest factor is us not having a trade deal, at least by the expected timeline. Now, there's a whole lot of uncertainty as to when the trade deal would happen, which means that not only a future economic growth is at risk, of course, we are also experiencing a widening of the current account deficit. Capital flows remain deficient. So all of that points to an adjustment in the currency, which is also warranted from an economic perspective. I therefore do think until we have a trade deal and we know its fine print is actually favorable for India, the rupee should continue to weaken at a moderate pace.
I'm not seeing, there's a lot of expectation about the US trade deal getting done, and that's sort of getting built in. And that's the reason rupee is not really flown. So in case there's any negative news, then I think you can really see a spike. I was also talking from a technical angle. I think because it's already breached the all-time lows, the rupee, I think it has a potential to go anywhere between 90 and 92. I'm not saying it's a done deal, but it's a probability which I will lay almost 60-70% weight on that.
I don't think that the rupee in itself is the dominant driver of the interest rate decision. I think that, if you recall, even in February, earlier this year, when the rupee was close to or had just breached 88 levels, the RBI, went ahead and started its rate cutting cycle. So, I do believe that while, yes, rupee volatility, rupee pressures are important, I don't think that they are the dominant factor. I think that the RBI, the upcoming policy, will perhaps focus more on assessing what is happening to domestic growth, not just in terms of what has happened so far, but also perhaps be a little bit more forward-looking. Try and assess the implications of US tariffs, since we still don't have a trade deal. I don't think that the rupee in itself is the dominant driver of the interest rate decision. I think that, if you recall, even in February, earlier this year, when the rupee was close to or had just breached 88 levels, the RBI, went ahead and started its rate cutting cycle. So, I do believe that while, yes, rupee volatility, rupee pressures are important, I don't think that they are the dominant factor. I think that the RBI, the upcoming policy, will perhaps focus more on assessing what is happening to domestic growth, not just in terms of what has happened so far, but also perhaps be a little bit more forward-looking. Try and assess the implications of US tariffs, since we still don't have a trade deal.
Shifting focus now to the crypto space, where an intense sell-off is currently underway. Manisha is here with more on this. Manisha.
Oh, well, absolutely. If you look at the last 24 hours, the cut only has gotten deeper here. With the way what we've done in the last one day has been the biggest one-day decline that we have seen since the month of March there. So take a look at the overall numbers then, and the market cap for Bitcoin or other cryptos has declined to below $3 trillion now. The all-time high that we've done in this year has been to the tune of 4.4 trillion. So clearly a very sharp decline coming in as far as the money seems to be moving out of this space also. If you look at overnight, again, it's 16 million worth of longs liquidated in past 24 hours when it comes to Bitcoin. But when you talk about the overall exchange liquidation, that number is quite huge to the tune of $400 million there. Well, we have seen decline in futures volumes and open interest as well, telling you exactly that the money seems to be rotating out in the other asset classes, but not staying in crypto is what we've seen in the last couple of days here. Well, the sell-off in crypto has resumed for the month of December. The risk-off sentiment that we have seen in broader asset classes seem to be impacting this space as well. And when you look at the shares and digital asset-related stocks in the Asian markets, well, they clearly have declined quite sharper. And this has come in after the People's Bank of China warned of illegal activities relating to digital currencies, and that has led to a sell-off across Asian markets within exchanges there as well. The other thing that the street will watch out for is the Bank of Japan on whether or not it hikes interest rates. The bond yields in the meanwhile have hit a 15-year highs, impacting this space as well. If you look at the overall large leverage positions, they still are holding, telling you that a further decline in cryptos from here on, if any of these positions were to unwind, could be even deeper. So leverage across Bitcoin exchanges is up to 200 times in some of these instances. If you look at the crypto futures therein, there's an estimated $787 billion of outstanding leverage there as well. And when it comes to ETF, well, the outstanding positions on that one are to the tune of $135 billion as well. When you look at the last 1 month, the cuts have been quite deeper. As you can see, whether it's about Bitcoin, Ether, Polygon, we're down anywhere between 20 to 30% on this. And that pretty much has been the case with other high market cap cryptos, where you have Cardano, Solana, Binance down anywhere between 13 to 30% yet again. So the last 1 month, last 1 week, the current year, all trading into the negative for many of these cryptos.
Manisha, thank you for that update. Worst day for Bitcoin since March, and now below the mark of 85,000 is where the cryptocurrency fell to. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Some recovery seen in Bajaj Housing Finance from the lows of the day. At one point, the stock was down almost 9%. And since then, the stock has recovered ever so slightly from the lows of the day, still hold losses of around 6% in today's session. And of course, this comes after the block deal that took place today. Promoters were the sellers. And from its post-listing high of 188, the stock made a 52-week low of 95 rupees. And that means that the stock from the post-listing high is down 50%. It has halved from those levels. Remember, Bajaj Housing was the most bid IPO of the country at one point of time when the issue came out in September of last year. 7 times was the retail subscription. The overall subscription stood at 63 times. The plates need to be flipped here. And of course, the bigger factor is that even after selling the 2% stake that the promoters sold today, they still own over 86% in the company. So even then, there is still this overhang of promoters likely to sell another 11% stake to be compliant with the minimum shareholding norms, which lies around 75%. So mutual funds don't have any significant stake in the company. Who has it? The retail investors. Now, at the time of listing, the retail investors in Bajaj Housing stood at around 17 lakh with around 6% holdings. That number within the next quarter itself, and that is when the stock had moved from 70 to 170 and then about, and that number had moved to 26 lakh. Currently, the number stands at 24 lakh, but the retail shareholders have around 8% stake in Bajaj Housing. Of course, promoter stake sale remains the biggest overhang as and when the timeline as to when that will happen. The stock is now nearing its IPO price, that is 70 rupees, and the promoters, more importantly, are selling stake when the stock is at a 52-week low. So that is something that needs to be taken into account. It will be interesting to see who are the buyers in today's transaction. But for now, Bajaj Housing, one of the casualties of the day, 6% lower on the stock. Now, sources are telling CNBC-TV18 that Mastec's promoters are looking to sell some stake in the company. Rachna, who had this news break in the morning, is joining in with more. Rachna.
Sources tell CNBC-TV18 that Mastec Promoter Group is exploring the sale of nearly 20% stake in the company. Now, this is significant because of the promoters currently holding about 36%. So, the sale being contemplated is more than just a routine dilution. It could meaningfully reshape the shareholding structure. What's also noteworthy here is the pricing. Now, people in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of this sale that has 2 big triggers. First is succession planning, and the other being the broader effort to bring leadership stability after a year of major top deck changes. And that's important context because Mastec has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts, where Raghavendra Jha became the CFO in May 2025 and Deepak Keria took over as CFO in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset and the one that aims to give the company a steadier foundation as it leans into its next phase of growth. According to sources, the promoters are also sounding out a mix of strategic investors and long-only institutional funds that align with Mastec's revenue footprint, where nearly 65% of the business comes from the UK and Europe. Mastec was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar and the late Sudhakar Ram. As always, we did reach out to the company for a response, but Mastec declined to comment on CNBC-TV18's queries. Back to you.
Rachna, thank you for that update. And Mastec, after the news, beg your pardon, after that news break earlier in the day, the stock had surged almost 4%, has come off the highs since then, is now back around the flat line. Now, Wockhardt is the other one. The stock was up almost 20% yesterday, extending those gains in today's session as well. That's after the US FDA accepted its NDA for Zynic. In fact, Wockhardt chairman Habil Khorakiwala said that Zynic can notch peak sales of $2 billion globally. Listen into what he had to say.
For the first time for us and for India, a new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US. There's only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product. This drug has proved a remarkable efficacy and safety, because one of the important things in antibiotic is normally not given for a week or two. It was given longer time because the patient came at a very last stage. Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
Off the day's high is Wockhardt, but still holding on to gains of around 2%. On to a CNBC-TV18 exclusive then, Telecom Minister Jyotiraditya Scindia has said that the government is awaiting a formal request from Vodafone Idea seeking relief on the AGR dues. When asked about Bharti Airtel, Scindia clarified that any other company seeking similar relief must approach the top court. Listen into what he had to say.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
Now, the Department of Telecom has mandated that all domestically manufactured smartphones will have to pre-install the Sanchar Sathi app on new devices. Now, smartphone manufacturers have a 90-day window to comply with the directives, and devices which are in transit or already in the distribution chain must receive the app via software updates. Now, the Sanchar Sathi app will have access to data, including all files and call logs, messages and photographs. The Telecom Minister, however, clarified this morning that registering on the app was optional and users had the right to delete it from their devices. Listen in to that remark.
अगर आप चाहते हो तो इसको आप एक्टिवेट करो, अगर आप नहीं चाहते तो इसे एक्टिवेट मत करो। सुनिए ना, अगर आप इसको अपने फोन पे रखना चाहते हो तो रखो, अगर आप इसको डिलीट करना चाहते हो तो डिलीट करो। कोई मैंडेटरी नहीं है। आप अगर रजिस्टर नहीं करना चाहते हो, मतलब कि उदाहरण के तौर पे इस ऐप का उपयोग नहीं करना चाहते हो, तो रजिस्टर मत करो, वो डोरमेंट रहेगा। डिलीट करना है तो डिलीट कर लो। पर क्या हो, एक मिनट, पर हर व्यक्ति को देश में नहीं मालूम कि मुझे फ्रॉड से प्रोटेक्ट करने के लिए, मुझे चोरी से प्रोटेक्ट करने के लिए ये ऐप है, तो हर व्यक्ति तक ये ऐप पहुंचाना हमारी जिम्मेदारी है।
And as we slip into a short break, here is some good news for our viewers. India's business news leader is now on your fingertips, and that is the CNBC TV18 all-new app. You can download the app from the Apple Store or the Google Play Store to access breaking news, in-depth articles and financial world updates at your fingertips, or you can even scan the QR code that is up on your screens. We take a short break. We'll be back on the other side. Welcome back. On to some updates from the cyclone Ditwa. Chennai and regions in North Tamil Nadu and South Andhra Pradesh have been placed under red alert as cyclone Ditwa triggers extremely heavy rainfall across several districts. The IMD has said that the weather system is likely to shift towards the southwest and is expected to weaken into a depression within the next 12 hours. Schools and colleges remain shut in Chennai. Take a leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Another day in the red, and the low today is 26,030. So we're very close to the day's low as we speak. Across the board, there is some selling pressure that has come by the mid-cap. That's where the selling pressure is actually intensified. So we'll discuss that and a lot more on the show today, Vivek.
That's right. Good afternoon, Sonal. Like you mentioned, pressure all across market breadth, especially in the broader end of the markets, skewed very much in favor of the declines. We have a lot lined up on the show, so let's start off with the top headlines. A weak rupee continues to pressure stocks, which opened weak but steady after the fall amid expectations of some volatility due to F&O expiry on NSE. Financials and healthcare are the big drags, while telecom stocks see some green.
Telecom Minister Jyotiraditya Scindia tells CNBC-TV18 a proposal from Voda Idea on an AGR relief is awaited, and the government should be able to review and recommend relief in about 2 weeks after. He clarifies that any other telco seeking similar relief will need to approach the Supreme Court.
Mastek gains in trade after sources tell CNBC-TV18 that the promoters of the company are exploring a 20% stake sale at a 25% premium.
MV Photovoltaic shares surged 10% after company's Q2 profit jumped almost 7 times and its EBITDA jumped 4.3 times on a YOY basis. Management tells CNBC-TV18 that the second half of this year will even be better than the first half.
Spark surges in trade after a US court grants judgment in favor of the company in the matter of issuance of priority review voucher in sales debris.
Okay, all right, those are the top headlines. As I indicated earlier, market is very close to the day's low. It is at 26,035. Important level to watch out for will be that 26,000 mark. Other than that, if we look at the mid-caps, it's a 205-point downtick on that one. It is also close to the day's low, and the advance decline ratio is now in favor of declines by a huge margin. It's only the PSU banking index which is in the green right now, and that is something which is batting for the bulls, but failing, of course. And we do have the bank Nifty as well, which is down around 200 points. So across the board, it is a red-looking screen. But there are few stocks which are bucking the trend today, Vivek.
Very few stocks bucking the trend. Key amongst them being IEX. You know, Friday we actually had the hearing happen as far as Aptel is concerned. It was status quo, judgment deferred till Jan 6, but post which that particular stock moved 5% yesterday and another 2.5% today. But this and a whole host of other stocks is what Sudarshan has on his radar. This is our special segment, Midcap Mover. Sudarshan is standing by the wall to take us to the midcaps that are moving around in this session.
So market is under pressure today. All the frontline indices are trading with cuts. So let's take a look at some of the mid-cap movers. So on top of the list is Union Bank, because there is a release from NSE regarding rejigging in Nifty bank weightage, and that's one of the reasons why Union Bank has seen an up move. It's up almost 3%. Bajaj Housing Finance is under pressure because Bajaj Finance, that's the promoter company of the Bajaj Housing Finance, and it has announced a sale of 2% stake in the company, and that's the reason the stock is under pressure, currently down 6%. HCC, there was a positive development, and that's the reason you are seeing a big move in the stock, up more than 11%. MV had announced earnings for Q2, and the earnings had looked very strong, and on the back of that, stock has moved sharply higher, up 10%. Vodafone Idea, there was a comment from Telecom Minister that by this month end, or say by 2025 end, there would be certain updates regarding its relief package, and tracking that news, the stock has moved higher. And some of the other mid-cap gainers, if Vodafone Idea has moved higher, it's taking Indus Towers along with itself, and that's the reason Indus Towers too has moved higher, 1% currently. At one point, the stock was up almost 3%. Some of the other names are there. Spark, there's a positive development from US court, and the judgment is in favor of the company, and that's the reason you are seeing a big move, currently up almost 20%. Info Edge had released jobs peak index for the month of November, and one sector that basically is tracked very closely is the IT, and that saw a growth of 14% YOY, and that's the reason this stock is also up. Canara Bank and Bank of India are trading higher along with other PSU bank names, and that's the reason you are seeing big move in these two names also, and all the other PSU banks are trading with gains also. Now, some of the other mid-cap losers, that first on the list is Indian Bank. For the last few months, this stock has been moving higher. So today it's a minor profit booking. That's the reason you are seeing a downtick of 3%. Manappuram Finance has moved lower despite an uptick we have seen in gold price. Today it's trading with a cut of almost 2%. All the jewelry stocks are under pressure. Thangamel Jewelry is one of the top losers, down almost 6%. And Garden Reach Shipbuilders is today under pressure, down almost 5%, and Vikrant Engineer, after falling yesterday, it's falling today further, and today also it's trading with a cut of almost 3%.
Okay, some interesting movers in the broader markets. Thank you so much, Sudarshan, for joining in. We'll discuss Spark in greater detail in just a bit, but before that, let's welcome Shrikant Chauhan, EVP at Kotak Securities, for a quick technical check. Shrikant, good afternoon. Do you think we'll see further lower levels and we'll break that 26,000 mark today?
Yeah, good afternoon, Sonal. Good afternoon, Vivek and everyone. So for Nifty, our view is that it is consolidating, and we are now very close to the important support levels of 26,000. In fact, market is currently trading within the important range of 26,050 and 25,950. I am of the view that in case if there is any correction, or maybe let's say we can say if we are reaching to the levels of 26,000, then there we should look for creating or taking some long bets in the market. With a stop loss at 25,900 on a short-term basis. I am again of the view that the market can move towards the levels of 26,300 in the near term.
Okay, Shrikant, amidst the kind of weakness that we're seeing in the benchmark indices, What is it that you're recommending to your clients? All longs, all shorts, or what is the kind of mix that we have today?
No, I think, say, at these levels, we need to be very, very stock specific. And instead of going short on any stock, if we look for buying some stocks from the broader market, I think that can give a better opportunity to take a specific trade in this market. In that particularly, we like IDFC First Bank. Currently, it is around some 82 levels. It has been consolidating since last 2 weeks. Eventually, it has crossed this level. So based on that, the next level to watch out for would be 88 and 92. So at this level, it's a very strong candidate to buy and hold with a stop loss at 79. The other stock on which we are bullish is Paradeep Phosphate. The stock, if we see the trend of the stock, then it was falling from the levels of 230. Currently, it is stabilizing at 160, 155. And from here, again, the stock can rebound to the levels of 199 or 200. So at this level, the risk reward ratio is quite favorable for buying at 160 with a stop loss at 145 and with a target of 200 on the higher side.
Okay. Shrikant, what about GSPL and Gujarat Gas? These two stocks are doing well in an otherwise weak market. Of course, they've come up from the highs. But do you think we'll see further up move from these levels?
See, for buying GSPL or Gujarat Gas, it is like something which is very difficult to predict based on its technical pattern, because all these stocks most of the time follows the news flow from the government, and based on that only we can take specific trading decision on the stock. But with a very short term point of view, it is very difficult to predict that at which side the stock can move.
Right. Shrikant, any view on, as far as metals are concerned, a little bit of weakness, especially in the last hour or so, worries about price cuts. On the charts, how are metals looking?
See, couple of stocks are doing really well from the metal basket. In fact, most of these stocks have reached to their fair value. But if we consider their technical pattern, then the juice is still left. We can expect activity in Hindustan Copper. We like Vedanta. We also like JSW Steel and Jindal Steel and Power. Specifically from the metal basket, we need to focus on JSW Steel, where we have target of 1250. Technically also, the stock is forming high top, higher bottom series. And for Vedanta, it is consolidating above the levels of 500 since last so many weeks. So the next level to watch out for would be 580 or 590. So Vedanta, JSPL, JSW Steel, I think these are the stocks to keep on the watch list.
Okay, all right. Thank you so much, Shrikant, for joining in today with those individual bets and market levels to watch out for as well. With that, we'll slip into a break. When we come back, we'll focus on Spark. This is our special Midcap Spotlight segment to understand that big move on the stock. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular stock from the broader end of the market that stands out clearly is Spark. The stock is now perched at the upper circuit limit. Ekta joins in with more details as to what exactly caused this significant spike in the share price today.
Well, yes, the news with regards to Spark is that a US court has granted a summary judgment which is basically in favor of Spark, which is for their drug Sensex. Now, this is with regards to a priority review voucher. Now, what exactly is a PRV? A PRV is a special incentive which is granted by the FDA when certain drugs, which basically are, treating certain categories or difficult to treat categories. Now, the PRV allows the holder to get faster regulatory approval for an other drug application. PRVs are transferable. Companies can sell or license them to others. So that's possibly why you're seeing the stock higher. Now, the court held that FDA's withholding of PRV was contrary to the law. Contrary to the law because no drug product containing this particular phenobarbital sodium was previously approved. So Sensex is basically Spark's injectable formulation which contains phenobarbital sodium and is used to treat neonatal seizures in infants. So Sensex was in fact granted an orphan drug status by the US FDA. It was granted to Sun Pharma for marketing and distribution as well. So now that's the reason why you're seeing the stock higher by around 20% That's because the US court has granted a summary judgment which is in favor of Spark.
Okay, a big move in an otherwise weak market. Thank you so much, Ekta, for explaining that to us. But stay on. Wockhardt too is gaining in trade. US FDA has accepted NDA for Zenix. Tell us more about it and what did the management make of this?
Well, yes, the management has said that they expect approval possibly by mid of next year by the US drug regulator. They will need 4 to 5 months post-approval. The file is complete and only evaluation is required by the US FDA going forward. The US FDA is visiting sites where the drug will in fact be manufactured. They are in continuous dialogue with them. The US FDA is also committed to a timeline, so that's why they have undertaken a fast-track approval. Zenix is used in more than 70 patients on a compassionate basis already. It's used on 3 patients in the US and the rest in India. Fundamental basis of approval, however, going forward will be on preclinical and clinical work. And Zenix would have a patent for 10 years at least if in case they do get approval. They've only applied in the US and India for Zenix approval at this point in time. And interestingly, they haven't even seen any file opened with regards to Zenix when it comes to the India approval. So that's not something which is probably not in the near term. The market potential, according to them, is more than $1.5 billion. Peak sales could be $1 to $2 billion. US would be majority of that. And India could probably record over 150 crores in terms of sales for Wockhardt.
Well, thank you so much, Ekta, for joining in and giving us the details on Wockhardt. And today is another day that that particular stock is doing quite well. In fact, earlier today, Habil Khurakiwala, founder and chairman of Wockhardt, joined us. And this is what he had to say on the opportunity as far as Zenix is concerned.
For the first time for us and for India, a new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US. There's only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product. This drug has proved a remarkable efficacy and safety, because one of the important things in antibiotic is normally not given for a week or 2. It was given longer time because the patient came at a very last stage. Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue. And the balance will come from the other countries.
That's the word coming in from Wockhardt. The stock is holding up in an otherwise weak market. We'll slip into a break now. When we come back, we'll get you more on the markets and stock-specific actions, so stay tuned for that. Welcome back. While the advanced decline ratio is absolutely in favor of the declines right now, there are some outliers. For instance, Leica Labs, that is a small stock around 300 crore market cap, but it was buzzing last year and today it has made a comeback with gains of around 7%. We have GNA Axles. A lot of these auto numbers which are trickling in, GNA Axles is one of them, which is an auto ancillary name. That stock too is higher by 3.5%. Chennai Petroleum is up 2.5%. Last week it did see a big fall because of a question mark on whether these GRMs will sustain at higher levels or not. But today, some comeback on that one. Supreme Petro is up 2.5%. We have Natco Pharma too, which is doing well in trade. Glenmark Pharma, that is another pharma name which is higher in trade as we speak. From the Realty pack, we have Keystone Realtors, which is doing really well in trade. So watch out for that one. On the downside, we have something like an Aether Industries, which is down 4%. Wellspin Living too, under pressure today. That stock is down around 4%. Gokuldas Exports is the other one, seeing cuts of around 3.5% in trade. So some of these stocks which are on our radar are buzzing in trade, maybe on the upside or downside as we speak. Bajaj Housing is the other name on our radar. It is under pressure following a large block deal. The promoter Bajaj Finance is likely to have sold around 2.3% equity worth nearly 1,900 crore rupees. Hormuz is here to tell us more about the stock move since listing and whether more stake sale could be in the offing. Hormuz.
Well, the most bid IPO at that point of time was Bajaj Housing. Bids was almost around 3.5 lakh crores for that 6,500 crore rupee IPO. Today, the stock is down 50% from those post-listing highs of 188. Made a 52-week low of 95 today. A block deal took place. Almost close to 2.5% equity was sold by the promoters, Bajaj Housing, Bajaj Finance. Now, of course, they are doing this to comply with the minimum shareholding norms. But then there is still plenty of overhang that still remains for Bajaj Housing. That's because of the fact that even after selling today's stake, the promoter stake would still be at 86.3%. So that still means they still have another 11.5% stake still left to be sold. That remains the most important overhang for the stock going forward. And if you look at the IPO as well, you mentioned it was the most bid IPO. The QIB portion at that time was subscribed well over 200 times. The retail portion too saw healthy subscription for whatever was reserved for them. And even after that, the stock, after its listing from its IPO price of 70 bucks, went up to 190 and now trades below 100 rupees. So that is the key overhang. And of course, just as the stock continued to move higher, the retail shareholding went higher in the stock as well. From 16 lakh shares during listing day, within the next quarter, that number went up to 26 lakh shareholders. Today, that number stands at around 24 lakh, around 8% of the company owned by retail. Now, of course, mutual funds don't have a significant stake in the company. So it's only between the promoters and the retail shareholders, and this promoter stake sale continues to remain a big overhang on Bajaj Housing.
Well, thank you so much, Hormaz, for joining us and giving us all of the details as far as the Bajaj Housing Finance stake sale by the promoter is concerned. Now, remember, they would eventually have to bring down the stake to 75%, although with the latest SEBI guidelines, they do have some more time than the earlier strict 3-year timeline. But moving on, MV Photovoltaic Power is buzzing in trade today after reporting a strong set of Q2 numbers. In fact, earlier today, we caught up with the management of the company, and the CEO, Suhas Bonte, expects to maintain the current run rate on the top line. Also adds funding of 5,500 crore rupees of capex will be largely done via internal accruals. Let's listen in.
Capacity will remain from 2.94 to 2.94 by FY27, and by beginning of FY28, we will be adding another 6 gigawatt of cell manufacturing capacity. That will take us to 8.9 gigawatt of cell capacity. I think the current run rate is something we're very confident to achieve. So our debt is at 1,863 crores as of September, and we've repaid 1,621 crores. So our debt is now less than 100 crores of long-term debt that we have. So if you see that our operating cash flows have been quite positive, especially with our EBITDA and PAT numbers that are seen on results, and our capex plan is 5,500 crores for our expansion until 2028. And this is going to be funded in phased manner, and we've already have internal accruals for the equity portion, and there is 60% debt that is going to be that is already secured from IREDA for this.
Well, MV Photovoltaic, after a subdued listing, post Q2 numbers today has done quite well post at the upper circuit. But moving on, an important development as far as the Nifty bank constituents are concerned. Last evening, NSE released the final guidelines to align with SEBI's request to go ahead and ensure that there is not too much of a weight concentration as far as the large constituents of the Nifty bank are concerned. Basically, SEBI had gone ahead and asked NSE to trim the weights of the large stocks within the index with underlying future contracts. So under the revised methods, the top three constituent weights would be capped at 19%, 14% and 10% respectively. Now, in terms of stocks, what does this mean? Two stocks would likely make the entry as far as Bank Nifty is concerned, and this could be done as soon as the end of December 2025 is concerned. Yes Bank and Union Bank are the two stocks that could go ahead and enter the Nifty Bank Index. On the other hand, HDFC Bank and ICICI Bank will have to go ahead and see selling pressure on the back of the fact that they will see reduced weightage. Now, another, slightly related, but on the back of the fact that there is a slight disappointment that Indian Bank has not made the list as far as, entering the Nifty Bank is concerned. That particular stock had seen some amount of buying in anticipation of entering the NSE index. Indian Bank today, on the back of that, is under pressure. In fact, the stock is now near the day's lowest point. Well, that's an important development as far as NSE Bank Index is concerned. With that, we'll take your leave on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. You've tuned into MF Corner on CNBC TV18. I'm Vinny Motiwala. With me is my colleague Sonal Bhutra as well. Sonal, a very good afternoon to you as well. And today, yes, we're going to be discussing something very exciting that is relevant in today's day and age. But before we jump to that, let's actually talk about the top headlines that are there in the mutual fund industry or what's happened in the last couple of days. Firstly, we'll talk about the SEBI. What have they taken in terms of decision? One, they have reclassified REITs as equity. Now, this announcement had come in before. Now, what has come in is that this is going to be with effect from Jan 2026. This will obviously help in terms of greater mutual fund participation coming in for REITs as well. So that is one important news flow in terms of the date that has come in there. Moving on to the next news flow, we had is that the SEBI has replaced B30 incentive framework with a targeted commission model offering distributors up to 2,000 rupees per new eligible investors from Feb 2026. So these are incentives and or commissions that go to distributors. There's a change on that front. And now, like I mentioned, rupees 2,000 per new eligible investors is what they could get as distributors. Let's talk about some of the new NFOs that have come in or are being launched this week. One, we have the Bandhan Mutual Fund. They've launched two commodity-based ETFs. One is the Bandhan Gold ETF. The other one is Bandhan Silver ETF. And obviously, given at such a time when you're seeing so much inflows or, rise in the prices of gold and silver, it's an interesting time that this is coming as well. Now, the fund will be opening for subscription on December 1st and will close on December 3rd. And again, the fund will reopen there for continuous sale and repurchase from 12th of December. So these are some of the key important updates that have come in the last few days, Sonal, right now.
Okay, yes, so it's always important to talk about the updates happening in the mutual fund industry, apart from the fact that we'll keep talking about ways to improve upon your wealth and returns as well with our experts on the show. So let's talk about that. Broader markets, they are facing pressure. Mid and small cap investors are reassessing their approach. Should they stay the course, rebalance or adopt a more cautious stance? Today on MF Corner, we have Anirudh Naha, who is the CIO at Alternates at PGIM India Asset Management, and also Tarun Birani, who is the founder and CEO at TBNG Capital Advisors, joining us now to discuss the strategies for navigating the small and mid-cap space. Anirudh and Tarun, thank you so much for joining in today. And this is all somebody can talk about, right? The underperformance that we've seen in mid and small cap funds and in the stock markets and individual names as well. So Anirudh, let me start with you first up. What are some of the key trends you are seeing right now in small and mid-cap space? Are you seeing more rotation to quality names or continued volatility? And do you expect it to continue?
Thank you, Sonal. Thank you for having me on your show. So what is interesting is we're clearly seeing earnings, from an earnings perspective, we are clearly seeing earnings to be bottoming out. In fact, in many companies, frankly, we are seeing some amount of recovery. And this is across sectors in the small and mid-small micro segment. What is also happening is people are, I think there is some amount of give up that seems to be happening out there, where people are selling irrespective of earnings. So from that perspective, I think so the next 6 months will be a great time to build portfolios. You've got earnings starting to recover, and our belief is the next 2 quarters, earnings will actually reflect very well because the base is also reasonably weak. And in that time frame, if you get businesses, let's say going through a volatile phase and some amount of correction, we believe it's a good time to go ahead and build portfolios in the mid and small cap space.
Okay, sure. Obviously it's time to build the portfolio while everyone is worried that, there is some bit of an underperformance, but an interesting time is the right time now maybe to start looking at building it. Tarun, coming to you. Good afternoon. Thank you so much for joining us as well. Obviously, when you're looking at it, mid-cap, small-cap categories, they've shown high volatility, a bit of a mixed return when you look at it versus the benchmark indices as well. And otherwise, mid and small cap in the last 1 year have seen a bit of an underperformance versus the large cap ones, right? So how should investors currently position themselves, their portfolios? What are you advising them?
So good afternoon. So I am of a very different camp, and I strongly feel your financial plan or the structure you have built to create your investment should drive your portfolio decisions rather than the market movements. I have seen that 90% of the long-term returns an investor gets is because of three reasons. First is because of the plan and the structure. Second is the asset allocation discipline what the investor keep. And the third is their behavior, how they position themselves in the bad market, right? Based on that, only long-term returns comes. And I think human psychology, again, declining investment inflicts twice as much pain as the increasing value increase positive emotions. I think the current last 1 year, I have seen it has come with a back of great 2 years in small and mid cap, micro cap rally, right? And I feel it is nothing but a mean reversion, right? Any asset which will go so strong will again come back. So I think very importantly, investor need to have a plan, need to have a structure. What goals they are investing for? Is the investment for short term, long term, tactical? What is that purpose with which they are investing? Once that part is clear, I feel navigating all these volatile phases will be much better. And for any new investor who is looking at invest, my strong recommendation would be to look at their financial plan, their goals, and their asset allocation. That is the more critical thing. And in that, if a 30%, 40% mid and small cap is required, maybe because the valuations are little elevated, they can do a staggered investing route to invest in the market. That would be my suggestion.
Okay, all right. So we take that point, and also this question also comes by when somebody's starting fresh, right? Because there was a point in time everybody would talk about the big returns that mid caps and small caps would give. Now, as you said, there's a mean reversion. So there could be some bottoming out, who we never know. But somebody who's starting fresh, in that case, Anirudh, in current phase, do you think small caps have bottomed out because of some of the underperformers? Do you think there could be more downside before the earnings recovery that you spoke about? This is for somebody who's building a portfolio, and there should be some mid and small caps according to their risk assessment.
Sure. So, Sonal, I think the assumption is that there will be some amount of allocation. It could be X, Y, Z percentage. But based on that, I think, again, as I said, what is happening very, very clearly, this is the first quarter probably after almost 7-8 quarters where we are seeing a reasonable recovery in small and mid cap earnings. And when I mean small, I also mean I go down to even micro to that extent. So mid, small, micro, clearly this quarter has surprised across the segments, across sectors. What has happened is human psychology, just to pick it up, I think so. The fact that the last 1.5 years returns have not been made. Please understand this is coming. The context is 2020 to 2024. You made phenomenal returns. 2024 to 26, probably end of this financial year. It will take a couple of years for the investors to digest that kind of returns and mean reversion, as it is said. But our belief is probably we are at that last phase of mean reversion over the next 6-9 months, and anyone who is starting now is probably starting very, very near to the bottom of, at least on the small cap side. Maybe the mid caps you could see a little further correction just purely because of valuations. If I take pure valuations and where earnings are coming through, I would be reasonably positive on good quality small caps out here to build and hold over the next 3-5 years and create wealth out there.
Okay, good quality small caps is what one could look at. Maybe some bit of fall one could watch out for in the mid cap side, and that's when you start building your portfolio, quality portfolio. Tarun, but are there any steps that a retail investor should maybe take if the mid and small cap fund of theirs, which they are holding currently, is maybe lagging the peers? And especially over this last 1 year, if you look at some of the names, it's a very contrasting view. Some of them have done terribly and some of them are still managing to hold on to some bit of a gain. So what would you tell them to do? Would it be maybe for stop the SIP which is underperforming, switch? How should they go about it?
I think, again, I would like to reiterate why you have invested at the first place. 1 year to review a fund, according to me, is not a right approach. I think you have picked a fund. There was a purpose behind picking that fund, right? So I think small underperformance. Again, these funds, small and mid caps, one need to view with a long-term horizon, at least with a rolling return data of 2 years, 3 years, 5 years. Then only you can make a judgment that they are underperforming. A 1 year underperformance is not a reason to act. Again, one need to understand, is this a performance noise or a process breakdown. I would actually look at exiting anyone if there is a process breakdown in a fund, right? Where there is a change in the fund manager, or there is a governance issues, or there could be many things which can happen, right? Which is impacting the performance. So I think those should be the reasons for you to exit, not a simple underperformance of last
Yes,
1 year.
exactly. So when we say not just underperformance, but other major factors as well, Tarun, let me come back to you on this and ask a follow-up, because we are seeing painful phase for mid and small caps. So say if something irks an investor, there's a fund manager change or a strategy change, it becomes not the exact fund where you invested when you wanted to do that long-term investing, right? Where do you advise parking money from that bad fund or that fund that does not suit your strategy? Would it be a hybrid fund, fixed deposit, or large caps if they wish to make that change from the current allocation?
Again, I think the question what you are asking, I feel it is not a proper question, because I think if your allocation of the money is for small cap fund, you can't move that money into hybrid or arbitrage money, right? It is meant for high risk, right? So you need to make sure that the allocation, if you have made in your plan, is aligned with a high risk investment. You need to keep a 5, 7, 10-year horizon on that. You can't just 1 year of underperformance, you move the money and move into categories. I feel that is a very short-term investing, and this investing will not pay investor long-term dividends. So I am of the opinion that one should follow the asset allocation dharma. That is the most important thing, and that is where the long-term returns comes.
Okay. Following asset allocation, and obviously, you know, parking your money which you have allocated mainly for a riskier asset, that is something then you should look at where you could park it later on as well. Doesn't mean you can shift the money or, you know, you change your goal or stance over there. But on that note, we're actually going to slip into a very short break. Continue this conversation after the break as well. Welcome back to Mutual Fund Corner on CNBC TV18. Now let's keep the discussion going on the mid and small cap. What should you be doing in terms of strategy? How should you be moving about as well? Anirudh, while we've spoken about, obviously you're saying that, it's the time to look at buying, but you said quality names as well. So how do you differentiate in such a market where the quality is the stock picking approach that comes in such a condition as well?
Yeah, I think so. This is a very relevant question, specifically when you go down to small and micro caps. Even in mid caps, probably it is reasonably well defined or discovered to that extent. But when you go down to small and micro caps, I think the first thing that we usually try and do is to try create safety from a stock picking as well as a portfolio perspective. I think the safety of a business in a portfolio relies on the quality of the promoters, and that is something over a period of experience of people get to realize. And the strength of cash flows that they generate, especially operating cash flows over a period of time. The operating cash flows are your cash flows which you generate from the regular operations of a business. Every business goes through a down cycle. In a down cycle, if a business has been able to generate positive operating cash flows, it speaks a lot about the strength of that business. And that's what we look for. And finally, we need to buy good businesses at reasonable valuations. I think valuations matter. And that is exactly where, these three points which we think are probably today triangulating. One is good promoters where stocks have fallen off, have historically generated good cash flows, and to that extent probably have done capex. Their gross block is up, growth has started coming back. We would stick to this framework. It has helped us through and throughout. So focus on cash flows, focus on promoters, and probably the leverage in the balance sheet along with valuations.
Take that point. So this is, of course, going the stock way. If you want to go through the mutual fund way, you can always take the constituents of a mutual fund that looks interesting and go about evaluating evaluating a mutual fund as well, of course. Tarun, what's your go-to advice for clients? When we talk about underperformance, of course, you don't change the category overall. If it is a high-risk product, you have to go to a high-risk product. But when do you know when to pull the trigger? This is for somebody who was seeing losses for 2 years, but is not sure whether it's the right product for them or not.
I think in that case, that product has not been taken with a purpose. Because I have seen many times, couple of years, 1-2 years, the fund may underperform. It is not because a cycle can go wrong. Any asset class which can give you double the fixed deposit returns need to have a long-term mindset. And if the investor does not have a long-term mindset, I think they should not be investing into equity. I think that is my strong suggestion. Again, I am trying to reiterate on that point only. Get your asset allocation and the plan correct. That is the most big problem I have seen with the investors. Investors are not focusing on that, and we are focusing more on the short-term things, which ultimately does not matter in the long-term wealth creation part.
Tarun, so the question here is somebody invested with an idea of a long-term return. They did do it the direct way. They didn't do it the regular way. So nobody really told them which mutual fund to invest into. They made a mistake there. Some of their funds, the mid or the small cap part of it, is underperforming. So how do they assess whether they should continue with this? How do they assess whether they should pull the plug or they should just go ahead with it? So there must be some indicators. Say after 2 years you do that, after 3 years you do that. Some indication on that.
Yeah, so we normally look at some qualitative as well as quantitative parameters. So in terms of quantitatively, we look at rolling return data for 2 to 3 years rolling return data with category if there is a serious underperformance there. Risk adjusted matrix, if we are seeing the ratios are not correct. If qualitatively, if there is the manager true to the mandate? You have taken the money with some mandate and you are investing into another mandate. Is the investing style has drifted? Is the investment team stable out there? Is the AMC scaling responsibly? These are some of the qualitative parameter one can use while using a filter to invest. But normally it is you need to keep a long-term horizon when you invest into a small and mid-cap fund. It's a lot of patience one need to have.
Okay. Patience is what one needs to have when you invest in the small and mid-cap funds. Anirudh, just talking about the small and mid-cap side, right? So in the current scenario, now you continue to be neutral, overweight, underweight on the small cap story, mid-cap story. And obviously, you said there are opportunities that one should look at. Anything specific in terms of themes that you're watching out for in the broader end of the market now?
Sure. So what we generally like to do is look for good businesses as we defined it in the earlier question, good cash flows, they've invested, good promoters, but probably going through a down cycle because every segment goes through some down cycle or the other. So today, if I have to pick something for the next 3 or 4 years where we are probably bottoming out, and because we are bottoming out in terms of earnings, the ROEs are depressed, valuations are suppressed, and there isn't too much of an interest in that sector. But if someone takes a 2-3 year view, does their own research internally, something like maybe agrochemicals is a segment where we believe there are very, very differentiated good businesses sitting out there at reasonable valuations. If someone has to take a look at textiles, it's a great opportunity for India, but for the tariffs. Now, these are events which could turn around any day. And from that perspective, if someone takes a little longer term view, I think so textiles could be another sector which could really turn around. We are getting positive on discretionary consumption. We are seeing early signs of that coming through. The next year would be the pay revision from the government side. I think so that would also, spur discretionary consumption. There are sectors where probably a little bit of price correction would give you a lot of valuation comfort. These are sectors which are lumpy, but for the real long term, one would be railways, the other would be defense. And finally, if someone really takes a 10-15 year view, I think healthcare is something which will turn out to be a very, very long term trend in India, just because we are very young as a population today. As we age, the requirement for healthcare will only keep pushing up. So from that perspective, these are segments that we like and are staying invested into.
Okay. An interesting chat there, interesting sectors that you highlighted as well. But Anirudh as well as Tarun, thank you so much, for joining us today, giving us perspective from the market front as well as the mutual industry front, what investors should do as well. Thank you so much for joining in. A quick roundup in terms of what we have seen in terms of a move for the mid and small cap. When you look at it, obviously category-wise, large cap in the last 1 year give you 6.5% return approximately, while the mid and small cap, there's an underperformance. Mid cap around 4.4%, while the small cap gave you a negative return of 4.7%. But this is overall that we were looking at it for 1 year. Now, when you look at it 3 years, we have seen that outperformance continue for the broader end of the market. That's the mid cap funds as well as the small cap funds, while large cap funds have given around a 14 to 16% return. Category-wise, when you're looking at it, some of these underperformers that have come in from the mutual fund industry, the list will come up for you all as well. In the small cap fund side, you've seen the underperformance in this 1 year return. So yes, Mirai Asset Nifty Small Cap, there is a Mirai Asset Nifty Small Cap Momentum Fund. Some of these funds have not done well. DSP Nifty Small Cap Fund, Tata Small Cap Fund, they have not done well. But what we understand and what we understood from this conversation, that mid and small cap is a long-term story. Do not panic just because, there is some underperformance for 1 year. 1 year return is not enough for you to judge it. So wait out for it. And obviously the points that they mentioned in terms of the checklist that Tarun mentioned as well, that you could keep an eye out on qualitative front, quantitative front. If those are the factors, maybe that's not working out for you, then maybe you can look at moving. But yes, long-term story for mid and small cap, that's how you should be looking at investing here. But that's all the time that we have on this edition of Mutual Fund Corner. Thank you so much for tuning in.
headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Look at the Taiwan index managing to hold on to gains of 1.23%. We have Hang Seng holding on to gains of around 0.6%.
It is my responsibility as Telecom Minister to protect my consumers.
Support is the 20-day, which is 25,910. For the Nifty Bank, we set a record at 60,114. Pairing those losses, 0.18 down now, 26,130.
Watching the 90 mark very importantly, because if that breaks, as stop losses can get hit further.
Our drug should do about $1 billion or $2 billion.
Markets at around that 26,100 mark, easing off from record highs earlier.
जिस तरीके से अपने फोन पे दूसरे ऐप को दबाओगे और कहोगे डिलीट, वैसे इसको भी दबा सकते हो और कह सकते हो डिलीट.
What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level.
Another day in the red, and the low today is 26,030, so we're very close to the day's low as we speak.
Well, that is the day so far. Markets, of course, are not looking all that great. 140 points lower on the Nifty. This is closing bell. Broader market still reeling. Advanced decline is pretty negative. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Reema. Guys, hi. Afternoon.
Hi, afternoon. Looks like currency jitters once again are keeping the traders on the edge. A new record low on the rupee against the dollar, 89.95. And courtesy of that, we've extended our decline now for the benchmark indices for the third day in a row. And we're still pretty close to the day's low. The day's low on the Nifty was 26,028. We're pretty much there, 10 points up from that level.
Yeah, absolutely. And what also kind of hurts is the fact that we're kind of singled out in this downside action today, because otherwise a lot of Asian markets have actually closed positive. And things are up and about. In fact, if I check US futures, then they're mixed. I mean, there's no major slide or anything. So this continues to be what has been an India-specific issue, whether it's the lack of that trade deal, the currency, obviously becoming a big sore spot as well. So yeah, and the lack of momentum, we've been complaining about that, right, ever since we hit the all-time high.
Yep.
Conviction seems to be missing.
Yep, absolutely, and I think this is one more kind of drifty, lack of, not a very enthusiastic session one way or the other. Even if you look at stocks, and by the way, only about 1,000 stocks are higher, 2,000 plus stocks are lower. Even, if you look at the biggest volume-led gainers, it's not too many well-known names which are, up and about. There's a Spark and there's a bunch of other names here and there, but it is muted, in broader markets, within winners as well. So that's the kind of market we are in. So 26,040, the 200 is still away, about 200, I think almost 200 points away on the downside. And that, of course, is the big support level. The market did run up and run away, but we've been retracing for the last few sessions now. Let me just quickly run you through what's coming up here over the next 60 minutes before we go any further. So markets, of course, in focus. We'll try and understand where from here. So a little bit of divergent moves, right? So financials, IT, private banks are on the back foot. PSU banks, though, are looking a little better. Rupees made a new low, as Reema said. It's now fast approaching 90 levels. We'll take stock of the sentiment there, because, of course, that's feeding through into equity sentiment. It's like a feedback loop of the bad kind. FPI outflows, rupee weakness, and equity weakness on the back of it. So we are seeing some of that play out. Bank Nifty and the weights are calculated, etc. There are changes afoot, and Vivek is going to tell us more about that. So some smaller banks perhaps benefit, the larger ones weights are capped. Details on that. Asian Paints, there's a UBS upgrade which has come through, and we'll get that out in just a bit as well. Let's get the sort of trading action and the overall picture out of the way first, and Mitesh is with us to help us with that. Mitesh, good afternoon. As I said, this is a slow drip feed lower. What's your sense, Mitesh? What should one do?
I think, as I said, I think, we'll get long only if it either gets past 26,300 closing basis, or you get a significant decline, which is actually close to about 25,900 odd zones. And that is the time to even look at index positions. Having said that, Maruti is something which I would recommend on the buying side. That's a stock which is doing well. Keep a stop below 16,100. Look for targets of 16,450. And Polycab is a stock which is on the negative or the sell side. Keep a stop just above levels of 7,500. 7,400, and look for a target of roughly around 7,120.
Okay. All right, let's get to one big story that CNBC-TV18 is picking up from sources. Mastech promoters are looking to sell stake. Rachna joins in with what she's learned from her sources. Rachna?
Right, sources have told CNBC-TV18 that the Mastech promoter group is exploring the sale of nearly 20% stake in the company. Now, this is significant because the promoters currently hold about 36%. So, the sale being contemplated is more than just a routine dilution. It could meaningfully reshape the shareholding structure. What's also noteworthy is the pricing. People in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of this sale and that it has two big triggers. First one is the succession planning, and the other being the broader effort to bring leadership stability after a year of major top deck changes. And that's important context because Mastech has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts. First, Raghavendra Jha came in as a CFO in May 2025, and then came Deepak Kedia, who took over in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset, the one that aims to give the company a steadier foundation as it leans into its next phase of growth. According to sources, the promoters are sounding out a mix of strategic investors and long-only institutional funds. That aligns with Mastech's revenue footprint, where nearly 65% of the business comes from the UK and Europe. The Mastech was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar and the late Sudhakar Ram. As always, we did reach out to the company for a response, but Mastech declined to comment on CNBC-TV18's query.
Okay, all right. Rachna, thank you very much. Interesting story, and we'll see how this plays out. Let's discuss Mastech and more with Dharmesh Kant of Chola Securities. First, Dharmesh, on this, I don't know if you have coverage in the company or not, but interesting development and perhaps turn of events over here. When we speak of Tier 2 IT, I mean, does Mastech figure in your scheme of things at all? Any thoughts on the business, the way it's shaped up so far?
Yeah, Dr. Solvia, I mean, see, this news flow, I think, is not very positive for the uncertain environment in which we are. So when a lot of uncertainties are there, people choose for certain kind of a trajectory, and now this management transition and whoever comes to, take the helm of the affairs and how to carry on the business forward. Tier 2 IT companies are already, huddled with a lot of problems out there. There are few outliers who have been doing well, but majority of them are still struggling to get new business. So we have been focusing on outliers, and thankfully, I mean, luckily we were able to get a couple of them right. I mean, Persistent was there, Coforge was there, KPIT Technology. Those are the companies which we have been focusing on. Lately, we have also, come out with an IC and Orient Pro Solutions Limited. So I think Q3 onwards, even there, the numbers will be, quite better from what it has been. H1 also they did well, 30% plus kind of growth rate, and we are expecting 30% plus kind of a growth rate going forward into.
Which stock, Dharmesh? Sorry, it was a bit of a patchy line. Which stock were you saying you're expecting 30% growth ahead?
Yeah, Orient Pro Solutions Limited.
Orient Pro. Okay.
Yeah.
So now you have Persistent, Coforge, Orient Pro in the stock, IT stocks in your portfolio. Is that correct?
Yes, Rima, that's correct.
Okay, those three. Stay on, Dharmesh. There are a lot of other stocks that are buzzing in trade, and here there is some news accompanying them. Sudarshan joins in with more. Sudarshan.
So I've taken 4 stocks, of which 3 stocks are sharply higher, while 1 stock is under pressure. On top of the list is Spark, which is reacting positively to the US court order related to SESB PRV. PRV is basically Priority Review Voucher. If a company has that, it helps in getting faster review for another drug application once that company files it. Second one is HCC, or say Hindustan Construction Company. It has released details of its rights issue that is worth ₹1,000 crore, and the price for the same is rupees 12.50, and ratio is 277 rights equity shares for 630 fully paid up equity shares, and the record date is December 5, and the stock is reacting positively to that, and it's up almost 11%, and stock price currently is at 26.60. MV photovoltaic is sharply higher after company released quarterly earnings, and earnings looked strong on a very low base. EBITDA has increased 4.3 times. Margin has seen an expansion of more than 1,200 basis points. And while talking to CNBC-TV18, management believes that H2 is expected to be much better than H1. One stock that is under pressure today is Bajaj Housing Finance after promoter Bajaj Finance has sold 2% stake via blocked, and after this stake sale, promoter's stake comes down to 86.70, but the overhang of stake sale remains because promoter has been selling the stake to meet minimum public shareholder norms. And also remember, the stock is currently at a 52-week low.
So thanks very much for that. Out of the names Sudarshan mentioned, anything of interest, Bajaj Housing Finance, especially if you have any thoughts, Dharmesh?
Yeah, Dr. Prashad. I mean, see, after so much correction, still the stock is very expensive. It's trading at around 4 times price to book value 1 year forward. And that's always a challenge for any housing finance companies to maintain. Because essentially all housing finance companies cater to affordable housing segment, and there the pickup is still not there. Be it affordable or mid segment is still to pick up, but premium or luxury segment are doing fairly well. So that's one challenge. Secondly is, I mean, if you look at the Bajaj Housing Finance, there's no strategic investor into the company, no institution or, mutual funds are buying into that. And that's, a point to be noted, because if you are so much stake to offload and then you are not finding a good value buyer, so that's definitely a concern. The valuation multiple, I don't think business-wise there is a concern. Business will continue as 20-22% kind of compounding, but the valuation needs correction. If one is looking at housing finance companies, then I still think PNB Housing Finance makes a better attention rather than a Bajaj Housing Finance.
Okay. So Bajaj Housing Finance not quite making the cut for Dharmesh. Since we're talking financials, let's also focus on obviously one big story, which is one of the reasons, not the only reason, one of the reasons the market seems to be under pressure is because there's a churn that's underway with respect to the Bank Nifty. And this comes in from regulatory requirements that basically say that if any index has futures contracts built on it, then that index needs to limit the amount of concentration that big stocks have. So what that's meant for the Bank Nifty is that over the course of the coming several weeks and months, the Bank Nifty constituents will have to be rejigged so that the weightages of the heavy, index heavyweights like ICICI Bank, like HDFC Bank, that weightage has to come down. And also 2 more constituents get added, which is Yes Bank and Union Bank. And Yes and Union, both have been Union, at least last I checked, was managing a little bit of a gain. So yeah, and those are the likely inflows. This is as per street estimates. That once they're included in the Bank Nifty, just passive inflows will come into these 2 stocks, Yes and Union Bank. And the number of stocks will also go up from 12 to 14. So this is how it's played out. But I mean, it started with the Bank Nifty pressuring the market. Now it's moved on. Now you even have Reliance, for instance, that's a big heavyweight drag. But Dharmesh, specifically on these changes, these index changes, do you expect it to last, or this is just a technical adjustment factor? And this morning onwards, we saw some of that adjustment play out on both ICICI Bank and HDFC Bank.
Yes, so it's just a technical adjustment factor. I mean, it will play out, and then again things will be back to normal. More of a algo opportunity for people who track it very closely, and some trading opportunities will emanate from such kind of restrictions which are being imposed. So, I mean, this will just pass on, and I mean, a couple of days after, life will be back to normal for SDFC and ICICI Bank. Having said that, as far as private sector banking space is concerned, what we are focusing on from the valuation perspective and the growth outlook is more on Axis Bank, and I think IndusInd Bank presents a very good opportunity now, given the valuation companies trading on, and if nothing surprisingly wrong comes out, then I think it's due for a value re-rating going forward into the second half of FY26.
Interesting. So that's the Braveheart call on IndusInd Bank. Management change done. Hopefully no new issues or regulatory complexities, and therefore it can perhaps the valuation can readjust and come back to more normalized levels. Got that interesting points out there. But the other two guys are still holding up. I mean, the two which get added to the bank Nifty, Yes and Union Bank, they're still holding up in today's announcement.
Absolutely. Just one, the Nifty will come up on your screen, and I think we are now 26,000, basically just around 26,000. Just one correction, the 20-day had moved up as of yesterday's close. It's not 25,800, it's 25,900. It's about 100 points away, the 20-day now, given the fall that we are seeing. About 0.6% has actually become a little larger while we've been looking at a trade so far. Any thoughts? Again, it's a bombed out name, HCC, Dharmesh. There was a bit of excitement. I remember a year and a half. They said, well, this entire they're in the constructing. They provide construction services for the nuclear industry. As I remember, that was the last spark which we saw in that name. There's this rights issue now. The other one is KNR Construction. Nimesh put out a list of stocks which have been battered from the highs. That was on Editors Roundtable on Friday, and we had a fund manager with us on the program who said, well, it's worth giving it a look. I think it's down some 50-60% from the highs. If you have any views, these two.
Yeah, Prashad, I think, this market for next 1.5 months will be a market where it will range bound, and it will give you a FOMO feeling. There will be some news flow coming, maybe even far into the future, and then you will see the stock price going up 15-20%. And that will be the texture of the market to my mind for the next 30-40 days. And such things will keep on cropping up. But I think, Prashant, going by way the economic data points are panned out, particularly the nominal GDP, and then you have the GST collection at 0.7% for the month of September, when things were supposed to be much higher on the volume front and offtake. So I do think that economy is not that great as of now. So one has to take everything of salt, and then you have to go with the tested data. And there I still think in the infra space, L&T and NCC, they are the better bet than going out for this, dying out candidates and hoping for them to revive.
Dying out is maybe a stronger word, but maybe a little bombed out in terms of price movement. That is KNR is what I'm talking about. HCC, of course, is I think it's not done well for, at least the stock's not done well for a long time. But KNR, of course, was a surprise one for me as well when Nimesh put that out. It's done, I'll tell you, the high was late 2024, stock was at 400. It's at 150 now, 160, KNR Construction.
Serious value destruction over there coming through. Actually, in a downbeat market, let's also talk about some of the gainers. And one of the gainers is very interesting. It's a new listing, and we spoke with the management just this morning. And we're talking about MV Photovoltaic. Now, they manufacture photovoltaic modules as well as cells, and they're putting up a huge amount of capacity. Capacity is going up both on the module side and the cell side, which means that their debt, which had come down to just 100 crores after the IPO, it will start rising again. But then they're saying that the revenue and the margin expansion will perhaps justify it. Dharmesh, just quickly, I don't know if you saw this company, if you have any specific thoughts on this. Any idea? MV Photovoltaic.
No, so I didn't have a closer look at the financials of this company, so I won't be able to comment on that. Apologies for that.
Okay, no worries. But otherwise, on the solar manufacturers, what's your overall view on Waaree, Premier?
Yes, so Waaree we have tracked since the IPO listing time, and then we had an IC on it as well. And our target price was 38.50, which came, and we closed out an IC. Why we have not carried forward is because this entire space is quite heated. They all are booked for next 2 years, so you will keep on hearing a solid set of quarter and any problem out there. But the visibility outside 2 years is a big challenge. Valuations, none of them are cheap. Valuations are very expensive. And our studies do suggest that Adani and Reliance is coming out in a very big way. So when big elephants come into the play, then definitely it will be more heating up of the competition. So either you should have a valuation comfort or you should have a great business visibility. I think both seems to be compromised as of now. So we are now totally staying away out of this the solar module manufacturers and the solar cell and wafer place.
Okay, for now, giving the listed stocks, Waaree pass. because of increasing competition from big companies coming through. Quick word, Meesho IPO opens tomorrow. They're looking to raise about 5,500 crore. Your analysis, should retailers look to participate in the IPO?
No, Riba, we have a neutral rating on this company, and we are not subscribing. We are not advising our clients to subscribe for this IPO because, again, the valuation problem is there, the profitability problem is there, and it's more of a far-fetched outside kind of a scenario. Any stock which is coming like that, companies which are coming for listing like that, in this environment, we are totally avoiding that.
Thank you for joining in, Dharmesh. Great chatting with you as always. Get into a break. On the other side, Mithun Aswath of Kiva Advisors will join in. The Nifty for now is under pressure, down 165 points, but holding on to 26,000. Welcome back. You're watching Closing Bell. It's time now to talk about individual stocks in the news, reacting to big, moving actually on very large volumes. Harmis is now here to tell us more.
The markets are sulking, but there are certain names that are not. And we spoke about Prostam Infosystems just a couple of days back on Bazaar, and the stock continues to move higher today as well. And it's 15% higher in today's session. It's gained in 5 out of the last 6. And in these 6 sessions, the stock has moved 33%. And today's volumes, of course, the highest on record. More than 4 crore shares have been traded now on Prostam. The 20-day average is just around 12.5 lakh shares. And the stock now has nearly doubled from its IPO price. 105 rupees was the issue price. The stock now at 205. And it's an important day on Friday because the shareholder lock-in period ends on the 5th of December. It's not November, it's December. And of course, the spark is the next one. A news-driven reaction, 20% upper circuit today for the stock. The favorable court verdict coming in, highest volumes on record here as well. Close to 3 crore shares have been traded on Spark today. The 20-day average is 3 lakh shares. And the stock now has very convincingly moved above its 200-day moving average of 145.5, but has been a bit of an underperformer this year, down 25%, was down 30% last year as well. Now, AkzoNobel has made a move on the upside today, and the move majority of that move has come just in the last couple of hours. Snapped a 3-day losing streak today. Volumes have seen a very sharp spike after 1 o'clock this afternoon, and close to 6.5 lakh shares of AkzoNobel have been traded. The 20-day average is only 46,000. That number is only going to keep going higher because the stock on last check was up 10%. Now it's up 13%, and it's broken above all of its key moving averages and has also now turned positive for 2025. And lastly, Websol Energy, the biggest single day gain that the stock has seen since December of 2021, 12% higher on the stock today. Before this move, the stock had declined in 11 out of the last 13 sessions. The announcement came in today that it's going to explore PV ingot and wafer manufacturing in India is Websol Energy, and 5 crore shares have been traded on the stock since this announcement came in this afternoon. The 20-day average is around 45 lakh shares, and the stock has had 4 straight months of losses and now trading with gains of around 12%.
Okay, all right, Hormuz, thanks very much for that. Well, Mithun Aswath is with us of Kiva Advisors. Mithun, good to have you here. You know, it's a tough-looking screen. It has been a tough-looking market, even though for a market which hit a new 52-week, new all-time high. But actually, even on that day and the subsequent couple of days, number of stocks hitting 52-week lows is 2, 3, 4 times the number of stocks hitting 52-week highs. And that basically tells you the state of affairs. So tell us a little bit about what you're doing, and, you know, everybody's nursing portfolios which perhaps are a little sideways to sharply lower, at least for some. So give us a sense of how you're handling it.
Yeah, good afternoon, Prashant. I think what you're adhering to is mainly, I think, maybe on the small and mid-cap side, where there has been a lack of participation, and several of the companies may have, you know, drifted lower. However, I think this is a market where, you know, valuation, earnings visibility also are becoming more important. So one needs to really look at spaces which may have been bottomed out, and there is a reasonable earnings visibility, and money could attract, you know, those pockets in the near future. On the mid and small cap side as well, I think there are several companies out there where, you know, the opportunity for growth continues to be there. And post this correction, I think quite a lot of opportunities will open up even on that side.
Mithun, we were just discussing a company like KNR Construction. It's gone through a rough time. Its market capitalization is about 4,500 crore. In FY25, the bottom line of the company was 1,000 crore. If you take the 12-month trailing profit, it comes down to about 480 crore. Now, they were disbarred from participating in a few projects, etc. So it's gone through a challenging time financially, but the stock has corrected a lot. So,
by the way, just one point. So they were the promoters that said they will not participate in NHAI orders till November.
Okay.
So November now. So I think that perhaps has passed, and that perhaps is the reason why second quarter looked, because they did not participate.
They didn't participate. The top line went down 66% in Q2. Yeah. So I'm saying there are a lot. You were talking about finding value in beaten down stocks. Have you looked at anything in this infrastructure construction space, sort of forgotten?
Yeah, Rima, actually, something, we kind of like where there is reasonable cash flows. Also, where there is maybe even a dividend yield supporting downside. So I think some of the metals stocks that we had talked about earlier have done quite well. They've held up. Things like Vedanta have done reasonably well in this sort of an environment. But one pocket which looks interesting to us is maybe the IT services space. The large cap stocks in the IT services space have gone through a reasonably long time correction. There are obviously worries on what will AI do to their business. But having said that, I think the opportunity size, even for the IT services companies on the AI side, will be quite large. And, we have the leaders there. I don't need to name them. You just look at the top 2-3 large cap stocks. They're all trading at about 20 times earnings. And I think the leader itself is trading at a 4% dividend yield. So, these stocks remind me of, something like, when ITC was battered and bruised post-COVID, it was trading at about 4-5% dividend yield, but nobody wanted to touch it. All those issues about ESG and whatnot. I think the IT sector is similarly placed. I think 12 months from now, I think it could be quite different.
Okay, so you would bet on the TCSs, Infosys on the world, large cap IT over mid cap IT stocks like a Persistent, Coforge, where growth rates are higher.
Yeah, I'm just saying, Rima, nothing to be against say a Persistent or the others. I'm just saying that companies like TCS seem to be really attractively valued right now, and even if they were to eke out 8 to 10% growth with a 4% dividend yield, I think the stocks are trading quite attractive.
Any other pockets of interest, value, according to you, where the risk reward looks favorable?
I think this is one which is quite glaring to us, but there are several pockets within the small cap space where companies have gone through some sort of issues, either because of the tariff or some other one-offs, and have been beaten down. And that's some pocket that we are looking at. Obviously, these are more illiquid spaces of the market. So we are trying to focus on areas where we can deploy reasonable capital. So the larger cap ones where we are seeing value, one is obviously IT. Apart from that, even some pockets on the metal side also look interesting.
Mithun, give us some names with the caveat that you are studying these companies. That it is not a stock recommendation, but it's of interest to you. I'm putting that caveat on the table.
Yeah, I think so. We're still in the process of evaluating some of them. Like I mentioned, I think I talked about TCS as one which looks quite attractive to us at these levels, and the large cap IT space. Apart from that, what
in mid and small caps, you said mid and small caps.
Like I mentioned, we're still in the process of evaluation. It won't be right for me to throw out names, but what we've spoken about even earlier, things like the textile space. We spoke about it last time as well. A company like Arvind Limited, I think it's very attractively valued. Despite the tariffs, the company posted reasonably healthy numbers in Q2. And if we were to get some sort of resolution on the tariff, these companies would definitely get a leg up. And valuations are not very rich even in companies like that.
Okay, all right. Mithun, interesting. Good conversation as always, and we'll look out for the next one. By the time, probably more ideas would be on your table. Thank you for joining in today. By the way, while we were speaking with Mithun, the Nifty for a moment slipped below 26,000. Pull up State Bank of India. That's the latest one that is adding to the downside pressure. Anyway, all of banking is weak. SBI is also slipping as we speak. So it's tough going, still about 160 points lower on the Nifty. And pull up the currency. There's no major pullback. The rupee continues to hover around levels of 89, 87. That's where I think it is right now. Yeah, 89, 87. So no major respite on the currency either. We'll do one thing. We'll take a quick break, come back on the other side, and we'll get you some final trading calls with our technical experts, and then back with more stock ideas. Welcome back. So the market's still under pressure. Let's figure out what's happening with the Tuesday expiry. How's that playing out, Mangalam?
Well, the market's currently at the low point of today's trading session, but there are data points that tells you that maybe in the next 15 to 20 minutes we see some bit of recovery from the lows. Why do I say that? Because one, the Nifty after breaching that 26,000 mark has now gone back a little above that. So that's, the first rule of the thumb. Even as the Nifty Bank and Midcap index are underperforming, we've seen some action at the 26,000 put and the 26,050 call. Now, typically with the market having fallen about 150, 160 points, you would see the 26,000 put be in the green, but that's actually turned into the red, and with a lot of open interest backing that, that's telling you that maybe the street believes that this is a place where the market will find support. The other part is the 26,050 call. Still equally active in today's trading session for a premium of 1.5 rupee. It would make sense for someone to, be punting that on the long side rather than the short side. So that's something that I'll be watching out for. And alongside all of this, even with a big decline in the market, the India VIX has actually come off the high. So the India VIX right now is marginally in the red with a lot of punts made on the long side towards 26,050 and support around that 26,000 mark. The India VIX is down 3%. From today's high, it's down about 6%. And finally, the put call ratio as well, which has moved lower from 0.9 to around 0.8, telling you that the market is slightly oversold, at least as far as the expiry is concerned. So the next 15 to 20 minutes, if the market does show signs of recovery, we'd know why. Otherwise, we'll see a bigger gash, and that would be towards the 25,900 mark, which is around the 20-day moving average on the frontline index.
Okay, all right, got that. Mangalam, thanks very much for the latest update from the F&O market and the cues that we can pick up over there. With that, let's go to Mitesh as promised for some final trading calls. Mitesh, what are you working with?
So I think, again, the market hasn't recovered as we approach the last half an hour. So we've had both buys and sell calls, and I think we'll continue with that approach, keeping some long positions and some short positions because one, the broader trend has reversed. This still looks like a pullback to me. So earlier I had Scient in the day as a buy call. Now I would recommend a BTST there. Keep a stop at about 1164. Look for a target of around 1195 to about 1200. Most likely to be hit by tomorrow. And on the negative side is Havells with a stop at about 1432 for targets of 1405.
Okay, all right, Mitesh, thanks very much for all the advice today. You have a good evening, and we'll connect again with the market tomorrow. For the time being, let's put the spotlight on what has been the biggest story of the last 24 hours, and that is the Indian currency's downward or southward journey. And that's actually continued today. There's been hardly any respite even as we speak. The rupee is still very much around those low levels of 89, 85. The reasons we all know: negative sentiment, FPI selling, the lack of visibility on the India-US trade deal, and the RBI not intervening in any aggressive manner in the market. Lata has more perspective on this. Over to you, Lata.
Well, first the numbers, 89.50 overnight. And now 89.95, so pretty close to the 90 mark, about a 40 paise fall or a 0.4% fall. Could become even a 0.5% fall. The slide is, the reasons are not new. The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is supplying dollars. Closer to the 90 rupees per dollar mark, even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
No, absolutely. Asian Paints is what we want to talk about next. The stock is higher today. UBS has upgraded their view to neutral from a sell. Mangalam is standing by with the rationale. 3% actually today now. Mangalam, take it away.
The stock is the top Nifty gainer in an otherwise wobbly market, and that's after a brokerage note that has come in. In fact, it's the third or fourth brokerage note in the last 2 months which has seen an upgrade from a neutral stance or perhaps a negative stance. Asian Paints, UBS has upgraded from sell to neutral. They've also raised the target price from 2,100 rupees all the way up to 3,200 rupees. And they've said that the second quarter volumes, the second half outlook looks fairly bright. And the peak of disruption cycle perhaps is over. And they are expecting a 12% sort of growth coming by, which is the 15-year CAGR that the company has shown. However, they flagged 3 scenarios as well. One, competition continues with structural growth moderation for Asian Paints, but margins are not impaired. This could drive earnings growth to around 12%. And if growth moderates and margin pressure continues on intense competition, their downside case is around 2,400 rupees on the stock. And finally, an upside valuation if competition comes off and margins improve. Their base case, bull case, is 4,000. So 4,000, 2,400 and 3,200 are the 3 prices or target prices, basis scenarios that UBS has for Asian Paints. In fact, we spoke to the management, and in an exclusive conversation, the management gave us a peek into what lies ahead for them.
Even now, while you are seeing some shoots in terms of the demand, we are not seeing that there is belligerence, there is full exhilaration coming into the market to that extent. We feel that today the rural markets are just coming back, even the urban centers are just trying to show some spark. I feel that possibly it will take some time before we really get on to the parameter of really double digits and so on and so forth.
How long will it take?
It's very difficult to say, but I would say that possibly another 2 quarters is something we need to kind of watch out for sure in terms of what we are looking at. So therefore, right now, I think the whole peg is in terms of saying that we continue to grow higher than the market, and that's the pitch in terms of what we would take.
And you haven't been doing so for the last few quarters, and now you're confident of doing that, right?
The first 2 quarters of this year, we have grown higher than the market to that extent. And as you look at the H1, we have grown much higher than the market overall.
So you will continue to gain market share?
That's absolutely.
50,000 crore revenue on Asian Paints, by when?
Okay, definitely for the next 4 years.
In the next 4 years. Amit Singhal stays in Asian Paints for the next 5-6 years at least?
I think from my mindset, eternally.
One piece of advice that you would like to give some of your competitors?
The advice is that when you kind of operate in the market, okay, operate with a certain value, a certain ethic, and look at possibly differentiating yourselves far more strongly rather than being me too in terms of the market.
And to the investors, what will you say, who've been sitting on 2 years of losses?
I think the investors will see that this is a brand which they will have to watch out for, because there are lots of things which are coming, and we think that possibly we have our clear eyes on the stakeholders and we will give them a good return.
Asian Paints has made quite the comeback over the last 2 quarters at least, growing faster than the market, and that is the endeavor. You can catch the full conversation later on in the evening, 5:30 p.m. and 7:30 p.m. only on CNBC TV18. Well, the other big mover today is Wockhardt. In fact, yesterday it was up 20%, and even today in a sluggish market, it's holding up in the green. 1.8% up now on Wockhardt. We caught up with Habil Khorakiwala, founder and chairman of Wockhardt, where he shares that the approval of Sensex is expected to come by middle of next year from the US FDA. He also adds that Sensex should record $1 to $2 billion of peak sales globally. Listen in.
For the first time for us and for India, a new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US. So it is only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product. This drug has proved a remarkable efficacy and safety, because one of the important things in antibiotic is normally not given for a week or two. It was given longer time because the patient came at a very last stage. Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
Okay, well, that's walk hard for you. Stock was up about 6.5% at one point. It's, of course, given back bulk of those gains, just about 1.5%. Of course, yesterday it saw that 20% massive move. Jay Bala is with us of cashthechaos.com. Jay, good to have you here. Thanks for joining us. So will the 20-day go on the downside? What's your sense? You were a little more constructive the last we spoke, Jay.
Yeah, hi Prashant. Yeah, the market short term has become a little bit, here and there. The fact that the markets haven't been able to follow through on the fresh record high tells that the markets are waiting for some sort of pullback before the actual move actually comes through. But the fact that the markets have registered fresh all-time high, that's a bullish sign. It might just, the big move that usually comes with the fresh record highs, that may get slightly delayed. The key level to watch out for is 25,840 on the Nifty. If 25,840 were to go through, I would expect the Nifty to go somewhere close to the August low of 24,400 and then launch a fresh attack on the all-time high. So, but the short point is that very short term is getting hazy, but there is no change in the outlook somewhere between March to May 2026. I'm expecting 29,000, which I continue to expect.
March 26. March 26, right?
March 2026. So that's about, say, 4 months away. So if the markets were to drop below 25,840, this scenario of markets going closer to the August low will come up. And then we are expecting fresh record highs to come in the calendar year 2026.
So first we go to the August low of 24,400 or first we go to 29,000?
Yeah, that's the thing. That's the reason why I've given 25,840. So until 25,840 is not broken, we can anticipate fresh record highs to come through now. Okay. But if 25,840 were to get broken, then the scenario that 24,400 is coming first, and then further record highs to 29,000 is coming much later on. But if 25,840 were to hold and not break, we can still anticipate fresh record highs and the follow through for the break of 26,277, the September 2024 high, to come through now itself. So watch out for 25,840 is a very important level.
Okay, that's the line in sand. What are the stocks, Jay, that you're looking at where you are observing interesting patterns?
Yeah, we need to get much lower on our allocation because we are at crossroads. So with that in mind, take these two stocks. I have one. The first one is on the cement space, Ramco Cements. Ramco Cements is seeming to put in a double bottom around 960, 965. So it has upside potential in the short term about 1160. The second one is a continuing trade on Maruti. I've been bullish on the auto space since July. And I'm continuing to see Maruti scale fresh all-time highs. But again, you got to be a bit more measured in your approach here because it's run up quite a bit. And the auto sector also has done quite well. So allocate much lower. Long Maruti around 20 with a stop loss of 15,500 with an objective of 17,200 to 17,400.
Okay, so Maruti is a long. On financials, Jay, what are the trades? Because that's, I mean, most of the financials, that's been the best performing part of the market, right? Starting with Bajaj Finance itself. Would you look at this dip to buy anything where you still see momentum, or is it a time to start taking some profits on a trade that's worked very well over the last few months?
Yeah, looking at it from a medium term and a short term perspective, the fact that HDFC and ICICI are not participating, and HDFC Bank in particular looks like it might be causing a double top. That's raising a bit of concern. But from a sectoral perspective, as long as the banking sector stays above 57,629. From a medium term, the overall view for the banking sector and the financials remains bullish. So watch out 57,629 on the banking sector. The index resistance at about 61,000, and the supports are about 57,500 to 56,737.
Jay, stay with us. We're going to take a quick commercial break here. Come right back and continue this conversation. Stay tuned.
Welcome back. While the Nifty is defending that 26,000 mark by the close of trade, the Nifty Bank continues to grind lower. And now it's down close to about 400 points. Pull up that intraday chart on the Nifty Bank. The sell-off has accelerated in the last 30 minutes, and heavyweights like ICICI Bank, Axis Bank, HDFC Bank, all down over 1%. So this reconstitution of the Nifty Bank to reduce the concentration risk of names like an ICICI Bank, HDFC Bank, weighing on the sentiment today. Jay, you want to come in on these large cap banks?
Yeah, it definitely is a cause of concern for the overall Nifty's trend and as well as for the banking sector. Axis Bank within the private banking space is doing pretty well, but ICICI Bank has been clocking lower lows and lower highs. That's not an encouraging sign. And the fact that HDFC Bank is struggling around 1020. It has potential to be a double top or triple top if it were to go below 940. So these are pivotals, and they need to reverse this negative potential. So far it's just a potential, and I would be more concerned if HDFC Bank were to drop below 920 more than ICICI. The markets have been managing to do reasonably well even with ICICI's weakness, but two heavyweights, trending negatively will cause a little more negatives for the overall market. So these are key stocks, and the key level is 920 on HDFC.
Okay, so these three large banks, ICICI, Axis, HDFC Bank, exerting pressure. But outside of that, heavyweights like Reliance Industries, L&T, ITC, also weakening in trade, and these stocks are down approximately close to about 1%. Jay, rupee, that's taking all the headlines, continues to hit newer lows. Do you want to tell us in your assessment where it's headed?
The long-term forecast for the rupee in 2019 was for the rupee to get to about 93. But the intervention that happened for the rupee during the Governor Shaktikanta Das's time looked like it might have put a lid on it, but it looks like the original trend is in place. But from a long-term perspective, rupee is on its final leg of weakness. It could top out or it could bottom out somewhere about 91 to 93. So watching it pretty closely. If it were to print 88.9 and then go back to fresh low, then that's a very good sign from a long-term perspective. So the long-term call is that once 93 or 91 to 93 is done, the rupee is set to strengthen on a secular basis for about 5 to 7 years. But we still have fresh record lows likely to come through in the short term. So and it could also be for the next 3 to 6 months, maybe even a year. So it's the long term is looking encouraging, but we have possibly new lows coming in the short term.
You're actually saying that we'll see after these lows appreciation for a few years.
That's right. It could be as much as 77 to 72 to the dollar, but that's a 5 to 7 year forecast. But first we need to not lose sight of the possibility that further lows somewhere about 91 to 93 is coming. Post that, that it's likely to be a secular strengthening move for the rupee. Now we are looking, if you understand a bit of Elliott waves, we are talking about the fifth of a fifth for the rupee from 1974.
I see. 91, 93 is already almost there, Jay. It's not very far away. So we'll see. What about the global scene, Jay? What's your sense on what's striking, if anything at all, to you?
Yeah, the US equity markets have possibly bottomed on the 21st of November or got one more low below the 21st of November. The broad point is that the market's movements from the October highs is a corrective decline, and sentiment for the US markets isn't supportive of a major decline from current levels. So if we have to see one more low below the 21st of November's low, and that will be a final low for the US equity markets. It's already bottomed here, and it's heading to if you take the broader S&P 500, it's possibly heading to 7,400 with or without a new low below the 21st of November low. But so basically, I still remain bullish on the US equity markets, same like the Indian markets.
Okay, so that's how things are shaping up for the currency, for the dollar. For the Nifty, by the way, as we start today's recap, Jay, thanks so much. Just, give us a couple of minutes. We'll, start wrapping up the day. For the Nifty, I guess the Tuesday expiry has been a bit of a saving grace because it's forced at least some of the shorts to cover. And we've seen that build-up happen at just around the 3 o'clock mark. So some recovery from the lowest point. Otherwise, at one point, the index had slipped below the 26,000 handle as well. Okay, so let's see where the pain points were. Actually, pretty much all across. Financials were definitely weak. ICICI Bank, Axis Bank, HDFC Bank. These are some of the big stocks on the way down. Beyond the financials, you've also got Reliance and L&T, so other big boys as well, facing the pressure today, down about 1% on both Reliance and on L&T. ITC has lost about 0.8%. And some of the metal counters came in for profit-taking as well. That would include names like Hindalco and JSW Steel. Interglobe Aviation is the weakest stock on the Nifty as we're closing out today, down 1.5%. Now, on the flip side, there's Asian Paints, up 3%. Dr. Reddy's, Maruti and Bharti Airtel are some of the other names that have managed some gains. Lever also on the upside, and some buying in large cap IT, Infosys, Tech Mahindra, TCS. Not too much, but they've all managed gains of a couple of rupees here and there. So that's the picture. But yeah, definitely a weak day, but not only for the large caps, Rima, even the mid caps. No great shakes today.
No, the Midcap index is ending with a cut of about 0.2%. The big drag is Bajaj Housing Finance on the back of the large block deal where the promoters, to comply with the minimum shareholding norms, probably have sold some stake. So off for sale there, stock down. Other losers include some in the banking pack. So you had a Bank of India weak in trade, 1.25%. Sale was subdued. On the way up, Spark, positive regulatory news, stock locked in an upper circuit of 20%. HCC, rights issue of 1,000 crore. The record date is 5th December, so seeing some buying ahead of that. Prostram saw very, very large volumes. I think volumes were close to about 1,000 crore in terms of a total value. Vodafone Idea, investors hopeful of an AGR relief maybe by the end of this calendar year. Yes Bank could be a beneficiary, could see inflows on account of the rejig taking place in the weightages for the Nifty Bank. So Yes Bank saw some buying. Physics Wala was grinding lower for the last couple of days, but has bounced back. All in all, the advanced decline ratio was negative, 1:2. But Prashant, the big headline was rupee once again, and that dragged the markets lower. So it's a soft close.
Not 90 yet.
Not
right?
90.
So maybe a bit very, very close, of course, got to 95. Just 5 paise away from the 90 odd levels. Tomorrow, of course, is the, I think, issue opening of Meesho. That's the other big story which we will track. We have the management join us tomorrow morning as well. Apart from, of course, everything else we will track. It's a wrap on this edition of Closing Bell. From all of us here, goodbye. Thanks for watching. Markets forward. We'll pick up on all the action. Jai Bala, of course, stays on. Stay tuned.
The Lal Street ends in the red for the third straight day after a broad-based fall. Heavyweights like Reliance, HDFC Bank, ICICI Bank are amongst the top losers.
The Indian rupee hits another record low, inches closer to the critical 90 per dollar mark. The currency has depreciated nearly 4.5% this year against the greenback, with uncertainty around the India-US trade deal emerging as the key factor behind the fall.
Shares of Bajaj Housing Finance crack after a large block deal. 2.3% equity worth nearly 1,900 crore rupees changes hands. Promoter Bajaj Finance is the likely seller. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Reema Tendulkar. With me is Harmis Patakia. Harmis, another day, another decline and a new low on the rupee.
A new low on the rupee, and that's what has been the case over the last 3 or 4 sessions now. Ever since you hit that record high last Thursday, it's just been a bit of a downward trajectory. Even the intraday recoveries that are been taking place are getting sold into the currency. 89.87 made an intraday low of 89.95, and the index, well, it briefly broke below that 26,000 mark, has somehow huffed and puffed its way back above the 26,000 mark as of closing. Of course, the banks were the key contributors to the downside, but it was the broader market picture that also remained the same. The advanced decline ratio as well, the market breadth has been concerning, and that has been the trend over the last few sessions, Reema.
Indeed, about 900 stocks advancing today for about 2,000 stocks which ended in the red. So the Midcap index was down about 0.2%, but the gap between the two, advances and declining stocks, was fairly wide. Let's tell you what we've lined up for you on our show today. We start with the top movers and shakers. Upasana joins in. Rupee, that's the big story, inching closer to 90 against the dollar. We'll get you the key reasons behind the decline. Asian Paints, top Nifty gainer after UBS raises the target price by 52%. And Bajaj Housing Finance's 2.3% equity block deal hurts the stock. And finally, we'll tell you the big events to watch tomorrow.
On to our first segment of the day. Upasana is here and she will list out the big movers from today's session. Upasana.
Well, certainly the banking stocks remained in focus today as NSE revised Nifty Bank Index. Hence, Yes Bank and Union Bank to be included in the Nifty Bank with effect from 31st December. Hence, we saw Union Bank, Yes Bank in focus. Union Bank saw an up move of about 1%, Yes Bank an up move of about 1%. But ICICI Bank and HDFC Bank is likely to see the reduction in their weightage overall. Hence, even these stocks remained in focus. And lastly, coming to Bank of Maharashtra, the government to diverse 5% stake in the company via OFS. It has seen a fall of nearly about 0.1%. Now, next, moving on to the defense stocks, they see a correction, entire defense pack. The BEL, GRSE, Data Patterns, MTAR Tech, they saw a correction of about 1 to 4% in today's trading session. Now, let us look at the key newsmakers in today's trading session. Spark remained in focus, up nearly about 20% as US court rules in favor of the company. HCC also remained in focus with a sharp up move of 10% as the company releases 1,000 crore right issue details with a price of 12.5 and record date of December 5 is what the company has indicated. MV Photovoltaic Power, which is the first, released its first Q2 numbers after its listing. It was a strong set of numbers, strong growth on a low base. EBITDA up nearly about 4.3 times and margin saw an up move of 1,200 basis points. Bajaj Housing saw a decline of 7% as promoter Bajaj Finance sold 2% stake, and Websol Energy also remained in focus with a sharp up move of about 6.5% as it saw a biggest single day gain as the company signs MOU for PV ingot and wafer manufacturing in India. And lastly, let us look at the key stocks that hit 52-week high today. Asian Paints on the back of the UBS upgrade, Union Bank and Jamna Auto. So all in all these stocks were in focus today.
Upasana, thank you for that update there. Now shifting focus back to the key talking point over the last 2 sessions, that has been the rupee. There's a new record low against the dollar, inching closer to the 90 mark now. The currency has declined nearly 4.5% year to date. Lata is now joining in. Lata, what is the reason behind this steep fall?
Well, First, the numbers, 89.50 overnight and now 89.95, so pretty close to the 90 mark, about a 40 paise fall or a 0.4% fall. Could become even a 0.5% fall. The slide is, the reasons are not new. The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is supplying dollars. Closer to the 90 rupees per dollar mark, even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
Lata, thank you for that update. And the big stock talking point in today's session was Bajaj Housing Finance. Of course, the block deal that took place, promoters being the sellers, 7% lower on the stock today. And it's been this much talked about IPO when it came out last year. Bids worth over 3 lakh crore that were received. A very stellar listing. The stock made a post-listing high of close to 190. But from those levels, the stock has halved in the next 12 months. Today made a 52-week low of 95 rupees. Now, you took a look at the block deal as well. Even today, after the promoters ended up selling around 2.5% stake, they still have close to 86% stake left. So, in order to be compliant with the minimum shareholding norms, they still have to pare down stake further. Now, mutual funds don't have a significant stake in the company. So, who has it? Other than the promoters, of course, it is the retail shareholders. The retail shareholders at the time of listing were around 17 lakh. And as soon as the stock made that post-listing high of close to 190, retailers continued to pile into that stock. By December of that year, it was at 26 lakh. Even now, it's at 24 lakh shareholders who have close to 8% stake in the company. So it is retail and the promoters who have a majority stake in Bajaj Housing. The overhang, of course, that is that big one, right? The promoters looking to sell stake further. When does that happen? Of course, that will be determined as time will tell. But that will remain an overhang on the stock. It is now nearing its IPO price of 70 rupees. And the bigger worry is that the fact that the promoters are selling shares when the stock is at a 52-week low. So they have to be compliant, they have to sell shares, and now when the stock has corrected 50% from the highs is when this stake sale is taking place. So Bajaj Housing, possibly the casualty of the day, 7% lower on the stock, and still the big promoter overhang still remains.
Okay, let's get in Jay Bala. He's been with us from Closing Bell, and Sudeep Bandopadhyay, Chairman of Indie Trade Capital. Sudeep, is Bajaj Finance, Housing Finance, after the fall, a 50% fall from the top, attractive enough or not yet?
Well, Rima, not enough. I think still it's about 4-time book. And a housing finance company at 4-time book is definitely, you have to be very, very careful. And here you have to also consider the fact that the promoters will have to further sell shares to pare down the stake to the 75% level. So I think it's better to wait and watch. If the promoters are able to do deals with funds in a manner that it doesn't affect the market price, well and good. But it's a matter of future. We don't know what's going to happen. In any case, the valuation still is kind of rich.
Jay, if the charts have enough data, it was almost around 15 months now. Important levels on the downside that you'll be watching out for on Bajaj Housing?
What is clear from the charts with the limited data is that it doesn't seem like it has bottomed. It's probably got at least a sequence of lower lows and lower highs to come through. Yeah, so and the momentum is strongly with the downwards price action. So I wouldn't venture, to get into bottom fishing on the stock. But when it comes to it's a related stock, Bajaj Finance, that could have short-term dip, but the medium term looks bullish. So I would say I would extrapolate that and maybe arrive at a conclusion that Bajaj Housing has probably got a short-term bottom, which could be turn out to be a significant bottom even for the medium to long term.
Short-term bottom perhaps in place technically, but fundamentally, Sudeep is not convinced. Stock could head lower. There is more supply coming. But let's get to a CNBC-TV18 exclusive. Mastek promoters are planning to sell nearly 20% equity at a premium of up to 25%. Rachna is now joining in with the details.
That's right. Sources have told CNBC-TV18 that the Mastek promoter group is exploring the sale of nearly 20% stake in the company. Now, this is significant because the promoters currently hold about 36% in the company. So the sale being contemplated is definitely way more than just a routine dilution process. It could meaningfully reshape the shareholding structure. What's also noteworthy is the pricing. Now, people in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of the sale has two big triggers. First is succession planning, and the other one being a broader effort to bring leadership stability after a year of major top deck changes. And that's important context because Mastek has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts. First, there was Raghvendra Jha, who became the CFO in May 2025, and then came Deepak Kedia, who took over as the CFO in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset, the one that aims to give the company a steadier foundation as it leans into its next phase of growth. Now, according to sources, the promoters are sounding out a mix of strategic investors and long-only institutional funds. That aligns with Mastek's revenue footprint, where nearly 65% of the business comes from the UK and Europe. Now, Mastek was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar, and the late Sudhakar Ram. As always, we did reach out to the company for a response, but Mastek declined to comment on CNBC-TV18's queries.
Rachna, thank you for that exclusive news break. Sudeep, earlier when promoters used to sell stake was a matter of concern. Today we live in times when promoters selling stake, well, it's all right. The recent sentiment impact, and then we get on to business as usual. So your call on Mastek, if you have one, and the general mid-cap IT space as the beneficiary of the weakness that you're witnessing in the rupee currently.
Well, almost, I think as far as Mastek is concerned, it's going to be a management change. So I won't be surprised if it gets followed up by a public offer. So a lot of interesting things, corporate action is expected in the counter, because if promoters are selling 20% out of their 36%, obviously they are seeking a 25% premium. That implies management change. I'll watch this space very, very carefully as far as Mastek is concerned. And it's very difficult to take a call on Mastek at this stage. So I'll kind of stay out of it. We know that a lot of their business does come from UK public services and government contracts. There has been some challenges because some other large Indian IT companies have won some of the contracts which used to be with Mastek earlier. So there is a bit of a concern. And some amount of management change probably is good for the company in the long run. As far as IT companies are concerned, we do like the travel tourism focused technology companies. So RateGain Technologies, Coforge, and the likes. We also like, the automobile transition, EV to IC to EV transition oriented technology companies, whether it's Persistent Systems, Tata Technologies, and the likes.
Gentlemen, thank you very much for joining us today. Moving on now to another big mover, Spark, Sun Pharma advanced research company, hit upper circuit after the US District Court ruled in favor of the company and granted summary judgment for Sezaby priority review voucher. Ekta joins in to, uncomplicate that.
Well, yes, Spark has been in focus in today's trading session, seeing significant upside. This is because the US court has granted a summary judgment in favor of the company. Now, the judgment is in favor of a PRV on the drug Sectoral, which the company has in its portfolio. Now, PRV stands for Priority Review Voucher, which is basically a transferable certificate which is granted by the US FDA to companies for making drugs for neglected diseases. So it is basically an incentive for developing drugs that might not be as profitable. So what exactly is this particular priority review voucher? It allows the company to get a faster 6-month review for another drug application. And remember that they are transferable. So companies can sell or license them to others for a larger sum of money. So the court had held, that FDA's withholding of the PRV was contrary to the law, and that's the reason why Spark has now gone up. Sectoral is basically Spark's injectable drug, which is used for neonatal seizures, and it was granted orphan drug status by the US FDA, and Sun Pharma also has marketing and distribution rights for this particular drug in the US markets.
Ekta, thank you for that update. A 20% upper circuit for Spark in today's session. Sparkling indeed. Asian Paints was the other one that saw a late surge in today's session after UBS upgraded the stock to neutral from its earlier rating of sell, and the brokerage also raised its price target by as much as 52% to 3,200 rupees from the 2,100 rupees target that it had earlier. Now, UBS has highlighted that Asian Paints' volume growth in the second quarter was very strong, and the second half of the year is expected to remain as strong as well. Now, we spoke to the company's managing director and CEO Amit Singhal, who said that the firm is witnessing a surge in demand with rural markets showing a clear sign of a comeback. Listen in.
Even now, while you are seeing some shoots in terms of the demand, we are not seeing that there is belligerence, there is full exhilaration coming into the market to that extent. We feel that today the rural markets are just coming back, even the urban centers are just trying to show some spark. I feel that possibly it will take some time before we really get on to the parameter of really double digits and so on and so forth.
How long will it take?
It's very difficult to say, but I would say that possibly another 2 quarters is something we need to kind of watch out for sure in terms of what we are looking at. So therefore, right now, I think the whole peg is in terms of saying that we continue to grow higher than the market, and that's the pitch in terms of what we would take.
And you haven't been doing so for the last few quarters, and now you're confident of doing that, right?
The first 2 quarters of this year, we have grown higher than the market to that extent. And as you look at the H1, we have grown much higher than the market overall.
So you will continue to gain market
That's
there?
Absolutely.
Get into a break on that note. We'll come back with the top corporate voices and the big events to watch tomorrow. Stay tuned.
Welcome back. On to some top corporate voices from the day gone by. The founder and chairman of the Wockhardt Group, Habil Khorakiwala, told CNBC-TV18 that the company expects US FDA approval for its antibiotic Zynic by the mid of next year. The group anticipates global peak sales of anywhere between $1 to $2 billion, with 40% expected to come from the US markets. Remember, just yesterday, the US FDA accepted the new drug application for Zynic.
Shree Cement is also gearing up for a strong year ahead. Chairman H.M. Bangur told CNBC-TV18 the company is on track to meet its full-year projection of over 36 million tons, with the all-India market share being steady at 9%. He added the EBITDA per ton is expected to be around 1,100 to 1,200 rupees, with H2 matching H1 levels. The company plans to use its cash flow for the 80 million ton capacity expansion. He further added that North India volumes may dip, but other regions are witnessing growth.
And before we wrap up on today's edition of Markets Forward, here are some key events that you need to watch out for going into midweek trading. Upasana is standing by with just that. Upasana.
Well, first up, let us look at the global economic cues coming to US first. Industrial production data will be out. Now, coming to Japan, Hong Kong and India, all these three counters will be reporting their S&P Global PMI data. So we'll be keeping a close eye out on that as well. Bank of Maharashtra will be in focus as the OFS for retail investors open tomorrow. Now, on the IPO front, Meesho, a 5,500 crore IPO opens for subscription tomorrow. Aquis IPO, 921 crore size, opens for subscription, and also Vidya Wires, 300 crore IPO opens for subscription as well. Now, looking at the other data, the most important RBI MPC meet is tabled for tomorrow. The three-day monetary policy meeting begins on 3rd of December, and the final decision will be out on 5th of December. So all in all, looks like quite a powerful day tomorrow.
Thank you. And that brings us to a close in this edition of Markets Forward. We'll be back with more news and updates on the other side. Don't go anywhere.
and welcome to Business 360. I'm Ritu Singh, and here are the headlines that we're tracking for you this evening. The Indian rupee remains in free fall, hitting a fresh record low once again. $1 now costs nearly 90 rupees. The rupee is down 4.5% since the start of this year. Sensex and Nifty declined for the third straight day in a broad-based sell-off. Heavyweights like Reliance, HDFC and ICICI Bank lead the decline. Midcaps fare slightly better, but the index ends in the red. Bitcoin suffers the biggest single-day decline in 7 months as the sell-off intensifies. All cryptocurrencies are under pressure as investors fret over a new crypto winter. Bitcoin is down 30% from the record high in October. Telecom Minister Scindia defends a decision ordering smartphone makers to preload the state-owned Sanchar Sathi cybersecurity app. The minister also says users will have the option to disable or delete the app if they wish to do so, dismisses concerns over snooping or mass surveillance. Smartphone makers are not in favor of the government's directive on Sanchar Sathi app. Industry sources ask why their feedback was not sought and why the Ministry of Electronics was not consulted. Phone makers like Apple, Samsung and Google have no history of preloading apps mandated by the government. Lok Sabha proceedings are disrupted for the second day in a row. The opposition lawmakers raised slogans demanding a discussion on special intensive revision of electoral rolls underway in multiple states. US President Trump's envoy Steve Witkoff to meet Russian President Putin in Moscow to discuss the Ukraine peace deal. The White House says that the Trump administration is upbeat about a deal to end the war. Russia claims that its forces have captured 2 frontline Ukrainian towns. And the death toll in Sri Lanka in the aftermath of the cyclone, it crosses 400 rupees. Close to 3 lakh people have been displaced. 750 people have been killed in floods and landslides on Indonesia's Sumatra Island. Over 3 million have been affected. Well, the Indian rupee continues to fall, hitting another record low against the dollar. The currency is inching closer to the 70 mark, and it has declined nearly 4.5% so far this year. Lata Venkatesh joins us now. Lata, start with the reason behind the steep fall and if 90 is now imminent.
The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is supplying dollars. Closer to the 90 rupees per dollar mark, even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
Well, from the currency markets, thanks, Lata, for that. From that market, we'll move on to equities, where the last week witnessed a broad-based fall and ended the day lower for the third straight day. More than 35 Nifty stocks have ended in the red, with heavyweights leading the fall. The Sensex dropped more than 500 points, while the Nifty shed more than 140 points in trade today. Now, the U.S. Commerce Secretary Howard Lutnick has confirmed that the general tariff rate for South Korea will be brought down to 15%. This is going to be effective retrospectively from the 1st of November. The announcement has come after South Korea introduced a legislation in the parliament to implement its strategic investment commitments. Now, in a social media post, Lutnick said that the move will unlock full benefit of South Korea's trade deal with the U.S. South Korean auto stocks rallied on the back of this development. And speaking of trade deals, the United States and Britain have now announced a deal to secure zero tariffs on British pharma products for at least a period of 3 years. Now, under this agreement, UK is going to spend around 25% more on new treatments. UK drug firms have also committed to invest more in the US and create more jobs as well. But amid the uncertainty over a trade deal between India and the US, the Indian government is hoping to provide some relief for exporters. Sources tell us that the government is likely to propose a special economic zone bill in the parliament to help exporters tackle global uncertainties. Abhimanyu Sharma has been picking up these details and joins us with the latest. Abhimanyu.
Government sources have told CNBC-TV18 that India is likely to come up with an SEZ bill in Parliament to help exporters, many of which, particularly in labour-intensive sectors, have been facing headwinds since the past few months due to a decline in the total number of orders and geopolitical uncertainties, which runs the risk of job losses for many employees working with these exporters. Also, many exporters, many export units, particularly in labour-intensive sectors, have already cut down on their production and they run the risk of job losses. Now, to mitigate the problems which are being faced by these exporters, the government is likely to come up with such a bill which will allow sale of goods produced by these export units into the domestic market on a duty foregone basis. The SEZs will maintain their net foreign exchange positive status and a reverse job work will also be allowed as per the proposed bill. It remains to be seen how early the government is going to come up with any such bill and how early any such move is going to come into effect. Also, government sources have assured that there would be no loss to the prospects of domestic manufacturers, since already several exporters, several brands who have units stationed across several countries, including India's FTA partner countries, prefer to source goods, particularly labour-intensive goods, from FTA partner countries instead of India's own SEZs. So there would be no net loss to the prospects for domestic manufacturers.
Abhimanyu, thanks very much for bringing us this story. Now, the stormy start to the winter session continues and proceedings in the Lok Sabha were disrupted for the second day in a row. The House was adjourned for the day with hardly any business being transacted. Opposition lawmakers raised slogans demanding a discussion on special intensive revision of electoral rolls, which is underway in multiple states. Our top story this evening then, the government is facing a backlash after the Department of Telecom issued a directive to all mobile phone makers to pre-install the state-owned cybersecurity app, which is called Sanchar Saathi. Now, the government claims the app is essential to curb online frauds. Now, Telecom Minister Scindia had defended the decision today, citing 22,800 crore rupees were lost to cyber frauds just in 2024. But critics have argued that the app could become a tool for snooping and mass surveillance. Now, in its order dated the 28th of November, the Telecom Department had said that the app must be pre-installed. It also ordered phone makers to ensure the functionalities of the app are not disabled or restricted, and it said that the app must be visible and accessible when a new mobile phone is switched on for the first time. Now, companies were also at that time given 90 days to comply with the order and report within 120 days on the progress. Now, Minister Scindia defended the order and cited how opposition parties have been complaining about rising cyber frauds. The minister said that the app can be deleted if the user wants, and the app will lay dormant on the phone if a user chooses not to register. Now, just yesterday, Minister Scindia had defended this decision to make the app mandatory for all citizens. Here is what he said yesterday and today.
So, is this mandatory, and by when do they have to comply, all phone makers in the country?
I believe that this is being issued in the next couple of days, and it will give people time to be able to adopt it.
All right, so it will be mandatory and everybody will have to comply within a certain timeline.
कोई mandatory नहीं है. आप अगर register नहीं करना चाहते हो, मतलब कि उदाहरण के तौर पे इस ऐप का उपयोग नहीं करना चाहते हो, तो register मत करो. वो dormant रहेगा. Delete करना है तो delete कर लो.
Yesterday on night itself, I heard the act. It is an attack on privacy of the common people of this country. So actually, basically, this is an attack on constitution also.
This will be completely in breach of the privacy. आपको साइबर क्राइम को डिटेक्ट करने के लिए आपको पारदर्शिता चाहिए। आप मेरा फोन में घुस के साइबर क्राइम डिटेक्ट नहीं करने सकेगा। मेरा इंफॉर्मेशन डिटेल्स इंफॉर्मेशन देने का कोई अधिकार सरकार का नहीं है। This is totally illegal. This is totally unconstitutional.
Well, smartphone makers are not in favor of the government's directive on Sanchar Sathi app. Industry sources have asked why their feedback was not sought and why the Ministry of Electronics was not even consulted. But the big question that we're asking today is, why has the government made the app mandatory without wider consultation? Rashna Dharmajani joins us now to take stock of all of the developments. Rashna, for our viewers, what is this Sanchar Sathi app? What has it even achieved so far? And why is this whole thing turning out to be so controversial?
That's right. The Sanchar Sathi app has been active since 2023. Now, it's been an app as well as a website, and it helps you register complaints, cyber frauds, many other things. So let's see so far what has happened. But before that, let's understand that so far the app has been optional. But now the government wants phone makers to pre-install the app on all new devices. It must appear at first switch on. It cannot be deleted at the system level, and phones already in the supply chain will receive it through a software update. So what has this app done so far? According to the government's website, the app has helped disconnect 1.75 crore fraudulent mobile connections. More than 42 lakh stolen phones have been blocked and 26 lakh devices have been traced, and about 7.5 lakh stolen phones have been recovered and returned. Along with that, 2.5 lakh reports of scams have been lodged on the website. Now, once this app becomes mandatory, here's what it will be able to access. On Android devices, it can read the IMEI number, SIM details, and the basic device information. If a user reports a fraud attempt, it can access call or SMS logs. It also uses the camera and the file access when evidence is uploaded and may send SMS for verification and for registration. On iPhones, though, permissions are limited to camera and file access. But here's the thing to note. So far, when the app was not mandatory, all this information one had to put it manually. But now the published policy says that the app does not take location, microphone input, contact list, browsing history or biometric data. But any expansion on what data can be accessed in the future would only require a software update. Phone manufacturers have revised practical concerns. The 90-day deadline is difficult because software development, testing and certification cycles take much longer. Apple, known for its global policy framework regarding privacy, plans to convey its concerns to the government, whereas Android's global OS principles also do not align with the idea of a non-removable system app. This brings up a wider question. Is Sanchar Sathi evolving into a digital kavach for users, if that's what the government intends, or is it a push or does it push the country toward a Big Brother style environment? Well, the Telecom minister has said that the users can opt out of this app, but this adds complexity because Android's rules do not allow governments or manufacturers to add permanent apps with privileged permissions. A system that forces installation first and offers an opt-out later does not match Android's definition of consent, and it does not meet the global standard definition of informed consent either. On the legal front, the mandate is being viewed through the triple test that was laid out by the Supreme Court. Now, in a landmark verdict in 2017, a 9-judge bench of the Supreme Court made it clear that any invasion of privacy must be done through a legislation. It needs to have a legitimate aim, and the action must be proportional. This decision to make Sanchar Sathi app mandatory is not being done through legislation, but rather an executive action by the Telecom department. Stopping cyber fraud is a legitimate aim, so it passes on that one. But it is a mandatory app on all smartphones. The only way to crack down on cyber fraud is action proportional to the issue in question. That is what we'd be looking forward to.
Well, yes, the legality of the move and, whether that is the best way to tackle cyber frauds, that's something that citizens are surely going to be asking. Rashna, thanks very much for taking us through that story. Now, making the Sanchar Sathi app mandatory is just one way the government is hoping to address cyber frauds. The Department of Telecom has now mandated SIM-binding rules, and these make a SIM card mandatory to access over-the-top communication apps like WhatsApp, Telegram, Signal and others. The Broadband India Forum, which counts WhatsApp and its parent company Meta Meta as its members, has opposed the government decision. In a statement, the forum has said, and I quote, "The Telecommunications Act does not authorize the regulation of OTT communication platforms, nor does it provide the legislative basis to impose telecom-style operational mandates upon them," end of quote. Now, speaking to CNBC TV18 yesterday, Telecom Minister Scindia made it clear that SIM binding mandate will not be put on hold.
This is with regard to the SIM binding initiative that you've just launched. And this is for all messaging apps such as WhatsApp, Telegram, Signal. All of them have to comply with the SIM binding norms within 90 days. Why has this been done? And what is the larger intention? Because the industry is saying that there should be a pause on this for some time to allow for wider consultation.
In the last fiscal alone, people across the length and breadth of our country have lost close to 22,800 crores to cyber fraud. It is my responsibility as Telecom Minister to protect my consumers. And this indeed is a step towards that. As far as consultation is concerned, we've had 5 to 6 rounds of consultation, starting in early April into June, latest even close to November. Across the board, there has been a clarion call for this.
Well, we're going to take a short break on that note, but up next, the Bitcoin suffers a biggest single-day decline in 7 months as the sell-off intensifies. We'll get you details on that and more just a bit. Welcome back. You're still watching Business 360. Now on to the crypto markets, where Bitcoin suffered the biggest single-day decline in 7 months as the sell-off intensified. The crypto has now fallen 30% from its record high in October. The whole crypto market, in fact, has fallen 20% in just the last 30 days. Market capitalization has fallen below the $3 trillion mark, and this comes as investors fret over a new crypto winter. Manisha Gupta, our commodities editor, is here with more details on this decline in Bitcoin prices.
Well, thank you so much for that. Yes, when you look at the crypto markets overall, we are looking at very sharp declines onto this one. If you look at the overnight markets itself, it has been the biggest single-day decline that we have seen since the month of March. And with that, the overall crypto market cap has declined quite sharply to below $3 trillion as well. In this year itself, we did see $4.4 trillion of an all-time high. And from those kind of levels, it has been a sharp decline. So when you look at Bitcoin sell-off, it has been to the tune of $16 million. And overall decline, when you look at crypto exchange liquidations, has been quite sharp to the tune of $400 million in the overnight markets there. Well, there has been decline in futures volumes and open interest as well, telling you that the money clearly seems to be rotating out of cryptos into other asset classes. AI, some people feel as well, is where this money is flowing out. Well, interestingly, the kind of sell-off that we have seen has resumed for the month of December. It is about the risk of sentiment in the broader markets, which also seems to be impacting this decline. It also has to do with the shares in digital asset-related stocks within the Asian markets, which have been declining. And this has happened after People's Bank of China has warned about the illegal activities relating to digital currencies therein. If you look at the overall market, well, the Bank of Japan may hike rates as bond yields hit a 15-year highs. This has been one major reason that you have seen crypto see a slip and slide therein. It also has to do with the large leverage positions that we are looking at in the international markets, with the expectation that it still is a long in crypto, quite a bit long. And if it starts to come off, then there's a lot of money still invested into this space. So when you talk about Bitcoin exchanges, there's a leverage of around 200 times still in work there. Outstanding positions of around $787 billion is what we're looking at in overall crypto markets. And when it comes to crypto ETFs, well, the holding therein also is at around $135 billion. So there is still a lot of money invested within that space. It's about the last 1 month that the decline has been quite sharper, really. So when you look at Bitcoin, Ethereum or Polygon, this is the highest market cap that you have in various of these cryptos. They have seen a decline anywhere between 19 to 29%. And the list just goes on, because when you look at Solana, Cardano, Binance, these are again major big names as well. You have seen a decline of anywhere between 10 to 30% on them in the last 1 month as well. So we are now in the red, not just on a weekly basis, monthly basis, but YTD as well.
All right, the crypto sell-off continues. Manisha, thank you very much for bringing us those details. Now, shares of Bajaj Housing Finance fell to a 52-week low after 2.35% of its equity changed hands in a block deal. Stake worth almost 1,900 crore rupees was exchanged at 97 rupees per share. Now, the company said its promoter Bajaj Finance will sell up to 2% stake to comply with minimum public shareholding requirements. Bajaj Finance held 88.7% stake as of the end of September. Now, promoters of IT services giant Mastech are exploring a sale of around 20% stake in the company. Sources have told CNBC-TV18 that the promoters are seeking a premium of up to 25% over the current market price. The promoters currently hold around 36% stake in Mastech. The shares of the company rose more than 4% in trade on the back of this news. However, it ended the day flat. Now, the offer for sale for Bank of Maharashtra for non-retail investors is open today. The floor price for the OFS has been set at 54 rupees per share, and this is at a 6.3% discount from yesterday's closing price. The government plans to divest 6% stake in the bank. The floor price, the government will mop up. At that floor price, the government is going to mop up nearly 2,500 crore rupees. And shares of Swiggy jumped more than 3% in trade. This after a Bloomberg report suggested that the quick commerce giant plans to launch a $1.1 billion QIP, or a qualified institutional placement, next week. Now, according to the Bloomberg report, the company has shortlisted 3 banks to manage the share sale. Remember, the company's board had already approved this fundraise on the 7th of November. Now, Walk Hard also said it expects sales of its new antibiotic Zainic to hit $2 billion after the US FDA formally accepted its application for the drug. Speaking to CNBC-TV18, its chairman Habil Khorakiwala said that the drug could be approved by mid next year.
We expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
All right, moving a lens to the international news, where Russian President Vladimir Putin will meet U.S. Special Envoy Steve Witkoff in Moscow today. The White House said it remains very optimistic about reaching an agreement to bring the war in Ukraine to an end. Now, President Trump's son-in-law, Jared Kushner, who is an informal advisor in the ongoing diplomatic efforts, is also expected to take part in these discussions. This summit comes after 2 days of talks in Florida between the Ukrainian and U.S. officials. The death toll from Cyclone Ditwa in Sri Lanka has risen to at least 410. More than 1 million people have been affected and over 200,000 are now in shelters. The Sri Lankan president said that the island is battling the largest natural disaster it has ever seen. The opposition staged a walkout in the Sri Lankan parliament today after accusing the government of blocking a debate on urgent policy measures on disaster relief. The death toll from flooding and landslides across Indonesia has crossed 750. Officials have said that over 1 million people have been evacuated from affected areas. Arterial roads continue to remain blocked, hindering rescue operations across high-risk areas. On that note, we're going to wrap up this edition of Business 360. Thanks very much for tuning in, but stay with us. More news and updates will continue right here on CNBC-TV18 after this short break.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. The precious metals have shown bright overall in 2025, reaching new peaks throughout the year. The prices of gold have risen a whopping 60% so far this year, and the yellow metal is not far from seeing its best yearly gain since 1979. This as expectations and hopes that the US Fed will cut rates, keeping demand the bullion on the higher side. The clamor for gold is equally high back home in India, owing to the festive and the wedding season demand. The silver prices, in the meanwhile, have followed suit, climbing over 98% this year, continuing the strong rally of the last 2 years. But it's not just gold and silver witnessing demand. Well, the buying trends indicate an increased interest in lower caratages and studded jewelry as well for this year. To take the conversation ahead, I'm now joined by Vikas Kataria. He's promoter at DP Abhushan. I'm also joined by Subankar Sen. He's MD and CEO at Senco Gold. Gentlemen, hi. Thank you so much for joining us on the show today. And it clearly has been one crazy year where we have seen gold gain up by 60%, silver up 98%. So we've seen silver double up in prices as well. And I will come on both of these metals to both of you. But Subankar, first of all, in case of gold prices, we're trading at 4,200 right now. We've seen almost 4,400 on the higher side, with the markets anticipating that we're not done with these highs. Most global banks and brokerages are talking about 4,800, 5,000 and beyond kind of prices for 2026 and 27. What is your sense? I mean, you've been in the market forever. How are you looking at these price moves?
So Manisha, if you look at the overall picture and the scenario, we feel that if gold stabilizes at these current levels, like 41, 4,200, then there is a huge possibility that the way in the last 2-3 years it has always gone up by 20-25% year on year. That trend will continue to remain, which means that this 4,200, there is a high possibility that it reaches 4,200, say 4,800. So we shouldn't be surprised that today we see gold in the Indian rupee terms at around 1,30,000 rupees, and gold getting close to 1,50,000 rupees should not be a surprise to us with the way things have been happening. Now, the logic is why it should happen. Now, we're looking at the scenario in the US. The Fed will start cutting interest rate. We will soon have a new Fed governor who will be more dovish, and there will have to be more liquidity in the market. So with more liquidity in the market, there is a little bit of uncertainty with the stock markets, and people are talking on correction at the stock market level. So there is either a shift to the safe haven demand in gold and silver, or the higher liquidity that is going to be available, Japan, US, Europe, everywhere, there is an impact on gold prices going up. So this is how I think we need to look at it. In between, yes, there could be certain 5, 7, 10% corrections here and there. That is all I can say as a buying in the dip kind of a situation. But in the long run, I think we have to stay bullish with the gold prices and as well the silver prices.
Oh, absolutely. With the way we have seen rupee decline, inflation come in, and a lot of people are talking about on how perhaps gold buying can be that hedge to inflation as well, which it always continues to be. Vikas, hi, thank you so much for coming into our studios here. As Subankar says, it is going to be bullishness in gold prices continuing. What is your own sense for gold here?
Thank you, Manisha, for giving the opportunity. डेफिनेटली मैं सुअंकर भाई से 100% सहमत करता हूँ, क्योंकि जिस तरीके की वर्ल्ड वाइड अभी सिचुएशन चल रही है, अगर हम यूएस की बात करें या हम लोग बाकी जियोपॉलिटिकली अगर दुनिया में बात करें, तो हर जगह जिस तरीके से अनस्टेबिलिटी है, तो गोल्ड इज़ द रिजर्व करेंसी. सो सबसे पहले गोल्ड के लिए लोग जाते हैं. एंड जिस तरीके से पास अगर हम 2-3 साल पोस्ट कोविड हम देखते हैं, तो गोल्ड कंटिन्यूसली रैली कर रहा है. एंड ऐसा ही अगर सिनेरियो बना रहा, तो हमें लगता है कि कंटिन्यू गोल्ड ऊपर जाएगा. एंड ये इंडियन मार्केट में 1,50,000 भी बहुत जल्दी से हो सकता है. तो इट्स एंड ही सेड वेरी राइट कि जैसे ही अगर डीप आता है, तो इट्स अ गुड buying opportunity, तो हमेशा वो करना चाहिए.
All right. Yeah. So it continues to be bullish, and it's a good buying opportunity on every dip, as we would see in case of gold. So, Subankar, when it comes to the Indian markets itself, I mean, it is also being said that this year is going down as one of those where we are looking at higher investment demand and perhaps slight decline in jewelry. How are you reading those numbers?
Yes, the ETFs and the mutual funds and other funds have been buying into gold in a much more aggressive manner, while we see that the consumers have been a little apprehensive. So volumes में what we are seeing at our end is about a dip of 7 to 10% in terms of volumes. And value में तो देखने से अच्छा ही लगेगा, there is a around 25% to 30% increase in terms of value, but 7 to 10% decrease in terms of volume. Consumer का side से there are two behaviors. One is अगर it is 22 carat या जो भी ज्वेलरी है उसको लाइट वेट में कैसे कर सकते हैं, adding more stones to it and adding more elements to the jewelry, making it lighter. And there is a shift also in various markets where people are looking at 18 carat in the plain gold segment. Diamond jewelry maybe, there is already a good shift happening at 14 carat. 9 carat is also becoming, nice in demand for the gift segment. So the purity adjustments or the weight adjustments, this is the norm. And I think as jewelers, it is becoming a fast change that we need to do to cater to the demand of the consumer. And that's the way to look at it.
Because when we look at the Indian markets therein, we do understand that whether it's jewelry or whether it's coin or whether it's bar, it is bought as an investment. With the kind of prices that we are dealing with right now, would you say that gold perhaps is becoming way too expensive for people to buy? And as Subankar says, is the reason people would go for lower caratages and lower weight in sense of gold?
डेफिनेटली जिस तरीके से गोल्ड प्राइस सडनली जंप किया हुआ ये साल में अगर हम देखें तो मोटा मोटी 40-50% इंक्रीज़ हुआ है एंड थोड़ा इतना तेज़ी से बढ़ने से एक जो इमीडिएटली बाइंग होता है वो कहीं ना कहीं थॉटफुल हो जाता है कि हमें इमीडिएटली लेना है या थोड़ा रुक कर लेना है. सो वो हिसाब से थोड़ा कहीं ना कहीं जो डिसीजन है वो कहीं ना कहीं हुआ है. तभी अभी 18 कैरेट काफ़ी ट्रेंड में है, 14 कैरेट एंड इवन 9 कैरेट इज इंट्रोड्यूस. प्लस जो पहले वेडिंग ज्वेलरी काफ़ी हेवी जो होती थी उसमें भी थोड़ा चेंज देखने को मिला हुआ है. एंड लाइट वेट ज्वेलरी एंड कॉन्टेम्प्रेरी ज्वेलरी में काफ़ी सारा इम्प्रूवमेंट हुआ है. जो डेली वेयर ज्वेलरी का काफ़ी परचेस होने लगा है एंड वेडिंग ज्वेलरी में भी थोड़ा लाइट कैरेटेज एंड लाइट वेट ज्वेलरी बहुत ट्रेंड में है अभी.
Because also, when you talk about the Indian markets right now, when you look at various geographies within the country as well, would you say that also is quite categorized? Because South India is still buying 22 carats. It perhaps is north part of India that is buying 18 carats, and Western India, which is experimenting.
Yeah, so even this central India, central India and the west part of the India, north part of India, everywhere the 22 carat is the favorite of the customers.
Oh,
so
right.
कितना भी gold price कितना भी ऊपर चला जाए, तो finally 22 carat is the favorite category. ठीक है, price बढ़ने के कारण एक option और मिल जाता है कि 18 carat में भी कुछ jewelry अच्छी designs में बन जाती है. या जो jewelry 22 carat में heavy weight में होती है वो 18 carat में थोड़ा light weight में हो जाती है. So वो एक और category इन्वर्ट हो गई है. एक और ऑप्शन कस्टमर के लिए ओपन हो गया है कि हम लोग 18 कैरेट में भी ज्वेलरी ले सकते हैं, 14 में भी ले सकते हैं. एंड इवन वी आर ट्राइंग कि हम लोग 9 कैरेट में भी जो गोल्ड का अच्छे से कलर, क्योंकि जैसे जैसे गोल्ड की प्योरिटी कम होती जाती है, गोल्ड का जो कलर होता है वो थोड़ा सा डाउन होता चला जाता है. सो वी आर ट्राइंग कि हम कुछ अच्छे से अलॉय इसमें इंट्रोड्यूस करें ताकि जो 9 कैरेट वाली ज्वेलरी वो भी ब्यूटीफुल बने एंड वो उसमें भी मजबूती और सारा लाइट वेट में अच्छा सा हम लोग कर सकें. सो we are always trying.
Oh, absolutely. So, Ankar, I do understand that you also have come out with a wedding collection. What is it that the theme is working in like right now? Because we understand every year is different, and this year we are facing very, very high gold prices. How have you and what are you looking at?
So this wedding collection that we've come up with based on the geographic zone. So whether it's south, there is a specific styling of temple. Whether it's east, it's the filigree. अगर north है तो kundan jarao, and west के लिए भी polki kundan. And we have tried, just trying to understand the consumer behavior. हम लोग जैसे 22 कैरेट में lightweight. So everything we are trying to range is between 25 to 50 grams. So this is how we are trying to push forward for the weight range, ताकि लोगों के अंदर एक अगर पैकेज खरीदना हो वो 20 लाख का पैकेज हो या 50 लाख का पैकेज हो या 10 लाख का पैकेज हो, उसके अंदर आना चाहिए. एंड वी आर ऑल्सो गिविंग एन ऑप्शन टू द कंज्यूमर कि आपको 18 कैरेट में भी चाहिए तो 18 कैरेट में भी अराउंड 10 लाख में वेडिंग पैकेज होना चाहिए. सो द फुल वैरायटी बेस्ड ऑन द मार्केट ट्रेंड हम लोग दे रहे हैं. सो दिस इज द होल थीम विद विच वी आर ड्राइविंग द दिस सीजन्स वेडिंग, एंड इट इज बिकमिंग वेरी इंपॉर्टेंट. जैसे विकास भाई ने बताया कि when it comes to polki, when it comes to diamond, when it comes to kundan, then where the gold element is lower, it is more logical कि उसको हम लोग 18 कैरेट प्योरिटी में करें 14 कैरेट. When it's plain gold, जहाँ पे गोल्ड ज्यादा दिख रहा है और ज्यादा है, कंज्यूमर थोड़े देखते हैं कि 22 कैरेट लूं कि 18 कैरेट लूं, डिपेंडिंग ऑन द बजट. So this is the way we are trying to put it on the weight range focus.
So, Ankur, also the other thing is that the diamond prices have more or less consolidated. They're off their 2022 highs, much lower than those kind of levels. Is diamond doing better this time this year? And how are you also looking at lab-grown as a segment? Because even as we're looking at diamond consolidating, there are very strong inroads that we've seen the lab-grown diamond as a category making.
So in diamond, what has happened is that the way we have seen a jump in the price of gold, that jump is not there in diamond. So we see a volume growth as well as a value growth in diamond. But if for example, in gold, we are seeing a 25-30% jump in terms of value, in diamond, both volume and value is gone up by say 10 to 15%. So customer ka budget mein gold is taking away the largest of the pocket. And diamond jewelry is not really taking that pocket because gold में ही वो मतलब ज़्यादातर चला जा रहा है. And growth कंज्यूमर कब खरीद रहे हैं डायमंड? एक है कि डेली वेयर के लिए, एवरीडे वेयर के लिए जो सेगमेंट है, गोल्ड में उतना कुछ अच्छा नहीं लग रहा है, तो 14 कैरेट 18 कैरेट के साथ डायमंड में खरीद रहे हैं. या तो वेडिंग सीजन में वी कैन सी दैट पोल्कीज एंड कलर्ड स्टोन्स एंड डायमंड्स, वो एक अच्छा सेगमेंट है जो आई थिंक इज हेल्पिंग द डायमंड सेल्स टू ग्रो. सो दिस इज हाउ इट इज. बट इन्वेस्टमेंट माइंडसेट गोल्ड में ही है. अगर कोई खरीदने जाए कि अरे मेरे को फ्यूचर के लिए गोल्ड का प्राइस बढ़ रहा है, तो वो सोच गोल्ड के साथ ही है. व्हेन इट कम्स टू डायमंड, पीपल आर स्टिल अ लिटिल hesitant that whether the prices will go up or not. And lab-grown diamond has taken some amount of business, but still it's a very minimal, I would say, single-digit share of the overall pie. But when we see destination weddings or people buying for experimenting and design, they are looking at the lab-grown diamond for the bigger sizes of diamonds. But more so, still natural diamonds has a much larger chunk and market share.
All right, so the natural diamond continue to be a major chunk, and people are buying gold, but they're buying gold in the sense of investment as well. And people who are buying lower categories perhaps are going more towards fashion jewelry or for better designs. Gentlemen, do stay on with us. We will come back and ask you about silver as well. And of course, we'll talk about the expectations that 2026 brings in for us when it comes to gold, silver and jewelry after this break. Welcome back. We have with us Vikas Kataria, he's promoter DP Abhushan, and Suvankar Sen is MD and CEO Senco Gold. Gentlemen, we move towards silver now because that is something that has made very, very strong inroads. When we were in break, Vikas, you were telling me on how silver is a small portfolio for you, but it is a portfolio that you cannot ignore right now.
100%. Now silver is like a new gold, so
it is.
Yeah, it is definitely the kind of demand is this silver generating. तो लगता है कि आगे सिल्वर का काफ़ी अच्छा डिमांड रहने वाला है एंड जिस तरीके से लास्ट टाइम से जो प्राइस इंक्रीज होती जा रही है कंटिन्यूसली तो आगे भी ऐसा लगता है कि सिल्वर में एंड द इंडस्ट्रियल यूजेस सिल्वर का बढ़ रहा है ज्वेलरी में काफ़ी सारे वेरिएशन डिज़ाइन वैरायटीज़ बन रही है एंड नाउ सिल्वर बिकम प्योरिटी में भी अच्छा हो गया सिल्वर में हॉलमार्किंग भी हो गया है सो कस्टमर के पॉइंट ऑफ व्यू से भी वो एक अच्छा इन्वेस्टमेंट होता जा रहा है एंड जो प्राइस इंक्रीज हो रही है तो डेफिनेटली सबका मन होता है कि हम सिल्वर में इन्वेस्ट करें
Absolutely. Because from what we speak to a lot of jewelers, they also tell us that because silver is in demand right now, and we've seen such strong physical buying of silver as well, there are a lot of people who are increasing shelf space in silver. There are people who are also increasing single silver stores as well. Is there a plan that DP Abhushan has in that sense?
So we in DP Abhushan we recently started the silver jewelry last 4-5 years. Before 4-5 years we are not doing silver jewelry. So but definitely we are increase our space of the silver jewelry. So पहले हम लोग particular कुछ category silver में रखते थे, कुछ product हम लोग silver के रखते थे. But with the high demand अभी हम लोग silver के लिए space भी बड़ा कर रहे हैं. एंड प्लस कोई स्टोर में हम लोग एक पूरा फ्लोर हम सिल्वर को डेडिकेटेड भी करने वाले हैं एंड सिल्वर में सारी कैटेगरीज हम लोग सिल्वर ज्वेलरी सिल्वर यूटेंसिल्स आइडियल्स सिल्वर कॉइन एंड सिल्वर फर्नीचर सो हम लोग सब कुछ पूरा कंप्लीटली हम लोग सिल्वर को फोकस कर रहे हैं
सिल्वर फर्नीचर ऑलराइट दैट इज अ न्यू वन
या सो लॉट ऑफ फर्नीचर व्हिच इज people are buying silver furniture and silver furniture looks very rich elegant और आई थिंक जो काफी ट्रेंड में है अभी
All right. At these current levels, I don't know how many people are buying silver furniture. But Suvankar, what is your sense? I do understand you do a lot of gold, lot of studded gold, diamonds and lab-growns. But is silver on your mind?
Yes, see, silver is about 2-3% of our overall business. But, we are also very positive and bullish on silver. Especially when you look at the gifting range, where it is below 10,000 rupees, when you want to gift something to your dear ones in weddings or other such occasions. So that has become a very sweet spot with, silver, either silver with stones, silver with lab grown. So that is a very sweet spot. We are also having many, silver shop-in-shops in Shoppers Stop. So we have right now about 40 shop-in-shops in Shoppers Stop where we have our silver designs under the brand name of Gossip and also keeping that range in all our stores. So that has also been a new initiative we have taken over the last 6 months. And I think that when it comes to the price, the way silver has jumped almost 15-20% in the last 1 month, the silver had a similar jump during the month of September and October. I think that today it is about 1,76,000 rupees plus GST in the spot. So we shouldn't be surprised if silver goes up to 200 rupees, per gram. And, I think consumers, investors, everyone is still to look into it. And this wedding season, just the way it was a Dhanteras, I think people should become cautious, alert and start buying gold and silver for the future, for the price rise that it is happening.
So Suvankar, now there is Senco and then there is Gossip, and what other brands do you working with?
No, so we have we have Sensex, which is in the lab grown diamond. We have Gossip, which is the silver and fashion jewelry. The weddings are there. The diamond section is there. There is solitaires under the name of Perfect Love. So we are creating various segments for the various types of jewelry. We have Aham for the men's jewelry. So under Aham, we are having platinum, we are having gold, and we are also having silver jewelry for men. So I think that we have to take customer by customer, segment by segment. And I must say, Manisha, just the way silver has been doing well, we should not ignore platinum also as an investment for the future. We have seen the platinum prices have also gone up pretty much, and it is still half of what gold prices, and there is a big chances of platinum prices going up as well in the future.
Oh, I absolutely take that point very, very well, Suvankar, because when you look at silver, it's up 98% in this year. Platinum is up 90% this year. Palladium is up 68%, and then comes gold, which is up 62% in this year. So while all of the PGM metals seem to be doing very, very well, you rightly said platinum is something we absolutely cannot ignore. Because how are you looking at gold, silver, and as Suvankar mentioned on a very important thing, that men, you can't leave them behind, because men also seem to be getting into accessories and jewelry now.
Right. So now the men's category is evolving very well.
Oh, yes?
So yes. So in the diamond, people are wearing the studs and the string, and in gold, a lot of like the pendant and chains, bracelets, everything, and the brooches, and I think all the categories. The men also liking the jewelry now, and the different kind of like the polki sets men's wearing in the wedding time, and kilangi, lot of jewelry evolved this time, and we can't ignore the men's jewelry. Yeah.
So would you, when you're looking at your business, Vikas, what is, as you said, 92% is gold?
Yeah,
the rest perhaps is silver.
Yeah, no, the rest is the diamond. So we are the majorly 90% is the gold jewelry, and the 6-7% is the diamond, and like the 2% is the
silver as of now.
Silver as of now.
So within all of that, how much of that is men's jewelry? 5%?
No, in the gold total, this men's jewelry is not less than 5%. We can say we can say the less than 5%, but yeah, it's evolving very fast. So.
Because also, how much of this is gifting, or do you think there is still a lot of self-purchase and bridal, which comprises most of the business?
So most of the business, so we can say the major business is 60% is the bridal, is the wedding jewelry, and 20% is the festival and the self-purchase, and the 20% is like the gifting and the other.
And what are plans for DP Abhushan now as 2026 approaches?
So we are planning to expansion in the central India mostly, and MP and Rajasthan, and now we are planning to move to the Gujarat and Chhattisgarh. So yeah, very soon we are planning to open a store in Gujarat and Chhattisgarh, and especially the tier 2 and tier 3 cities we are focusing.
And Vikas, even with these gold prices and where they are, most of the industry participants still feel that even at these prices, expansion is a great idea because people will continue to buy.
Definitely, gold is a good investment. Always is a very good asset class. जहाँ पर पूरा हिंदुस्तान I think invest करता है, चाहे छोटे amount में बड़े amount में. So I think मुझे लगता है कि कोई भी price हो जाए, gold हमेशा अच्छा investment रहेगा and is a wise investment. तो अभी भी लोग purchase कर रहे हैं, and आगे भी अगर ये continuously भी बढ़ता रहा तो it's always a buying opportunity.
So Ankur, what is Senco's plans as you head into 2026?
So for the new year, this year we had target of opening about 20 stores. So we've already opened around 15, 16, 3-4 are in the pipeline. So in the same manner, I think in the next year, we'll continue to target about 20, 22 stores. And we will focus on, Eastern India and Northern India, tier 2, 3, 4 towns and cities, opening through more franchisees. So that's going to be our, focus. And I think that, what's happening with the increase in gold price, silver price, it's giving us a lot of confidence that the inventory, the stocks that we are going to, put in is going to appreciate over a period of time. Currently, maybe in this volatile price, the consumers are a little confused, and we can see that the volumes are taking a dip. But historically, what we have seen is that once the prices stabilize, then this dip in volume gets compensated with an increase in volumes when the prices don't go up anymore. So I'm very positive that India is going to continue to grow, and each one of us in our own ways focusing on the geographic zones. We keep opening the stores. The shift from the unorganized to organized will continue to happen, and we will be able to reach to more customers. That's the way to look at it.
So Ankur, one more thing, and I do understand when it comes to diamonds and gemstones and precious metals, and we've seen a lot of colored stones as well come into the mix right now with what the gold prices are doing, and people seem to be focusing more towards designs right now. So as we move ahead into the next year and the millennials come in as well, how are you looking at that mix being created?
So this is a very good question, Manisha, because colored stones also are of two types. There is the natural colored stones, and there is the lab-grown colored stones that are also being in good demand. And, to make the jewelry look bigger and more designer, people have started adding, whether it be emeralds or rubies or many other types of colors to make things much more innovative and stylish. So this is a very important part in whether be it in silver or in gold, along with polki or with diamonds. So with that, in our new Valentine's Day collection that we'll be launching, we are also looking at having a focused approach on colored gemstones. And let me tell you that when it comes to natural colored gemstones, whether for astrology or for jewelry, in the last 2-3 years, the prices of colored gemstones have also become 2x and 3x.
Yes,
so that's
everything,
another.
everything is
Everything is
rising.
just-
But I get your point that we've done Dhanteras, Diwali in a great way. Wedding season is on, and then you're looking at Valentine's already. So, well, yes, India is one big market, and you need a reason just to buy many of those precious metals in form of jewelry and otherwise. But thank you so much, gentlemen, Vikas and Suvankar, for joining in and explaining to us on what India's jewelry buying looks like at this point. With that, out of time on Commodity Champions. Thank you for watching.
Hello and welcome to News Center. I'm Parikshit Luthra. The government is facing a backlash after the Department of Telecom issued a directive to all mobile phone makers to pre-install the state-owned cybersecurity app called Sanchar Sathi. The government claims the app is essential to curb online fraud. Telecom Minister Sindhya defended the decision today, citing 22,800 crore rupees were lost to cyber frauds in 2024 alone. But critics argue the app could become a tool for snooping and mass surveillance. In its order dated 28th of November, Telecom Department said that the app must be pre-installed. It also ordered phone makers to ensure the functionalities of the app are not disabled or restricted. The app must be visible and accessible when a new mobile phone is switched on for the first time. Companies were given 90 days to comply with the order, and the report has to be submitted within 120 days to show compliance. Minister Scindia defended the order and cited how the opposition parties have been complaining about rising cyber frauds. The minister also said that the app can be deleted if the user wants, and the app will lay dormant on the phone if a user chooses not to register. Just yesterday, Minister Scindia had defended the decision to make the app mandatory for all citizens. Here's what the minister said yesterday and today.
So is this mandatory, and by when do they have to comply, all phone makers in the country?
I believe that this is being issued in the next couple of days, and it will give people time to be able to adopt it.
All right, so it will be mandatory and everybody will have to comply within a certain timeline.
कोई mandatory नहीं है. आप अगर register नहीं करना चाहते हो, मतलब कि उदाहरण के तौर पे इस ऐप का उपयोग नहीं करना चाहते हो, तो register मत करो. वो dormant रहेगा.
Yesterday on night itself, I heard the act. It's an attack on privacy of the common people of this country. So actually, basically, this is an attack on constitution also.
All right, let's get in our guests to discuss this. We've got former Telecom Secretary R. Chandrasekhar with us on the program, Supreme Court Advocate, Senior Advocate N.S. Napinai, Nikhil Pava, founder of Medianama, also with us. Ms. Napinai, if I can begin with you. Now, the government has today clarified, after there was huge outrage on social media about the mandatory preloading of this app on smartphones, the government has said it's not mandatory, it's absolutely voluntary in terms of using it. You can also delete it if you so wish. But do you think that the directions issued to telecom companies, including 7B of the directive, it says that ensure that the pre-installed Sanchar Sathi app is readily visible and accessible to end user at the time of first use or the device setup, and that its functionality is not disabled or restricted. Does this make it ambiguous and give a room for doubt as to what will be the lasting impact of this app?
I would say the issue here is not really ambiguity, but propriety. Because if you look at what it's mandating, first and foremost, that you cannot remove it. Effectively, what you just read out, Parikshit, indicates that. Now, there is a clarification saying that it is open for you to delete it or to keep it inactive. But that doesn't really protect user rights. Because what the ministry is then telling us is that instead of taking our consent and necessitating explicit action from us before an app is installed in our mobile device, which is our private property, the government will come and install its footprint there. And that digital footprint is not just about me registering and allowing for sharing of certain data. Irrespective of the registration, the very presence of the app is likely to entail and facilitate sharing of certain data details, irrespective of the registration or even irrespective of the deletion. Now, you have an app that is being mandated to be installed. There is no clarity in terms of what exactly it is supposed to be protecting against, save and except for spoofing or duplication of or fraudulent usage of IMEI numbers. But for that is a downloading of an app by every user, violating their rights, or more importantly, diluting their rights to the extent that they're supposed to trade off their rights for a supposed security protection. Where is the proportionality to it, and where is the responsibility that the government is taking with respect to what the app can do, what is the safety measures with the app, how is it permitted for it to seek installation in violation of, for instance, even proprietary rights of the tech companies or the manufacturers. There are so many issues that arise. But if I were to focus on one aspect, I would say it violates my right not just as a user but as a citizen of India. And therefore, this is something that the government should definitely consider a recall of and resort to wiser means which are proportionate with the problem that they are attempting to
Mr.
resolve.
Chandrasekhar, all right. Mr. Chandrasekhar, do you believe this is an overreach? Do you think the laws, the government has said that if you don't comply within 120 days, then action can be taken under the telecommunication rules as well and cybersecurity rules? Does the law justify such an action to mandate preloading of a government cybersecurity app?
You see, if you look at the broader picture, I think all mobile phones come with some preloaded apps. Many of them are part of a commercial arrangement between the mobile manufacturers and the app or the OS makers. So preloading of some apps is not something new or unique. The issue here is that it is an app which the government has put across and which the government is, insisting, or it has made it mandatory for the mobile manufacturers to load this app. Now, the balance that the government needs to strike is clear, that there is near universal coverage with mobile phones today in the country, and the frauds on the mobile phone are rising. So measures to curb frauds or to make it more difficult for fraudsters to commit the fraud, or if they commit the fraud, to escape detection, are certainly quite desirable. In this case, I think the clarifications are extremely important. The clarification that if you don't want it, it can be uninstalled. I presume that means you can completely uninstall it, not just make it dormant, because dormant apps can also do, perform certain functions. In order to also verify what functions it is performing, it would be useful to have a clear statement as to what the app does, and more importantly, also what the app does not do, what kind of data it collects or doesn't collect, and who gets that information. And all these concerns are arising because the provisions of the DPDP Act do not actually cover the actions of the government. And therefore, given that sensitivity and given the fact that this really applies to the entire population, because over a period of time, everybody will end up using new phones. So I think it is necessary to allay that, and that could be done in two ways. One is, of course, the fact that it can be uninstalled. And the second is a very clear statement that this is the kind of data which would be collected, if any data is actually being collected, and where that would reside or who that would be accessible to. Also, I think the various functionalities have been mentioned and indicated. And I think that to some extent they would help in dealing with some of the problems of fraud and spoofing and so on. However, I think that...
So I'm going to come back to you. So I'm going to come back to you shortly. Let me get in Nikhil Pava also. Nikhil, you've been speaking about it. In fact, you were one of the first people to speak about it on X as well. Could you give us a sense that does this government clarification, the minister clarification, help things? And if you actually delete this app the moment you see it, when you open your phone for the first time, does it really solve the purpose? Or will there always be concerns that some aspects of the app will stay in your phone forever?
Parikshit, I think if you delete it, it's gone, right? But the fact is that the notification, as also Napinai mentioned, does the grounds it lays is that you cannot delete it. So the minister can issue whatever clarifications he wants, but those clarifications are meaningless if there isn't a formal notice rescinding this notification in its current state and a fresh one issued. And secondly, if anyone wants to use this app, they can just download it from the web. Why is it being forced on our devices? It's effectively, this app is malware. It's an app that we haven't asked for, that we haven't chosen to download, but it's being pushed into our personal space, which is our device, without our consent. Now, Mr. Chandrasekhar made a valid point that app manufacturers also put preloaded apps on our device, but preloaded apps can be disabled. In this, it clearly says that it cannot be disabled or restricted. So therefore, the question of deletion also doesn't come in. Secondly, this app creates a security vulnerability. It's a honeypot. Everybody will have this app because it's going to be forced into their devices, which means if someone has to access anybody's device, all they have to do is hack the app. And we know how great government technology is, right? And how their apps function and how their websites function. There's also been no public consultation. They took no feedback. This is just a diktat going straight, just like it did with SIM binding. So the Department of Telecom, which until recently had no remit to regulate apps and OTTs, and which is what Ashwini Vaishnav, Telecom Minister, had promised us, they've gone, they basically sidelined that promise. That promise doesn't mean anything anymore. And they're trying to regulate the internet and apps, right? The most important point is, till now, nobody has clarified how exactly this app will help me. The apps that I keep on my device are the apps that I use every day or every few days or maybe once every few months. This app isn't needed, as far as I can see, unless you lose your device. If it's so
Nikhil,
useful,
I'm going to come back to you.
One second, if it's so useful, right, I'll install it now. It's for me. It should be my choice.
Got it. You know, what the government has said now in a press release, that this Sanchar Sathi app has seen 21.5 crore visits, 1.4 crore downloads, 1.4 crore phones have been disconnected, 26 lakh phones traced, 7.2 lakh phones which have been recovered as a result of the Sanchar Sathi app. So this is their way of trying to justify how this app has helped in the past, and that's why they want to curb the menace of cyber frauds in the country, and that's how they're trying to justify it. I'm going to come back to you, Nikhil, but Mr. Chandrasekhar, the larger question here, can the government really enforce it? Look at what Apple is saying. According to various reports, the industry has raised concerns about it, saying that there has been no pre-consultation. Number two, Apple has conveyed that there are concerns around privacy, security, and they will not be complying with this order. So how will you enforce this?
Well, I think two things here. First and foremost, I certainly endorse the view that consultation would have helped, should have helped. There was no need to rush it through without some measure of consultation and hearing the points of view. And there would be no need for issuing an order and then giving clarifications. And as I think Nikhil pointed out, there is a little bit of a variation perhaps between the clarifications which were issued and what the order says. So all these kinds of problems would have been, averted if there was a measure of consultation and preparing people. And especially when you're dealing with something which affects over 1 billion people, I think that step not having been gone through perhaps was unnecessary and it was avoidable. The other, the concern that I would have is slightly different. You know, the thing is that when you have a problem, at that time, you don't want to go running around for an app which can help you or, where you need to go to report it or to get some action. So there are some benefits of having it preloaded. However, the question is that most of the people, the most vulnerable people to those kind of frauds, may not really have the wherewithal to actually use an app like this in a moment of distress. So I think it calls for a lot of awareness building and, enabling people to understand why it
larger
protects
consultations.
Them, how it protects them. I think that
okay, and what really
this
app does, as Nikhil was pointing out, what really does this app do? Ms. Napina, if I were to ask you, does this directive pass the proportionality test? The likes of Internet Freedom Foundation have said they are going to challenge this till the time this directive is rescinded, is set aside. Do you think there are strong grounds to challenge this?
Certainly, there are two parts to your question. I was going to say certainly not, but that was to the proportionality part of it, not the last part of it. Are there grounds to rescind the directives? Definitely. So here is my take. You were rightly pointing out the three criticalities that the Puttaswamy judgment set out of state law, legitimate aim and proportionality. Even on the second leg in terms of legitimate aim, I feel that this direction fails because legitimate aim emphasizes the word legitimate to the extent that you have to show that only this remedy and no other is going to be relevant or effective. So if you yourself are saying that your Sanchar Sathi app is so effective that so many people, many crores or thousands or lakhs have benefited, then there lies the test that what is already there is effective. That cannot be a ground for a government to force users to adapt to something. It still has to
All
be
right.
by and consent.
Okay.
And one final
All right.
clarification with what Mr. Chandrasekhar said. Preloaded apps raise the issue of corporate surveillance, which you can counter through antitrust laws, amongst others. When a government does the same, you are subjected to surveillance, then it is unconstitutional.
All right. Nikhil, finally, Apple is right in saying that they don't need to comply. If companies decide that they're not going to comply with this, they're not going to preload these apps, how much action and what action can the government really take?
No, look, Apple gets a free check in this country anyway when it comes to regulation, even with the traceability requirement in the IT rules in 2021. Apple didn't come under it. WhatsApp had to go to court to prevent it, right? So regulations in this country seem to apply differently to Apple because we want them to manufacture here. And I think an argument can be made that a law should apply or a regulation should apply equally to everyone without exception. So if Apple can refuse to do this, I would say, why can't the other manufacturers? And frankly, that aside, I think none of the manufacturers should do this. The fact is this needs to go. And to Mr. Chandrasekhar's point, there is no little variation. There's a clear contradiction between what the regulation, what the circular says or the directive says, and what the minister has said. It's not just this one, right? There's a SIM binding one that's also overreaching, overbearing, and it significantly restricts people's usage of all the messaging and social media apps by effectively binding a messaging app to your SIM. So if your SIM gets stolen, anyone can put that SIM in a new device and validate your account and start accessing your details through that. So I think these are thoughtless regulations.
That's a broader concern
from the Ministry of Telecom. And it doesn't deserve to regulate the internet. It has no legal basis to regulate the internet.
Okay,
I think this needs to go back to MeitY.
You're clearly saying that. So you're clearly saying that the government should revoke this order, and that's what the minister also told CNBC-TV18, that be it SIM binding or preloading, or mandatory preloading of the Sanchar Sathi app, all of these guidelines have to be seen together as measures to boost cybersecurity. But then there is a question of proportionality, legality, and whether the government can actually force companies to comply. All of that remains to be seen. Thank you very much, ladies and gentlemen, for joining us. We're taking a short break, but don't go anywhere. We will be joined by Priyanka Chaturvedi, Rajya Sabha MP from Uddhav Thackeray's Shiv Sena on the other side. Welcome back. We're discussing the government's directive to all mobile phone makers to pre-install the state-owned cybersecurity app called Sanchar Sathi. To discuss that more, we are now joined by Shiv Sena Uddhav Bal Thakere's Rajya Sabha MP Priyanka Chaturvedi. Ms. Chaturvedi, thank you very much for being with us. Are you satisfied with Minister Scindia's clarification that this is not mandatory, it can be deleted, and even if it is on your phone, it is completely up to you to use it or not?
No, that's not really a clarification. That's a face saver. And a face saver that comes backed with arrogance. The language with which he spoke and he said, oh, look, it's so easily understandable. It is not, because the notification is as clear as, in black and white, that it cannot be removed. It cannot be, the access cannot be denied. It was a compulsory pre-loaded app that was mandated by the Department of Communication to all mobile phone manufacturers, and that is why you're seeing a pushback coming from telecom companies as well. Having said that, his clarification came after the uproar that we saw on social media, and people do understand that whether it is this government, whether it is through Pegasus or through state-sponsored surveillance hacking that they did with opposition leaders, Pegasus with journalists, this government is quite capable of pushing everybody into the big boss house without even anyone wanting to be participants in it. And this was clearly something that was breaching their right to privacy. So after seeing the uproar, he's come up with this clarification, but I can say one thing, it is not satisfactory simply because this notification needs to be withdrawn. A written word will have more legality than a spoken word in the courts of law. So this has to be withdrawn, redrafted, explained to people that this is not mandatory. It can be downloaded. It cannot be pre-downloaded, or it's part of the the manufacturer putting this out. And people who wish to use it can do it. If they don't wish to use it, they do not need to download it. It has to be as clear as daylight for them to be able to understand what is the notification, what the ministers seem to be speaking are two different things altogether.
Ms. Chaturvedi, the minister had also told CNBC-TV18 earlier yesterday that be it the SIM binding rules where you bind the WhatsApp account or a Signal account, Telegram account to a particular SIM card, and the preloading, the mandatory preloading of the Sanchar Sathi app, all of them have to be seen in the same light that the government is trying to boost cybersecurity and stop cybersecurity frauds in the country. They say that there have been months of consultation, but do you think there should have been more open consultation? Maybe get stakeholders from the opposition as well to give their views on such an exercise?
Firstly, I don't know where they had these extensive consultations that they keep speaking about. I think they have it within themselves, within their groups, within their communities, or probably within that department. Because as member of the Standing Committee of IT and Communication, it never came to us. We speak to multiple stakeholders from across the political divide. We come from, it's like a mini parliament where political parties are represented in these standing committees. So this is something which, I must say something here, Parikshit. This has become the case with this government, that under the garb of national security, cyber security, citizen safety, they come up with snooping as the biggest idea to be able to control its citizens or to scare their citizens into submission and silence. This is a very North Korea format that is being followed here. They realized that as soon as there was an uproar, let's bring out a clarification. But this has come in hindsight. Because, like I said, the clarification is only coming after an uproar. So, also the other point being, if they want to really talk about cyber safety, we hear data theft happening every single day, cyber breaches happening every single day, right from the government data to AIMS data to Aadhaar data to health record data, everything is up for grabs. So, first probably foolproof the cyber security systems of our own networks before you talk about citizen safety. And mandating something and making it look like a snooping compulsory app that needs to be there is absolutely ridiculous.
Also, the fact that the government is today saying, also through a press release, that this can be deleted if a customer so wants on switching on his phone for the first time. This is something that we're hearing only today. It's not there in the original directive to phone makers. The next question, in terms of what the Parliamentary Committee on Information Technology can do next, is there consensus among members to probably call the Department of Telecom, seek answers from them as to why this was done, what really the Sanchar Sathi app can do, cannot do, and if you're mandating this to be preloaded on phones, what exactly are you trying to achieve? Will you try and ask those questions?
No, absolutely. I will be writing a letter to the Honorable Chairman and asking him that probably we need to have Department of Telecommunication coming and explaining as to what the idea behind this app was, what are the achievements that they've managed to get, what are the targets that they have set for themselves, and what are the things that are up for, mandate that they have put across to telecom companies. That is an ask that I will ask. But however, what is surprising is why should anything come preloaded, anything which is promoted by the Government of India come preloaded in any mobile phone? The option of deleting, exiting, of course, has been clarified. But why should it be preloaded into any phone? Not everyone's up for using this app. Not everybody thinks, and honestly, I still don't know how will this app end up controlling any kind of cyber fraud, etc. IMEI number being registered, I can understand, can probably help trace where the phone is. So if your IMEI number is registered along with the app, it can also track your location at every given point in time. Because wherever the mobile is, it will be able to track through the IMEI number. So, any government, many people are making an argument, oh, look, you're willing to give your data to various apps, you're willing to give your data to Apple, etc. These are companies which are in a contract with the customer, and the customer is buying with full knowledge. Now, you are giving a government-mandated app and allowing the government to use your data, to harvest on your data, to know where you are at any given point in time, and also breaching their constitutional right and authority. I think it's ridiculous. And thinking that people this will pass people's scrutiny was a bad idea and came out in bad faith.
And also there will be a question on how can you implement it legally as well. As one of our panelists earlier pointed out, yes, there are preloaded apps, but there are commercial contracts between the app makers and the company. Here, there is no commercial contract between the Government of India and Apple or Samsung for that matter. So how can you force someone to keep that as a pre-downloaded app? Thank you very much, Ms. Chaturvedi, for joining us on the program. That's all the time we have here on News Center. Goodbye and thanks for watching.
A very special conversation as always. It is with Amit Singhal of Asian Paints, and this one comes after 2 years of disruption in the paint industry, the previous conversation that we had, and from there to a new place as well. So a lot to speak with. Amit, usually you speak only after quarterly results, but I'm glad that I got your time. And I know you're always candid on interviews, but this time around you have to promise to be even more candid. Will you?
You can expect anything from me.
Perfect. So let's start with, the last 2 years. So much that has happened. From an Asian Paint standpoint, from a consumer business standpoint, from the environment standpoint, from competition, so much has happened. What consumed you most over the last 2 years?
See, I think the best thing was that, this time was very, very exhilarating because we felt that, there were lots happening in the marketplace. There was lots happening at the competitive ends to that extent, and the market was not very great from a point of view of a demand perspective. So I think there were challenges all across in terms of what came in, and what possibly occupied my attention was that during these times, how do we really navigate the brand and really take it ahead and look at possibly playing to our strengths and really seeing that we are scoring centuries as we kind of do stuff.
The street was also fairly on the tenterhooks over the last 2 years. In the history of Asian Paints stock market performance, the last 2 years were perhaps one of the darkest when it came to returns or negative returns, etc. So at that point in time, again, like I said, what occupied your mind space more? Was it the dealers of Asian Paints which were being taken away by others? Was it, the employees of Asian Paints which were being taken away by others? Was it the consumer sentiment itself which was lower? You had also spoken about this, low correlation between consumption GDP and GDP at large. So all these factors that played out, what took your mind space the most?
See, I think it was the whole area of strategizing in terms of that if you have to deal with this environment, everything is important. It's not solely that if we take care of the dealers, that's something which is what is the end result. We have to look at in terms of from the point of view of the brand, the innovation in terms of what we bring, playing to the distribution strengths which we have, the technological strengths which we bring onto the table, and also lead the game from a point of view of executional excellence. Because this was a time when possibly, the brand can show its best in the market. And therefore, what occupied my mind was only one word: excellence everywhere.
All right. And 2 years later, as you stand, consumer sentiment is at the inflection point of improvement. Competitive intensity, while it stays, the disruptor is not the disruptor anymore, is an incumbent. And at the same time, you have a lot of your business excellence, etc., consolidated. So from where we are, how do the next 2 years look to you?
So I think, first of all, what we are looking at is really doing many things in terms of the market, which possibly is a step forward from what we have been doing to that extent. So the first of these things is that continue kind of building the brand to new heights. And in that perspective, we recently just tied up with Indian Cricket. We are the official partners, color partners for BCCI and for the Indian home cricket. And we are doing initiatives like this to kind of really see that today, whether it is a top of mind awareness or it's a share of search, Asian Paints is really the tops in terms of really continues to be the tops in terms of doing that. And in that regard, we are also looking at strategizing very differently. We think that today is the right moment in terms of looking at a regionalization of your strategy, where you can't be looking at one national strategy which kind of comes to fore. And therefore, another initiative which we have taken is regionalization, where we are saying that each state, each region has its own nuance, add the culture, the design.
But isn't that something that Asian Paints always did with so many regional ads? I remember those Pongal packs as well, which were small for just those bulls, etc. What is different this time?
No. So the regionalization place is now very different because you're looking at seeing at people's choices. You're trying to appeal to the culture of the region very, very strongly from a point of view of saying that now even our packs are regional. Okay. Now, no one has attempted that across the global arena in terms of looking at it. We have regional packs which appeal to the culture, design, and so on and so forth. We have regional colors which appeal to only that community in a very strong way to that extent in terms of what's coming in. And not only that, the whole nuance in terms of how we are seeing people see decor in those regions, we are playing to that bit because we feel that today, I think IPL has created a lot of regionalization to that extent, and people are really region proud, and we are appealing to that pride in a very strong way. So that's one very big area in terms of propelling the brand and seeing that we put the brand equity right up front and a strategy which possibly gets us right into the homes.
So what does this mean in terms of numbers? You this year have guided for mid-single digit sort of revenue growth almost high single digit, low double digit volume growth. How long before we get to double digit volume growth and double digit revenue growth from an industry standpoint?
So if you look at even now, while you are seeing some shoots in terms of the demand, we are not seeing that there is belligerence, there is full exhilaration coming into the market to that extent. We feel that today the rural markets are just coming back, even the urban centers are just trying to show some spark. I feel that possibly it will take some time before we really get onto the parameter of really double digits and so on and so forth.
How long will it take?
It's very difficult to say, but I would say that possibly another 2 quarters is something we need to kind of watch out for sure in terms of what we are looking at. So therefore, right now, I think the whole peg is in terms of saying that we continue to grow higher than the market, and that's the pitch in terms of what we would take.
And you haven't been doing so for the last few quarters, and now you're confident of doing that, right?
The first 2 quarters of this year, we have grown higher than the market to that extent. And as you look at the H1, we have grown much higher than the market overall.
So you will continue to gain market share?
Yes, absolutely.
Okay, what about, you strengthened some of your internal sourcing with backward integration, also looking to diversify in the Middle East with the new capex that you've announced out there as well. So all these factors, how much will that add to your savings and how much of that will add to your international revenue as well?
So see, it's a very calculated move in terms of what we have taken from a point of view of looking at backward integration and also looking at saying that we are literally self-sufficient with respect to some of our core raw materials to that extent. And today what we have put in Fujairah in Dubai is a white cement plant of almost about 2.75 lakh tons capacity. It kind of really suffices us for possibly some of our products which we are selling in India to that extent, and it kind of gives us a lot of cost excellence which comes in to that extent, and that's been one aim. The second area has been the area of what we can do in terms of the international market. So we are marketing the product now, right now in UAE, parts of Asia, and now going to Africa in terms of looking at it to that extent. So the idea is that possibly, take that space, which is very important for us. At the same time, keep on adding to the cost excellence part in India, which is just a start. The second thing which comes in is even more in terms of what we will do as we kind of unleash in the first quarter of next year.
Which will be what?
We are looking at a new emulsion. So we have a 3,000 crore facility which is being put up at the Dahej. So we basically start that facility, and that is something which possibly in the world there are only 4 or 5 suppliers to that extent. It's the first time Asian Paints is invoking their technology, and it's a new age emulsion, environment friendly, something which really gives us a lot of cost excellence, and not only that, but some very innovative products.
You're speaking about premiumization as an important theme for you guys, but economy is still the bedrock, right? What is it that you're doing to ensure that you are leader there, you are growing there, and you are profitable there and not losing out on earnings despite the growth?
So see, Asian Paints has always been known to create categories, okay, and we have now really approached the category of distempers also by launching a product called Neo. So it is a different category called latex in terms of what we have introduced, so that we are able to galvanize the people and upgrade them from distemper to kind of using this latex. And I think this is something which is a big step because it's a large bucket in that economy segment in terms of what comes in. Similarly, when you look at the premium and luxury segments, we have been launching a huge number of variants so that we are able to kind of in that pyramid upgrade the people to the next best solution in terms of what they can get in. And not only that, from a premium to luxury, we are invoking this brand called Nilaya now. We've introduced a product called Nilaya Arc in the market, a Nilaya Natural. And these are all super luxury products where we are kind of showing to people that even in the premium category, you can get one wall with this luxurious product which kind of adorns your home to that extent. So the entire thing is in terms of looking at that there is total upgradation happening at all levels in terms of what we can do. In a sense, you can really push the pyramid upwards.
So safe from here on, post the next 2 quarters of still some wait and watch from a consumer standpoint, going forward, the difference between value and volume will narrow because of the premium thing that you're talking about. Is that a possibility?
So we have spoken of that gap being about 4 to 5%. I think that gap will remain because
Throughout?
I've always maintained because the economy is a very, very big segment. Okay, and today if you want to really reduce that gap to 2%, you will talk of degrowing in the economy segment to that extent. So I would say that 4 to 5% is a reasonable bet in terms of looking at maintaining that band, at the same time having a strong product mix.
And that still holds with 18 to 20% 20% margins, because now whatever savings you will get, you will deploy it back towards building the brand, building growth.
Absolutely.
So say high single digit sort of revenue growth, double digit volume growth, and 18 to 20% margins is the new normal for Asian Paints?
So that's the margin guidance which we have always maintained, and I think the great part is that despite all what we have seen in the market, we have kept our head on the shoulders in terms of what we are doing. We've not kind of taken the whole route of discounting or pricing in terms of that, but we've taken the route in terms of building the brand and playing to our strengths.
What are you most proud of over the last 2 years?
I think the fact that we have been able to kind of really build the brand to a new high, and what we have been able to kind of get nuances and being very strongly related with home as a brand which no other brand is. So I would say that Asian Paints' whole attempt to kind of really get into the consumer's mind has been very, very strong, and we think we are appropriating home more than ever before.
What are you most disappointed by over the last 2 years? What is the one thing what do you regret the most over the last 2 years?
I would say that from a point of view of saying that we would have liked to grow much faster. I think that is something which possibly I regret to that extent. I think we could have possibly put more drivers in terms of looking at what we could have driven the market far more strongly. But I think given the circumstances, I would say it has been quite good in terms of what we have performed.
you yourself have your ear very close to the ground. In fact, feet on street. You take over 300 flights every year, know every dealer by their name, every dealer by their family members, etc. I think it's something that is indoctrinated in Asian Paints culture. What have you noticed over the last 2 years? What Asian Paints has done versus what competition has done? What have you done to ensure that your dealerships stay while within the guardrails of the law?
So we felt that one of the big things which has held by us is the relationships. It's not only about business, it's not only about margins, it's not about profitability. It's about relationships, it's your personalization, it's your ability to kind of really be empathetic about the business in terms of what you're dealing in. And I think that's something which I have tried, that it's not only me, the face of Asian Paints, but my entire leadership and my people who believe in that relationship very, very strongly. And that is something which I think is the trump card which Asian Paints hold.
One of the things, if I looked at pure business strategy, if a disruptor had to come and take some share from the incumbents, the obvious thing to do, given the long history that incumbents would have, is say that this is the paint of the old and we are the guys who are the paints of the young. And that's understandably some of the peers who've done that, right? How do you navigate or how do you mitigate that strategy?
See, at the end of it, the brands, the whole area of legacy and trust is a very big thing. There can be new disruptors, but if a new disruptor doesn't have a story in terms of why the new brand is a disruptor, it fades out very, very fast.
And you think they don't?
I don't think so. Okay. So I feel that today, the very fact that we came up with a campaign which is warranty, okay, which was just speaking about that every second home in India has been painted by Asian Paints, and that's a legacy you have. And what we brought in possibly along with that was saying that we are appealing to every generation, be it a Gen Z, in terms of what they kind of look at to that extent. So it's not about being just old. It is about being what things which you are putting into the market as a strength, because you have the strength to do it, as well as you have the thought process in terms of bringing about the change.
It's not just them, right? It's not just the disruptor. It's also the other incumbents, because everyone who's entering the industry right now, they respect you. Obviously, they say that we want to aim at being the number 2 player in the country. But when everyone is looking at the number 2 place, the number 2 also wants to ensure that they are number 2, and the number 3 also wants to ensure that they are not ceding any ground. So that on the whole becomes like a big pressure cooker situation for the industry. Have you faced that as well?
I think this pressure has always been there. If I look back last 2 decades, it's been always there. Just that today the number of players who are coming and trying to take a dig at it is much more to that extent. And I think that's something which is good, because it also, as a leader, keeps us on toes in terms of thinking what is the differential thing in terms of what you are kind of really talking of. And that's why I keep on saying that, we will keep on creating trends. People have to make case studies out of it.
For me personally, one of the things which is a perpetual disappointment from an Asian Paints standpoint is the non-paints home decor business.
Sure.
It's definitely not gone down the way analysts expected, perhaps not gone down the way you expected it as well. Some of the bolt-on acquisitions that were made did not go down well. They were perhaps strategic missteps, so to say. Some of the targets that you've given haven't been met. And for a company the size of Asian Paints, any new foray, one would have imagined, would be big, bold, and something not very different from what others would do in the paint industry.
Yeah.
So what was the problem there?
So I feel that, the way we anticipated the market, we were here not fighting any organized competition. We were fighting unorganized sector. And what we didn't realize in the unorganized sector is that the flexibility of pricing, the flexibility of the way they are able to kind of regionalize the product, I think was something which was very, very high. So I think it has taken us some time. We have put about 70 beautiful home stores across the country. The stores are doing well, but when you compare to the size of what we do in coatings, obviously the size is very, very small in terms of what's happening. And what you say is right. Some of the acquisitions which we did, we kind of grew them in the first 2-3 years, but then we were not able to sustain that kind of a buoyancy in terms of what happened to that extent. But as we see it, I think it's an integral part of our strategy, because we feel that if you own homes, okay, one of the big things which Asian Paints does is that as part of Har Ghar, you can't just own surfaces, you have to own spaces. And today decor gives us that big rope in terms of looking at owning spaces. And we feel that that's a very big differentiator for us, because if you were to kind kind of put all the brands today, okay, only one brand today appropriates home, and that is Asian Paints. And that is where possibly the decor strategy is still very, very relevant to us in terms of where it stands. Yes, we have a task in terms of how we need to kind of put it into shape and get it back rolling to that extent, but we are committed to it.
And how long will that commitment last, and at what point will you believe that, you know, okay, we've put enough resources, mind space and ideas behind it, but maybe it's just time to pull the plug?
So we are giving ourselves another 2 years in terms of looking at really getting behind it in terms of what we want to achieve, what we want to do to that extent, and really seeing that we can bring excellence in those categories, which is what Asian Paints style of businesses.
And what would the end of those 2 years look like for you to call it a success in terms of numbers?
So we are looking at a certain contribution which that decor piece which kind of gives us,
Which
and
would
we
be?
are looking at something like about a 7 to 8% contribution to our overall business in terms of what will be there to that extent, and that is something which possibly would be an indication that we are on a right trajectory.
And in coatings itself, what is your aspiration? Because right now, obviously, a large part comes in from repainting. Then there is a certain part which comes in from, you know, the new buildings which are announced, and thereafter there is this new TAM which is opened up, which is government-led infra.
Yeah.
Do you have an ideal mix here?
So see, when you look at today, I think the trend which we are seeing is that the whole area of the industrial and the B2B space is changing quite a bit, and that is really expanding, given the fact that you're talking of private capex and you're talking of government investment, which is coming in a very big way, which I believe will continue to that extent. And therefore, one of the big focus which we are taking is basically the B2B and the industrial business in terms of where our contributions are relatively less as compared to possibly some of the competition in terms of what is there. So that's the new piece in terms of the growth trajectory in terms of what we are taking in a very big way to that extent. Apart from the fact that the retail excellence will continue in terms of what we are doing to that extent, and that would kind of really see that it kind of firmly pegs us amongst the top 5 global players in the world.
So if I had to look at Asian Paints 3 years from now, what according to you would the revenue mix be? How much comes in from decorative? How much comes in from B2B? In decorative, how much comes in from, you know, retail decorative, and how much comes in from, say, government infra or all the housing projects, etc.? How much comes in from home decor and how much comes in from international?
See, roughly, if you look at it, basically the whole coatings landscape, overall, when we say from a point of view of a decorative, that will still lie in a band of about 78 to 80% in terms of as I see it. And out of that, possibly about a 20% contribution would come in from the B2B business to that extent. When you look at the industrial business, I think that will continue to kind of go on to a realm of something like about 8 to 10%, and global would be another 10% to that extent.
All right. And, you know, you will still be 18 to 20% margins at that point.
That's what we are kind of dwelling at very strongly.
When we were looking at disruption in the industry, when we were looking at everyone's strength in the industry, there was brand, there was obviously capacity, there was distribution, and then there was something known as tinting machines. Now, everyone has practically everything, and there is no particular differentiator. So what then would now be the next leg of differentiation or leadership for the paint industry?
So first of all, I think the differentiation lies in terms of, you know, your entire engine in terms of how it works. I think the whole thing of your executional excellence is a very, very big differentiator in terms of what you are able to do to that extent. And therefore, that is something which is going to continue, where we are going to invest in a very big way. We are investing in technology at a very big level. We have today almost about 160 patents in terms of what we have got. And that's a very big area of focus in terms of saying that we will have products which have no matches in the market to that extent, which will always keep us ahead to that extent. Second, we are getting onto the bandwagon of looking at today catching on AI very big time, because that is something which possibly gives us a huge mantle in terms of seeing how we are looking at our consumer segmentation, how are we looking at the consumer.
Can you give me a use case for AI?
How we are looking at the homes. For example, today, a person who uses our painting service, you know, tomorrow I could use AI just to know the preferences that customer has. And the moment I launch a new product, I can really carve the entire house in the new product and offer it to him rather than just a mailer in terms of saying I have a new product. So I think it can really look at hyper segmentation and hyper personalization, which would basically come in from AI in a very big way to that extent. And not only that, we're leveraging that in our manufacturing piece in terms of saying how we can basically do a cost optimization which comes in terms of predictability, which can be far more stronger in terms of coming. And the last area is the forecasting accuracy, which I think can give us a huge kind of elevation from the point of view of looking that you got the right product at the right place at the right time in a much better way in terms of what we are handling it today.
All right, let's wrap it up with some fiery questions. Okay?
Yes, for sure.
Let's go. 50,000 crore revenue on Asian Paints by when?
Okay, definitely for the next 4 years.
In the next 4 years. Amit Singhal stays in Asian Paints for the next 5-6 years at least?
I think from my mindset, eternally.
Eternally. Wonderful. What do you think you would want to leave Asian Paints as?
So first of all, I'm not thinking of retirement at all to that extent. I feel that what I leave behind is the passion, the legacy, and really seeing that the brand continues to kind of galvanize and propel itself into a new pavilion.
Services will be how much of your revenue going forward?
So services today, as we see the beautiful home painting service, we spoke about it last time as well. It continues to be the world's largest painting service in terms of what we have culminated. And we see that going forward, we would like that at least 10 to 12% is something which our services continue to contribute.
And one piece of advice that you would like to give some of your competitors?
I would say that the advice is that when you kind of operate in the market, okay, operate with a certain value, a certain ethic, and look at possibly differentiating yourselves far more strongly rather than being me too in terms of the market.
And to the investors, what will you say who've been sitting on 2 years of losses?
I think the investors will see that this is a brand which they will have to watch out for, because there are lots of things which are coming, and we think that possibly we have our clear eyes on the stakeholders and we will give them a good return.
Wonderful. Thank you so much, Amit.
Thank you.
Hello and welcome to Business 360. I'm Ritu Singh and here are the headlines that we're tracking for you this evening. The Indian rupee remains in free fall, hitting a fresh record low once again. $1 now costs nearly 90 rupees. The rupee is down 4.5% since the start of this year. Sensex and Nifty declined for the third straight day in a broad-based sell-off. Heavyweights like Reliance, HDFC and ICICI Bank lead the decline. Midcaps fare slightly better, but the index ends in the red. Bitcoin suffers the biggest single-day decline in 7 months as the sell-off intensifies. All cryptocurrencies are under pressure as investors fret over a new crypto winter. Bitcoin is down 30% from the record high in October. Telecom Minister Scindia defends a decision ordering smartphone makers to preload the state-owned Sanchar Sathi cybersecurity app. The minister also says users will have the option to disable or delete the app if they wish to do so, dismisses concerns over snooping or mass surveillance. Smartphone makers are not in favour of the government's directive on Sanchar Sathi app. Industry sources ask why their feedback was not sought and why the Ministry of Electronics was not consulted. Phone makers like Apple, Samsung and Google have no history of preloading apps mandated by the government. Lok Sabha proceedings are disrupted for the second day in a row. The opposition lawmakers raised slogans demanding a discussion on special intensive revision of electoral rolls underway in multiple states. US President Trump's envoy Steve Witkoff to meet Russian President Putin in Moscow to discuss the Ukraine peace deal. The White House says that the Trump administration is upbeat about a deal to end the war. Russia claims that its forces have captured 2 frontline Ukrainian towns. And the death toll in Sri Lanka in the aftermath of the cyclone, it crosses 400 rupees. Close to 3 lakh people have been displaced. 750 people have been killed in floods and landslides on Indonesia's Sumatra Island. Over 3 million have been affected. Well, the Indian rupee continues to fall, hitting another record low against the dollar. The currency is inching closer to the 70 mark and it has declined nearly 4.5% so far this year. Lata Venkatesh joins us now. Lata, start with the reason behind the steep fall and if 90 is now imminent.
The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is supplying dollars. Closer to the 90 rupees per dollar mark, even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
Well, from the currency markets, thanks Lata for that. From that market, we'll move on to equities, where the Wall Street witnessed a broad-based fall and ended the day lower for the third straight day. More than 35 Nifty stocks have ended in the red, with heavyweights leading the fall. The Sensex dropped more than 500 points, while the Nifty shed more than 140 points in trade today. Now, the US Commerce Secretary Howard Lutnick has confirmed that the general tariff rate for South Korea will be brought down to 15%. This is going to be effective retrospectively from the 1st of November. The announcement has come after South Korea introduced a legislation in the parliament to implement its strategic investment commitments. Now, in a social media post, Lutnick said that the move will unlock full benefit of South Korea's trade deal with the US. South Korean auto stocks rallied on the back of this development. And speaking of trade deals, the United States and Britain have now announced a deal to secure zero tariffs on British pharma products for at least a period of 3 years. Now, under this agreement, UK is going to spend around 25% more on new treatments. UK drug firms have also committed to invest more in the US and create more jobs as well. But amid the uncertainty over a trade deal between India and the US, the Indian government is hoping to provide some relief for exporters. Sources tell us that the government is likely to propose a special economic zone bill in the parliament to help exporters tackle global uncertainties. Abhimanyu Sharma has been picking up these details and joins us with the latest. Abhimanyu.
Government sources have told CNBC-TV18 that India is likely to come up with an SEZ bill in Parliament to help exporters, many of which, particularly in labour-intensive sectors, have been facing headwinds since the past few months due to a decline in the total number of orders and geopolitical uncertainties, which runs the risk of job losses for many employees working with these exporters. Also, many exporters, many export units, particularly in labour-intensive sectors, have already cut down on their production and they run the risk of job losses. Now, to mitigate the problems which are being faced by these exporters, the government is likely to come up with such a bill which will allow sale of goods produced by these export units into the domestic market on a duty foregone basis. The SEZs will maintain their net foreign exchange positive status and a reverse job work will also be allowed as per the proposed bill. It remains to be seen how early the government is going to come up with any such bill and how early any such move is going to come into effect. Also, government sources have assured that there would be no loss to the prospects of domestic manufacturers, since already several exporters, several brands who have units stationed across several countries, including India's FTA partner countries, prefer to source goods, particularly labour-intensive goods, from FTA partner countries instead of India's own SEZs. So there would be no net loss to the prospects for domestic manufacturers.
Abhimanyu, thanks very much for bringing us this story. Now, the stormy start to the winter session continues and proceedings in the Lok Sabha were disrupted for the second day in a row. The House was adjourned for the day with hardly any business being transacted. Opposition lawmakers raised slogans demanding a discussion on special intensive revision of electoral rolls, which is underway in multiple states. Our top story this evening then, the government is facing a backlash after the Department of Telecom issued a directive to all mobile phone makers to pre-install the state-owned cybersecurity app, which is called Sanchar Saathi. Now, the government claims the app is essential to curb online frauds. Now, Telecom Minister Scindia had defended the decision today, citing 22,800 crore rupees were lost to cyber frauds just in 2024. But critics have argued that the app could become a tool for snooping and mass surveillance. Now, in its order dated the 28th of November, the Telecom Department had said that the app must be pre-installed. It also ordered phone makers to ensure the functionalities of the app are not disabled or restricted, and it said that the app must be visible and accessible when a new mobile phone is switched on for the first time. Now, companies were also at that time given 90 days to comply with the order and report within 120 days on the progress. Now, Minister Scindia defended the order and cited how opposition parties have been complaining about rising cyber frauds. The minister said that the app can be deleted if the user wants, and the app will lay dormant on the phone if a user chooses not to register. Now, just yesterday, Minister Scindia had defended this decision to make the app mandatory for all citizens. Here is what he said yesterday and today.
So, is this mandatory, and by when do they have to comply, all phone makers in the country?
I believe that this is being issued in the next couple of days, and it will give people time to be able to adopt it.
All right, so it will be mandatory and everybody will have to comply within a certain timeline.
कोई mandatory नहीं है. आप अगर register नहीं करना चाहते हो, मतलब कि उदाहरण के तौर पे इस ऐप का उपयोग नहीं करना चाहते हो, तो register मत करो. वो dormant रहेगा. Delete करना है तो delete कर लो.
Yesterday on night itself, I heard the act. It's an attack on privacy of the common people of this country. So actually, basically, this is an attack on constitution also.
This will be completely in breach of the privacy. आपको साइबर क्राइम को डिटेक्ट करने के लिए आपको पारदर्शिता चाहिए. आप मेरा फोन में घुस के साइबर क्राइम डिटेक्ट नहीं करने सकेगा. मेरा इंफॉर्मेशन डिटेल्स इंफॉर्मेशन देने का कोई अधिकार सरकार का नहीं है. दिस इज टोटली इलीगल This is totally unconstitutional.
Well, smartphone makers are not in favor of the government's directive on Sanchar Sathi app. Industry sources have asked why their feedback was not sought and why the Ministry of Electronics was not even consulted. But the big question that we're asking today is, why has the government made the app mandatory without wider consultation? Rashna Dharmrajani joins us now to take stock of all of the developments. Rashna, for our viewers, what is this Sanchar Sathi app? What has it even achieved so far? And why is this whole thing turning out to be so controversial?
That's right. The Sanchar Sathi app has been active since 2023. Now, it's been an app as well as a website, and it helps you register complaints, cyber frauds, many other things. So let's see so far what has happened. But before that, let's understand that so far the app has been optional. But now the government wants phone makers to pre-install the app on all new devices. It must appear at first switch on. It cannot be deleted at the system level, and phones already in the supply chain will receive it through a software update. So what has this app done so far? According to the government's website, the app has helped disconnect 1.75 crore fraudulent mobile connections. More than 42 lakh stolen phones have been blocked and 26 lakh devices have been traced, and about 7.5 lakh stolen phones have been recovered and returned. Along with that, 2.5 lakh reports of scams have been lodged on the website. Now, once this app becomes mandatory, here's what it will be able to access. On Android devices, it can read the IMEI number, SIM details, and the basic device information. If a user reports a fraud attempt, it can access call or SMS logs. It also uses the camera and the file access when evidence is uploaded and may send SMS for verification and for registration. On iPhones, though, permissions are limited to camera and file access. But here's the thing to note. So far, when the app was not mandatory, all this information one had to put it manually. But now the published policy says that the app does not take location, microphone input, contact list, browsing history or biometric data. But any expansion on what data can be accessed in the future would only require a software update. Phone manufacturers have revised practical concerns. The 90-day deadline is difficult because software development, testing and certification cycles take much longer. Apple, known for its global policy framework regarding privacy, plans to convey its concerns to the government, whereas Android's global OS principles also do not align with the idea of a non-removable system app. This brings up a wider question. Is Sanchar Sathi evolving into a digital kavach for users, if that's what the government intends, or is it a push or does it push the country toward a Big Brother style environment? Well, the Telecom minister has said that the users can opt out of this app, but this adds complexity because Android's rules do not allow governments or manufacturers to add permanent apps with privileged permissions. A system that forces installation first and offers an opt-out later does not match Android's definition of consent, and it does not meet the global standard definition of informed consent either. On the legal front, the mandate is being viewed through the triple test that was laid out by the Supreme Court. Now, in a landmark verdict in 2017, a 9-judge bench of the Supreme Court made it clear that any invasion of privacy must be done through a legislation. It needs to have a legitimate aim, and the action must be proportional. This decision to make Sanchar Sathi app mandatory is not being done through legislation, but rather an executive action by the Telecom department. Stopping cyber fraud is a legitimate aim, so it passes on that one. But it is a mandatory app on all smartphones. The only way to crack down on cyber fraud is action proportional to the issue in question. That is what we'd be looking forward to.
Well, yes, the legality of the move and, whether that is the best way to tackle cyber frauds, that's something that citizens are surely going to be asking. Rashna, thanks very much for taking us through that story. Now, making the Sanchar Sathi app mandatory is just one way the government is hoping to address cyber frauds. The Department of Telecom has now mandated SIM-binding rules, and these make a SIM card mandatory to access over-the-top communication apps like WhatsApp, Telegram, Signal, and others. The Broadband India Forum, which counts WhatsApp and its parent company Meta as its members, has opposed the government decision. In a statement, the forum has said, and I quote, "The Telecommunications Act does not authorize the regulation of OTT communication platforms, nor does it provide the legislative basis to impose telecom-style operational mandates upon them," end of quote. Now, speaking to CNBC TV18 yesterday, Telecom Minister Scindia made it clear that SIM-binding mandate will not be put on hold.
This is with regard to the SIM binding initiative that you've just launched. And this is for all messaging apps such as WhatsApp, Telegram, Signal. All of them have to comply with the SIM binding norms within 90 days. Why has this been done? And what is the larger intention? Because the industry is saying that there should be a pause on this for some time to allow for wider consultation?
In the last fiscal alone, people across the length and breadth of our country have lost close to 22,800 crores to cyber fraud. It is my responsibility as Telecom Minister to protect my consumers. And this indeed is a step towards that. As far as consultation is concerned, we've had 5 to 6 rounds of consultation, starting in early April into June, latest even close to November. Across the board, there has been a clarion call for this.
Well, we're going to take a short break on that note, but up next, the Bitcoin suffers a biggest single-day decline in 7 months as the sell-off intensifies. We'll get you details on that and more just a bit. Welcome back. You're still watching Business 360. Now on to the crypto markets, where Bitcoin suffered the biggest single-day decline in 7 months as the sell-off intensified. The crypto has now fallen 30% from its record high in October. The whole crypto market, in fact, has fallen 20% in just the last 30 days. Market capitalization has fallen below the $3 trillion mark, and this comes as investors fret over a new crypto winter. Manisha Gupta, our commodities editor, is here with more details on this decline in Bitcoin prices.
Well, thank you so much for that. Yes, when you look at the crypto markets overall, we are looking at very sharp declines onto this one. If you look at the overnight markets itself, it has been the biggest single-day decline that we have seen since the month of March. And with that, the overall crypto market cap has declined quite sharply to below $3 trillion as well. In this year itself, we did see $4.4 trillion of an all-time high. And from those kind of levels, it has been a sharp decline. So when you look at Bitcoin sell-off, it has been to the tune of $16 million. And overall decline, when you look at crypto exchange liquidations, has been quite sharp to the tune of $400 million in the overnight markets there. Well, there has been decline in futures volumes and open interest as well, telling you that the money clearly seems to be rotating out of cryptos into other asset classes. AI, some people feel as well, is where this money is flowing out. Well, interestingly, the kind of sell-off that we have seen has resumed for the month of December. It is about the risk of sentiment in the broader markets, which also seems to be impacting this decline. It also has to do with the shares in digital asset-related stocks within the Asian markets, which have been declining. And this has happened after People's Bank of China has warned about the illegal activities relating to digital currencies therein. If you look at the overall market, well, the Bank of Japan may hike rates as bond yields hit a 15-year highs. This has been one major reason that you have seen crypto see a slip and slide therein. It also has to do with the large leverage positions that we are looking at in the international markets, with the expectation that it still is a long in crypto, quite a bit long. And if it starts to come off, then there's a lot of money still invested into this space. So when you talk about Bitcoin exchanges, there's a leverage of around 200 times still in work there. Outstanding positions of around $787 billion is what we're looking at in overall crypto markets. And when it comes to crypto ETFs, well, the holding therein also is at around $135 billion. So there is still a lot of money invested within that space. It's about the last 1 month that the decline has been quite sharper, really. So when you look at Bitcoin, Ethereum or Polygon, this is the highest market cap that you have in various of these cryptos. They have seen a decline anywhere between 19 to 29%. And the list just goes on, because when you look at Solana, Cardano, Binance, these are again major big names as well. You have seen a decline of anywhere between 10 to 30% on them in the last 1 month as well. So we are now in the red, not just on a weekly basis, monthly basis, but YTD as well.
All right, the crypto sell-off continues. Manisha, thank you very much for bringing us those details. Now, shares of Bajaj Housing Finance fell to a 52-week low after 2.35% of its equity changed hands in a block deal. Stake worth almost 1,900 crore rupees was exchanged at 97 rupees per share. Now, the company said its promoter Bajaj Finance will sell up to 2% stake to comply with minimum public shareholding requirements. Bajaj Finance held 88.7% stake as of the end of September. Now, promoters of IT services giant Mastech are exploring a sale of around 20% stake in the company. Sources have told CNBC-TV18 that the promoters are seeking a premium of up to 25% over the current market price. The promoters currently hold around 36% stake in Mastech. The shares of the company rose more than 4% in trade on the back of this news. However, it ended the day flat. Now, the offer for sale for Bank of Maharashtra for non-retail investors is open today. The floor price for the OFS has been set at 54 rupees per share, and this is at a 6.3% discount from yesterday's closing price. The government plans to divest 6% stake in the bank. The floor price, the government will mop up. At that floor price, the government is going to mop up nearly 2,500 crore rupees. And shares of Swiggy jumped more than 3% in trade. This after a Bloomberg report suggested that the quick commerce giant plans to launch a $1.1 billion QIP, or a qualified institutional placement, next week. Now, according to the Bloomberg report, the company has shortlisted 3 banks to manage the share sale. Remember, the company's board had already approved this fundraise on the 7th of November. Now, Walk Hard also said it expects sales of its new antibiotic Zainic to hit $2 billion after the US FDA formally accepted its application for the drug. Speaking to CNBC-TV18, its chairman Habil Khurakiwala said that the drug could be approved by mid next year.
We expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
All right, moving our lens to the international news, where Russian President Vladimir Putin will meet U.S. Special Envoy Steve Witkoff in Moscow today. The White House said it remains very optimistic about reaching an agreement to bring the war in Ukraine to an end. Now, President Trump's son-in-law, Jared Kushner, who is an informal advisor in the ongoing diplomatic efforts, is also expected to take part in these discussions. This summit comes after 2 days of talks in Florida between the Ukrainian and U.S. officials. The death toll from Cyclone Ditwa in Sri Lanka has risen to at least 410. More than 1 million people have been affected and over 200,000 are now in shelters. The Sri Lankan president said that the island is battling the largest natural disaster it has ever seen. The opposition staged a walkout in the Sri Lankan parliament today after accusing the government of blocking a debate on urgent policy measures on disaster relief. The death toll from flooding and landslides across Indonesia has crossed 750. Officials have said that over 1 million people have been evacuated from affected areas. Arterial roads continue to remain blocked, hindering rescue operations across high-risk areas. On that note, we're going to wrap up this edition of Business 360. Thanks very much for tuning in, but stay with us. More news and updates will continue right here on CNBC-TV18 after this short break.
Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. E-commerce platform Meesho's anchor book sees robust demand. Money Control reports the book was subscribed over 32 times, led by SBI Mutual Fund, Tiger Global and BlackRock. The IPO opens for retail investors tomorrow. Swiggy plans to raise over $1 billion via QIP. Bloomberg says the quick commerce giant shortlists 3 bankers to manage the share sale. PropTech startup Modulus Housing raises 70 crore rupees in its Series A round, led by Kalari Capital, Hero and Samarthya. Company claims to run a profitable business with cumulative revenue of more than 200 crore rupees. Jewelry brand Queen raises an additional 1,000 crore rupees. The company gears up to launch India's first experiential stores in Bengaluru and Delhi by February. Razorpay secures cross-border license from the Reserve Bank. Move allows company to handle inward and outward international payments. Bitcoin suffers the biggest single-day decline in 7 months as the sell-off intensifies. All cryptocurrencies under pressure as investors fret over a new crypto winter. Bitcoin is down 30% from the record high in October. Well, those were the headlines we've been tracking for you this evening on What's Brewing. FinFactor, the parent company of FinView account aggregator, has raised $15 million in a Series A round led by Westbridge Capital with participation from Varanium, DMI Sparkle and IIFL FinTech Fund. Now, FinView AA now serves over 50 million consumers, powering real-time, consent-based data sharing for banks, insurers, brokers and wealth managers. FinFactor also works with over 150 BFSI clients through its AI-driven analytics suite. The fresh capital will be used to scale products, deepen India's stack-powered open finance capabilities and build a full-stack technology layer for financial institutions. To tell us how the AA framework is reshaping India's digital finance, I'm joined by Munish Bhatia, the co-founder of FinFactor, and Vamsi Madhav, the CEO at FinView AA. Gentlemen, welcome to Startup Street. Munish, if you could let me start with you first. What does this capital unlock for FinFactor at this stage of India's open finance evolution? How does this round really help you scale products and, of course, expand teams? What are the top 3 capabilities that you're prioritizing right now?
Yeah, thanks, CNBC. So actually, this capital allows us to focus on servicing our customers better. I think we can build products to solving more specific problems and use cases aligned, in the industry aligned to usage of open finance and, mainly built on the A rails. As the usage of A further increases in the ecosystem. So basically, we are looking to expand our product capabilities in lending, wealth solutions, go deeper in these areas, and then also look at other adjacent solutions.
Sure. Let me go across to Vamsi now. Vamsi, FinView AA is a RBI licensed account aggregator. It has already served over 50 million consumers, like I mentioned earlier. What were the biggest unlocks that helped you reach this scale? Account aggregators were once considered early stage infrastructure. Today, they are mainstream. Vamsi, what's driving this shift? Policy, customer behavior, or partnerships?
Thank you, Shruti, for having us on the show. I think customer behavior has obviously been central. The ecosystem went live 4 years ago, and I remember in the very first 2 weeks, we were all surprised by the Indian financial consumers' adoption of something digital like this. And I think in large part, that's thanks to Aadhaar and UPI having sort of greased the rails for us. So that's helped us a lot. And I think the customer behavior has really taken up because customers have seen the power of convenience in terms of how easily they can give consent for data sharing and agency. And that has led to lenders and wealth managers adopting it really at scale. But I think the biggest unlock for us has been policy, whether it is RBI and the government and Saramati, the industry body, really bringing the public sector banks within 1 year of go live, and then SEBI bringing in the AMCs and the RTAs. That's really helped us. And FinView, being one of the earliest players, has done its own business development effort to use these unlocks. So that's really what has helped us scale so far.
Also, Vamsi, the AA ecosystem is maturing fast. We've got multiple licensed players. So tell us what differentiates FinView AA today, technology, security, reliability or scale. And given the volume of sensitive data flowing through the platform, what safeguards do you have in place?
Shruti, our differentiator clearly is reliability.
Okay.
We run a highly engineering-heavy system. We provide reliable success rates to our technology partners. We provide very reliable user experience for our consumers, and we provide very reliable guardrails to prevent misuse. In fact, we're one of the first AAs to offer something called Consent Guard, which is essentially, to put it simply, a way for end users to not be presented with unreasonable consent requests. And we in fact ended up open sourcing that. It's up on Saramati's repository as a way to foster governance. So I think in terms of safeguards, one of the things for us to understand is we are really blind to the financial data. The way the technical architecture is that if your data is going through us, it is encrypted from your bank and it gets decrypted only on the destination. So really the footprint of risk through us is very, very little. But we are an RBI regulated entity, so we get regularly audited for all measures. So we have all state-of-art security measures in place.
All right, coming back to you, Manish, the Fin Factor today offers a multi-AA gateway, bank statement analyzer. You've got loan monitoring tools and wealth tech capabilities. Across your 150 plus BFSI clients, which products are seeing the strongest demand right now?
Yeah, so we've found a good product market fit for a multi-gateway, a bank statement analysis, and our wealth solution. And we have a good, strong pipeline of customers looking for solutions built on the A rails, because most of the solutions are primarily based built on the A rails. But we are also co-building solutions with our partners and our existing customers for newer use cases. As the ecosystem evolves and moves forward further, as it scales up further. So a lot of work already there in the pipeline.
All right. Vamsi, account aggregators are being called the final building block of India's stack. In fact, your investor, Wedgebridge Capital, also quoted that. From your vantage point, what does open finance at scale look like over the next 3 to 5 years?
So we took 4 years to reach 50 million Indians so far. And I think over the next 3 to 5 years, these building blocks of India's stack will be deployed in newer form factors. We're very excited about voice being one of those form factors. Newer contexts, such as assisted and phygital modes, not just do it yourself. And I think if you look at where this will go in 3 to 5 years, be it a woman who's currently a self-help group member, becoming finally an individual recipient of a financial service, and therefore financial inclusion for retail consumers sort of going down that path, or cash flow lending for MSMEs really becoming a reality. I think we will really see 500 million Indians in the next 3 to 5 years being touched by open finance. And these will be the classic use cases that we think will become reality.
All right. Going back to your tech, and Munish, let me get you in. How deeply is AI embedded in your analytics suite, from underwriting to post-dispersal monitoring? Also at the consumer level, AA is transforming how Indians control and share their financial data. So what still limits mass adoption, and how do you plan to fix it?
Yeah, so the heart of our analytics is basically transaction categorization, which is essentially identifying patterns as to how customers interact with money and finance. So we've built in-house models trained specifically for this. And this essentially helps, lenders, wealth managers to make better decisions, more accurate decisions in either in underwriting, collections, advisory, or any other use cases. It could be within insurance or some that Vamsi mentioned on cash flow analysis. But if you look at the ecosystem, last 4 years has grown significantly with over 800 participants. There are 300 million consents that are now been fulfilled, and we're seeing a 15% growth month on month, which is quite significant growth since the last 1 or 2 years as well. So we feel that with better overall robust infrastructure and network, and of course wider awareness of the AI ecosystem will definitely help scale up and increase adoption. And we are closely working with all of the ecosystem partners as well to solve for this.
All right, so picking up from what Munish just said on that very positive note, Vamsi, what's the one breakthrough, whether it's technology, regulation, or adoption that will shape the next phase of India's open finance ecosystem, according to you?
We are a technology company, so we obviously bet very heavily on trends in technology, and we think technology will naturally drive adoption. But I think the one bet that I would place on this really unlocking us is regulation. We're very excited about, AI regulation, particularly RBI's free AI report and the Ministry of Electronics and IT's AI governance framework. And I think what we will really see is that the Indian concept of data empowerment and protection will be spurred through a wholehearted adoption of AI. So for us, AA to the power of AI, Shruti, is really the breakthrough that we're hoping for.
Well, and on that note, it's time for me to wrap up this conversation. Munish and Vamsi, both, many thanks for joining us on Startup Street today, and wish you the very best with all your growth plans.
Yeah, thanks. Thanks. Yeah.
Moving on. On the hot seat today, Bengaluru-based EV OEM 3EV Industries has closed a 120 crore rupee Series A round led by Mahanagar Gas Limited, marking MGL's first strategic bet in the electric mobility space. Now, with this funding, 3EV plans to scale manufacturing, expand its charging and aftermarket network through its new 3C division and accelerate R&D across regenerative braking and advanced materials to solar-enabled cold chain EVs. Now, the company has nearly doubled vehicle sales in FY25 and is targeting positive EBITDA next year. And to break down the deal, the tech and the road ahead, joining me now is Peter Wokner, MD of 3EV Industries. Peter, welcome to Startup Street. Like I mentioned, Mahanagar Gas Limited has made its first strategic bet in electric mobility with 3EV. What does their backing mean for your long-term roadmap? Does this investment open the door to deeper gas-to-electric energy partnerships with MGL, especially around charging infrastructure?
Yes. Well, first of all, thank you very much for inviting me today, and good morning to you. The support and the investment from Mahanagar Gas MGL in 3EV Industries as the lead investor in our Series A is a terrific validation of all the work that we've done and the business model that we pursued from day one to provide sort of a full turnkey offering for EV mobility in the three-wheeler space, the category L5 space. So the support of Mahanagar Gas is not purely financial. There are very strong strategic synergies between what is a very mature, financially strong business at MGL and, of course, more of an emerging growth-oriented business at 3EV Industries. It does help us to scale our manufacturing, although we do have already substantial manufacturing assets in Bangalore. We're in Dodbalapur on the north side of Bangalore, as you mentioned. But very importantly, our 3C aftermarket division will also benefit not only from the financial support, but also from the strategic alignment.
You know, picking up, Peter, from what you just said, tell us or elaborate on what does the Series A fundraise unlock for you across, manufacturing, charging, and aftermarket services?
We're currently serving customers in 5 cities today in our aftermarket. That's where our customers and our installed base of vehicles that we manufacture are located. We need to deepen our resource availability in those 5 cities. That's Mumbai, Bangalore, Chennai, Coimbatore, and Hyderabad. So we first want to fully build out our aftermarket resources from charging, which is full turnkey battery solutions from swapping to fast charging through our partnership with Exponent Energy, which is a very novel technology-driven fast charging business, and then Neuron on the battery swapping technology with LFPs. But even more so, building out our care capabilities, which is the second C in 3C. It's charging, care, and conversions. That is what's going to support a larger base of vehicles and customers in our markets to ensure that uptime. Again, we are in the B2B space. All of our customers are commercial enterprises.
Yes.
Nobody's driving their children to school in our vehicles. They're there for work. And uptime is a critical variable, and it's a critical KPI that our customers rely upon.
Yes. You know, Peter, you've called the Series A as the catalyst for your new 3C division you just mentioned. So tell us, what does charging, care, and conversions encompass, and why is it central to last mile electrification? Also, how soon can we really expect a scale rollout of the 3C network across major cities?
Yes. Well, I mean, EV mobility is still in its early stages, both in India as well as globally.
Okay.
So the maturity and depth of resources in the market is still at an early stage where availability of aftermarket support, if the vehicle encounters some maintenance or service requirements, or battery access for recharging or swapping availability, still remain limited in the marketplace. 3EV set out to build a full partner ecosystem so that we could give all of the different elements required to operate these vehicles. We were always focused on what is the end user requirement and how do we provide an envelope of security and reliability to promote that. It is only that end customer that supplies the revenue that feeds everyone in the supply chain, from the fleet owner, the vehicle owner, to the OEM, all to the parts vendors and suppliers that we work with at 3EV Industries. So we wanted to make sure that we were giving a very strong and clear value proposition to that end user. That means that providing those 3C services was a critical commercial a leverage point for us from day one.
Okay.
The investment of Mahanagar Gas allows us to strengthen that, where we've moved over the last 5 years since we were created, last 5-6 years, from technical proof of concept, where we wanted to build a robust vehicle. We essentially wanted to max out what was allowable under the rules for category L5 EVs. We then wanted to understand the premium commercial engagements that electric vehicles were suitable for in this heavy duty format, and then create an ecosystem of support around them so that our end users, our customers, could have that reliability. Again, at an early stage in the market.
Yeah, Peter, you have nearly doubled vehicle sales from 438 units in FY24 to 834 projected in FY25. What's driving this surge, if you could quickly tell us?
Yes, sure. These are still very small numbers. I mean, there are lakhs and lakhs of three-wheelers out there, and we talk about commercial vehicles. There are also lakhs of those on a four-wheeler format, light-duty commercial vehicles. So the numbers are small. We're a humble company, but we understand the enormous opportunity to scale from here. What we don't do is we don't build to fill a channel. We don't fill a dealership channel. We build to end user demand. So that's what's really been driving this.
Okay.
Large enterprises, e-commerce companies, fleet operators serving those larger enterprises seeking EV mobility due to its greater productivity and greater efficiency.
Sure. Let's talk about revenues, Peter. Revenues have jumped 3x to 54.7 crore rupees in FY25. You're targeting 65 crore rupees and positive EBITDA by FY26. What's the execution roadmap to hit these numbers?
Sure. Driving towards profitability really was sort of a key mandate for us as a company. Obviously, revenue growth is important, and we see enormous scope to scale our business in terms of the top line going forward, given the size of the marketplace. But to be a healthy company, we needed to drive towards profitability. Our manufacturing division is already EBITDA positive and will be driving towards profitability. We have positive gross margins. We have positive contribution margins through operations. That business is on track as we scale our deliveries. In terms of 3C, that is a recurring revenue base that is driven by the installed base of vehicles. And we are now not only supporting the vehicles manufactured by 3EV, but also third-party OEM vehicles where we are providing battery and care services for those vehicles. So as that installed base of vehicles continues to expand, we will be achieving EBITDA positivity this year and profitability the year after.
All right. Peter, you're doubling down on R&D from regenerative braking and advanced materials to solar-enabled cold chain EVs. Which of these innovations will hit the market first?
Well, in terms of from our point of view, cold chain is a unique and technically challenging requirement that our customers have expressed to us. That's because of the energy scarcity on an electric vehicle. It has to be very efficient. So the weight and the energy consumption of a condenser and active cooling device is not compatible with a three-wheeled electric vehicle. We have a passive solution that we've tested over the past year that has proven very successful in the marketplace. It's not just about the vehicle, however. The cold chain vehicle that we've developed also relies on infrastructure investments in charging as well as cooling with reliability through gensets at our charging hubs. So those investments are also being unlocked now with the Series A funding, and we'll be rolling that out.
All right. Peter, what's the one breakthrough technology or policy that you believe will redefine electric three-wheelers in India over the next 5 years?
I think when we look forward in the next 5 years, the things that we can anticipate, it's hard to pinpoint exactly what is going to be the leverage point. But certainly from my point of view, solid-state battery technologies being introduced in larger formats that will support EV mobility, three-wheelers, four-wheelers, that's going to be a major breakthrough. I think in terms of power electronics, driving down the cost and availability of power electronics, particularly in terms of supercapacitors, so that higher efficiency regenerative braking regenerative braking is out there, but it's about driving us from, sub 10% efficiency, maybe mid-teens efficiency that we're seeing in the market today to 20, 30, 40%. When we talk about lower speed vehicles that are stop and go, like category L5 three-wheelers, they are perfectly suited for very high efficiency regen braking. What I see in the next 5 years is that, range anxiety is not going to be a concern in the EV space. And that's really going to be driven by breakthroughs in solid state batteries, power electronics. And actually, when we look further into the future, I think electricity as a resource, especially when we compare it to, fossil fuels, it's going to be a socialized resource.
Absolutely.
And when we think about electric availability, it's no longer going to be a constraint on mobility and other types of things. And we already see it today. When you're charging your mobile phone, nobody's asking you to dip into your pocket and pay for it. It's already socialized, it's available.
Well, we're pressed for time, Peter. I'll have to wrap up this conversation, but many thanks for joining us on Startup Street and wish you the very best with all your growth plans.
Thank you so much. It's been my pleasure.
Well, on that note, it's time for us to slip into a short break. But coming up next, Swiggy and Kearney's How India Eats 2025 report outlines the major shift in India's consumption patterns, projecting the country's food market to touch $125 billion in 5 years. We speak to the Swiggy's food marketplace CEO to understand on the key insights. Stay tuned. Welcome back to Startup Street. From a $125 billion food market to a sharp rise in regional cuisine and late-night eating, the new How India Eats 2025 report by Swiggy and Kearney captures major shifts in India's consumption patterns. What does it signal for Swiggy's growth and profitability path? Rohit Kapoor, CEO of Swiggy's food marketplace, speaks to Aishwarya Anand about the trends shaping India's food economy. Take a look.
Rohit, the new How India Eats 2025 report paints a fascinating picture of India's food evolution. So if you had to summarize the biggest behavioral shift India is undergoing in food consumption, what would that be?
So I'll say 2 or 3 things. One is, and which are new things. See, some of the things like biryani being large and all has been always been spoken about, but 2 or 3 very interesting things. One is that India is really experimenting with food. So right, whether it is parts of India which is looking at international cuisine, or the revival of regional cuisine, and some of that like Pahadi food, Bihari food, Bengali food. This is all becoming a lot more mainstream, right? And growing, which is number one. Number two is in beverages, we are seeing tea, coffee grow, but we're equally seeing, the traditional beverages of India go much more mainstream. And the third I'll say is that dining out, even in smaller towns, is becoming much more accelerated than the top 100 towns. Right? Top 100 is always there, but there are more choices there, I guess. The supply is coming in of restaurants. So we are seeing that happen. But still, I think India needs many, many more restaurants than they exist today.
Okay. So now the report has projected that Indian food services market is supposed to hit $120 to $125 billion by 2030. So where does Swiggy see the biggest headroom for growth? Is it metros, dine out, or delivery?
All. I think unfortunately that's a boring answer, but that's the right answer, because delivery will continue to grow. We have given a guidance of 18 to 20% year-on-year GOV growth there. That we are sticking to that. We are seeing dining is still a very large market. I think what is happening is the digital access to dining out, which is to our dine out product, that we are seeing very robust growth.
Correct.
Right?
Correct.
And that will continue to. I think that's one business I think will surprise.
Since you mentioned dining out, it is accelerating 2x in non-metros. So I want to understand, how will dine out contribute to Swiggy's overall GMV, and can offline dining actually become a meaningful revenue line for you guys?
So I think, look, we disclose the numbers. I think it's already quarterly 1,000 crore plus kind of a GOV number, right?
Correct.
Food is still much larger, right? For food we do 8,500 crore GOV per quarter. So, but overall, dine out as a business is quite large.
And the bold format, which is accounting for 10% of all your food orders today, how big a piece of the future pie do you see bold style ordering to take?
It will continue to be very relevant, because see, I think not all of the food delivery can come onto bold, because for example, if you're a fine dining restaurant, you're making biryani, right, which is a little more sort of involved process, it won't come on bold, because frankly the cooking time itself is much higher. But there is a bunch of, so on two sides, if you think there's on the restaurant side, there's a bunch of SKUs which are almost ready.
Correct.
So if you go to a mithai shop, let's say, the dhokla is ready, the samosa is ready on the counter, right? Coffee can be easily taken out of a machine today in like less than 2 minutes, less than 1 minute, right?
Correct.
So there is supply which is very ready for bold, and there are consumer use cases. I'll give you a simple example. Let's say you're leaving for office in the morning, right? And you have that 20 minutes before you leave, and you just want to eat something. That time, I think a service like bold really works.
Correct.
Or you're on office lunch, you just have half an hour in between meetings. Bold really helps because it comes, you have it quickly and you move. So the use cases are very consumer forward.
Rohit, one final question. Now, Swiggy Food has seen both acceleration and slowdown phases, in the past few years. So what does demand today look like? And are order volumes and frequency stabilizing, or are you seeing macro pressure?
So last quarter, and we released our earnings statement sometime a month back, was our highest MTU growth quarter in last eight quarters.
Yeah.
Right? So there is ebb and flow, it happened, but overall we continue to maintain our guidance of 18 to 20% GOV growth in the medium term, with a EBITDA guidance of about 5% from where we are today, right, going there. I don't think anything changes there in terms of external conditions or internal things which tell me that it's going to be anything much different from there. Right now we are holding on to the guidance.
Okay, and by when do we expect Instamart to turn profitable?
We have guided for a contribution margin break-even in June of next year.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned to CNBC TV 18.
Welcome to the CNBC-TV18 Citizens Monetary Policy discussions. The upcoming RBI policy has become a deeply divided debate after the second quarter GDP growth came in at a strong 8.2%. Yes, the governor said Reserve Bank has space to support growth, but is there a need to support growth has become the new question. Joining me are Citizens MPC members, Soumyakanti Ghosh of SBI, Samiran Chakrabarti of Citi, Sonal Verma of Nomura, JP Morgan's Sajid Chinoy, and our chairman, Dr. Pranab Sen, the former chief statistician of the country. Gentlemen and Sonal, thank you very much indeed for your time. Actually, let me start with the lady. Sonal, 8.2% growth. How can you justify a need for a rate cut? Will that pull back the MPC's hand?
Yeah, Lata, I mean, clearly it's a tight decision this time around. I think taken at face value, the 8.2 and for FY26, where we are now tracking closer to 7.5, does not suggest there is a need. I think we need to sort of dig a bit deeper, though, and a more nuanced analysis in terms of to what extent do we take these 8+ readings on GDP at face value? What is the role of low deflators in actually accelerating the real growth? Do we think that the output gap in India has turned positive based on the broader swath of economic data, including the credit gap, current account gap, momentum in core inflation, etc.? And I think the forward-looking view as well, I mean, as the deflator is going to drop even further into the negative territory in Q3, and that will again hold up real GDP in the next quarter. So we'll be having the same debate 2 months later. And therefore, I think, the forward outlook in terms of do we think steady state growth has stabilized in the 7.5 to 8% range? If not, if growth is going to revert back to 6.5, 7%, then the output gap is not significantly positive. So I think at face value, yes, there isn't a need, but I think we need a deeper analysis and discussion on the nominal growth slowdown and whether we think output gap has turned positive. Our view is it is not positive, and the deflators are exaggerating the real increase.
Okay. Sajid Chinoy, if you have joined us, a similar question to you actually. Is there not increasing conviction, at least for the last 3 or 4 quarters, GDP is coming higher than market estimates. So maybe we are in a higher potential growth. Or do you think this is a one-off blip because of the low WPI and we will revert back to 6% and growth needs help?
Well, Lata, good morning. I'm not even sure we need to go into those assessments when deciding what the RBI should do. What is the RBI's mandate? The primary mandate here is to keep inflation close to 4%, right? While keeping an eye on growth or while supporting growth. But it's very clear that the primary mandate is on inflation. And, 10 years into an inflation targeting framework, it's very important from a credibility perspective to implement the mandate symmetrically. If overall headline inflation was tracking 6%, which is the upper end of the RBI's corridor, most analysts would say the RBI needs to hike rates here. This year, overall inflation, even if before the GST cuts kicked in, was running about 2.2 or 2.3%. If you look at underlying inflation, which is to look at core inflation, correctly adjusted for gold prices and fuel prices, that's been running at less than 3% for a year. So if your primary mandate is to keep inflation close to 4, inflation is currently at 2%, underlying inflation is running at 3%, suggesting that there is still slack in the economy, it's very clear to me that, the decision is clear that you need at this point to cut rates to maintain the primacy of your mandate. Judgments about, output gap are harder to make, but if underlying core inflation is running at 3%, that still tells you there's slack in the economy. And so the RBI needs to be supportive of that at this point in time. So I think taking a more puritanical view of the inflation targeting framework, which I think is the right thing to do at this point in time, avoids, some of the questions that Sonal raised.
Okay. No, I agree. But, the RBI has not been all that symmetrical. During COVID times, even when inflation was above 6%, they did not hike with good reason. So, I mean, there have been exceptions to the rule, but we will leave that to the official MPC. Let me get to Soumya. Shaubhya, the RBI also looks at forward inflation. And that, given the low base, may be close to 4% or even higher. So do you think we can run away, assume a rate cut simply because the last number was 0.25%?
No, I think we are living in a world of uncertainty, and a new uncertainty is the GDP, strong GDP growth, which has now become a certainty. So my sense is that I think let's dissect it into the following points. The first thing to note is that I think inflation, forward guidance of inflation in a situation when there is significant uncertainty is always very difficult to give. I think we started the year, the central bank started the year with an inflation forecast of 4% in April. It went down to 3.7, 3.1, and now there is 2.6. Now there is every possibility that the final inflation number could be closer to 2%. Next year, we have started with 4.9. We are now at 4.5, but with the new CPI base and given the current inflationary trends, I think I will not be surprised if it runs decisively below 4% also for the next year when the MPR report is published in April. So having said all this, I think so the 1 year forward guidance at this point of time, looking into it and making, even though that's actually the mandate of an inflation targeting central bank, is very difficult to make.
Okay.
So my sense is that while I agree with the point that inflation is going to undershoot significantly, but you also have to admit that growth has been strong. Last year, we were having a debate that why the GDP is so high from the GVA. That was because of indirect tax collection. This year, we are having a debate that whether the GDP is high because of deflator. Whichever way we can argue, we need to understand that the GDP growth has continued to be strong. We can also look into the arguments in terms of a glass half full. For example, the nominal GDP growth rate could have been higher and the GDP growth would have been lower, but that's not been the case. So we need to take a sacrosanct view. Yes, inflation will significantly undershot, but at the same point of time, in a world of uncertainty, you have to keep the gunpowder in your arsenal over a longer period of time, and there is no harm if the rate cut cycle or the stance of the central bank remains in this current mode, at least in the near future. Because what is important is the understanding of the current scenario in terms of growth inflation trade-off.
Okay. So I'm smelling the first person who's not going to vote for a rate cut, but we will wait. Let's get to the other big issue, Samiran Chakrabarti, on the trade data and the BOP. Will that be a worry that we have deficits both in the current, rising current account deficit and persistent capital account deficits? Will that be a worry for the Reserve Bank?
Thanks, Lata. I guess from the October policy to the December policy, if I have to find out one factor which has changed really rapidly, that has been our expectation about the balance of payment deficit. We were thinking that there's a possibility that this October-December quarter could actually turn out to be much better for BOP, but whatever we are tracking, this quarter could be somewhere around $15-20 billion of BOP deficit again. And that would mean that for the first time ever after at least 1991, that India is going to have 2 consecutive years of BOP deficit. And that's something which at different levels would feed into the policy decision also in our view. And it's 2 ways. One is obviously in a BOP deficit situation, you would want some amount of interest-sensitive flows to come to the country. And to that extent, there is lesser need for rate cuts. And second is that this BOP deficit feeds into INR liquidity and in turn feeds into bank deposits. We are already seeing banks' credit deposit ratio reaching all-time highs. At this juncture, further rate cuts could worsen that pressure on the credit deposit ratio. And to that extent, also, there could be an argument for RBI to wait out till hopefully by the 4th quarter of the fiscal, we start seeing the BOP start improving. Then maybe it's a better time to consider the rate cut.
Fair enough. But some may argue that this problem should be better addressed with liquidity, but I will come to that in a bit. Dr. Sen, as the former chief statistician and a person who has seen many cycles of deflator surprising us, what would your advice be to the Reserve Bank about the quality of growth and whether it needs help?
Well, this is an important question, Lata. The fact of the matter is that as the current system stands, our estimates of nominal GDP are far more accurate than our estimates of real GDP.
Oh.
The nominal GDP are really current data. But then you're using price deflators which have been outdated by many, many years. And then it gives naturally a rise to a suspicion that too much is being driven by the prices. The nominal data is tracking weak, but prices are tracking even weaker, which is giving you high real. Now, so the whole question is going to be not so much as to what your expectation of inflation is, but the extent to which the MPC actually trusts the price data.
Oh.
Is the price data telling me the truth and nothing but the truth? So far as agriculture is concerned, the worries on that count are less. But insofar as everything else is concerned, whether it's the CPI or WPI, I think there are grounds for serious concern.
Oh, okay. So it looks like you're going to advise caution, sir, but why don't we put it to vote? We'll take one vote now and then take a second vote at the end of the second half of the discussion. So the first question I'm going to pose to my guests is obvious. What will the MPC do to interest rates, repo rate, on December 5th in the policy? Let me start with you, Sajid. What do you think they'll do?
A 25 basis point cut.
Thanks, Samiran.
A pause.
Pause. Okay. Already there's disagreement. Sonal?
25 basis point cut.
2 cuts and 1 pause. Saumyo?
We are going for a pause.
2 cuts, 2 pause. Chairman, casting vote, sir?
Pause.
Pause. Okay. So our Citizens MPC is going with a no-cut expectation for December 5th, but it is a close vote. Let's take a break. We will continue our conversation and ask the more serious questions on liquidity, global impulses, and what will be the next steps in monetary policy coming up after the break. Welcome back to the CNBC-TV18 Citizens Monetary Policy Committee deliberations. The committee has just voted with very narrowly for a pause policy, for a no-cut policy. But we have to discuss many more dimensions, most of the important of them all being liquidity in the markets. Of course, I have with me Samiran Chakrabarti, Soumika Ghosh, Sajid Chinoy, Sonal Verma, and our chairman, Pranab Sen. Samiran, the liquidity question is to you. You said that, the outflow of dollars on capital and current account has created a tightness. Is not this crying for more liquidity steps rather than rate steps? What steps are you expecting?
Yeah, obviously, right now we are in the process of seeing what the last phase of the CRR cut, which just happened, that will probably boost the system liquidity in the short term. The month-end banking system liquidity is not terribly tight at this moment, but we know that as we move into the fourth quarter of the fiscal, because of seasonal reasons, the liquidity will get even tighter. So obviously, RBI will have to guide that they are comfortable providing that liquidity. And clearly, OMO is one of the instruments to do it. The debate is that whether it's too early on December 5th to signal OMO. In our view, it's probably better for RBI to just acknowledge that in the secondary market, the OMOs that they have already done, that was a conscious policy choice and not just a random event. And through that, try to signal that if there is a need for OMO, then RBI will be open to doing that at some point of time in late December or early January. The bigger question that I was raising was not so much about the system liquidity, but simply the pressure on the bank deposits.
Okay.
We think that that's the place which gets really impacted by a persistent BOP deficit. And that's why to cut rates now when the small savings rates are unchanged could create a distortion in the system, which could be putting pressure on the overall credit growth. The banks might be constrained on that, so the transmission could get impacted because of that.
Oh, yes, that's a fair point. And that perhaps also was the reason why the Reserve Bank in earlier times also did not cut, because the transmission could be impacted. On the liquidity front, Soumya, what is your sense in terms of how much OMOs the market is expecting or ought to be done?
Yeah, thank you, Lata. I think regarding the liquidity front, I think the important point to note is that I think the communication to the market. So basically, the central bank has been doing an assiduously and a delicate job in balancing the liquidity, but the issue is basically also short-term liquidity and long-term liquidity. So basically, the question between friction, the temporary and permanent. So the issue of basically how much OMO the RBI needs to do will depend on how much durable liquidity. The RBI can keep that question open. The market expectation is that if the central bank is targeting 1% of NDTL surplus, the OMO operation could be around 1.5 trillion or so. But having said that, I think the more important point is that signaling to the market that the central bank will going to be continuously supporting the liquidity, because at some points of time, when you are doing a liquidity withdrawal through a short-term mechanism and a liquidity injection through the secondary market OMO, the market actually could think otherwise, that there is both the policies are at play, withdrawal and injection. So the central bank needs to clearly communicate that what is the purpose of doing an OMO and what is the purpose of doing an reverse repo operation or so on. So I think that is the market is looking into, and like any other policy, a signaling to the market in terms of maintaining adequate liquidity buffer for any unforeseen circumstances will actually have a very good impact on the market in terms of an impact on the GSEC needs.
Oh, yes, communication really important. And I'll ask that questions to the other members as well. But before we get to the stands and the communication part, Sajid, just highlight to us what is the global environs. I mean, isn't there a big Asian disinflation, so inflation will continue to be low? What should the RBI keep in mind?
Good point, Lata. 2-3 important points, I think. Number one, that, while on the surface things may look very stable globally, There are lots of uncertainties below the surface. Yes, US growth is tracking 2% this year, but you've never seen this kind of divergence between capex and growth and the job market. The job market has virtually come to a stall. And so I think the US economy faces an important resilience test the next 3 months, because you've got a situation where labor incomes have slowed. The impact of the tariffs is building every single month. So core inflation is going to keep creeping up till March. And in an environment where job growth has slowed, labor incomes have slowed, and there's a purchasing power squeeze that's building in the next 3-4 months for US households, will the US household bend or will the US household break? That's an important known unknown, number one. Number two, a lot of growth around the world in the US is being driven by AI. Concerns that this is a rising bubble and could unwind sharply in the coming months is uncertainty number two. Uncertainty number three, as you said, is China has been redirecting its exports to all parts of the world. So even though US inflation may be high, remember Asian inflation is going to be, in our mind, structurally much lower, in this world. So I think there are a host of global uncertainties, which means central banks around the world can't be complacent that all is well in the world. We touched upon the fact that there are uncertainties on India's GDP print. Some of this is deflator, some of this is favorable base effects early in the year, some of this is fiscal front loading. So there are a lot of uncertainties, which is why if inflation is so low, you want to provide some insurance to your economy in this moment. We think the Fed's going to cut in December as an insurance cut. And I think that's why, given the weakness of inflation and the quantum of uncertainty all pointing in one direction, that's why I think it'll be prudent for the RBI to provide another insurance cut this month.
Okay. Sona Verma, the stance is going to be neutral and nobody's expecting a change there. What kind of guidance should they give or will they give?
Yeah, Lata, I think it all boils down to communication at this meeting, because regionally, what we've seen with central banks that have been on hold or those that have cut, I think the broad market view is central banks are moving towards the end of the easing cycle. And therefore, even where central banks have delivered cuts like New Zealand, we've seen actually market interest rates go up. So managing the expectations channel of monetary policy will be important, as we've seen with India's own history, where with a 50 basis point cut in June, rates sold off, and the October pause dovish actually led to a positive impulse.
Yes.
So I think, in terms of what the RBI communicates, therefore, I think from an inflation point of view, we actually see inflation staying below the 4% for the next at least 9 months. And this is despite base effects. Okay. So I think the comfort on inflation is substantial. And therefore, the guidance, given our view of a rate cut, I think should still be one of independence, and the monetary policy will do what it needs to do, because we need the transmission, whether it's through the bank lending channel or through the market expectations channel, to continue rather than unwind, as we are seeing is the risk regionally.
Okay, so you are arguing like your vote also was for a cut. So RBI can communicate dovishness. Dr. Sen, what would your advice be? Ultimately, it depends on communication. What would you do in their shoes?
Well, this is a bit of a problem. I mean, frankly, if I were in the RBI's position, I would be feeling distinctly uncomfortable. At the moment, what do I communicate? I think a lot of the communication is going to have to be about saying that we are not behind the curve.
Okay.
We are, in fact, ahead of it. And that's going to be a little difficult to do. Because, frankly, at least on the liquidity front, I think RBI has dallied much too long. M0 growth has fallen rapidly. M3 is rising. But if you look at the figures that we've been looking at, agricultural food prices are down seriously, which seems to suggest that currency is in short supply. And that is something that we need to keep our eyes on. Okay. And I don't think RBI is going to explain what they're doing on the liquidity front.
Okay.
Up to now, their only communication on the liquidity front has been the CRR cuts.
Yeah.
But they've kept their mouths absolutely shut about what's happening to base money.
No,
I think
agree.
it's about time they came out and said something about it.
Yeah, I know the liquidity was an issue a year ago, but now they seemed proactive with, as you said, CRR and a lot of liquidity infusion. The point is
Only
that
at the Q3.
yes, but the liquidity has also been withdrawn in a huge way because of BOP. So, I mean, the RBI is in a quandary as to how much it will communicate. Okay, what is your view, therefore, members of my MPC, Citizens MPC? How many more cuts are there in this cycle, including December 5th? Sajid?
Just one cut, 25 basis points, including December.
Okay, Saumyo?
Yeah, just one cut. We are keeping the option open of an insurance cut in the future if it happens.
Okay, Sonal?
50 basis point.
Oh, 2 cuts. Already there's a dissent here. Samiran?
I don't think there is any further rate cut in this cycle.
Oh, that's even more divided. 0, 1 and 2. Dr. Sen, Chairman?
I agree with Samiran. I don't think there'll be any further rate cuts on this side.
All right. So this is a divided house, and with good reason, because the data is confusing. On this note, let's wrap up on this edition of the Citizens MPC deliberations.